Alrighty. Are we live? Wait for it. Wait for it. Up, where is it? There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream a Large Boot Camp and real estate costs. But ladies and gentlemen, welcome to the day. It is Jerome Powell. We have him at 2 p.m. and 2:30 for the press conference. There's a lot on the table. You already got data in the morning. Employment cost index, that was actually pretty good. Market liked it a little bit. I'm very surprised you got a curveball from the Treasury. They ended up raising the issuances, kept it the same in one area, but it's about the same thing that we got in November, but nobody is freaking out too much. We are a little bit lower, and if we are trading lower, though, it was a result of pretty lackluster earnings, or the bar was set very, very high for the earnings. So everybody's still debating Powell. We got a little bit of juggling to do, not much data in between, but today is going to be a very big day, and we are going to have to deal with a lot. And I saw you, baby. NYCB was. So what happened to you? Even got a regional bank. They're getting murked right now, and they're the ones, I believe they bought Signature, but they reported a way higher credit loss. So they had provisions for credit loss around $25 million, and they came out this quarter and said it shot up to $189 million, and then they cut their dividend by like 70 or 80%. So, yeah, you got a little bit of trouble in paradise. We'll see how that ends up playing out. But Chattadonia, besides that, we got a lot to deal with in earnings land, but it is all about Powell. I have a bunch of updates. We're going to go over previews. And if you didn't watch yesterday's watch list, you might as well get ahead right now and make sure you know this secret. But, Chad, it's going to be a good one. What's going on, baby? How you living, man? Good morning. What's going on, Axel? How you living, Cyclops, Carl, Mayhem, Matthew, Orman, Smars, Laker, Jay. Oh, good morning. What's up, Monica? Tyler, Najee Wolf, baby, in the house. Good morning, baby. What's up, Ayush, Kurt McGirt, Dan Kingsley, Riley, baby, Najee, Hermes, Christina, Xavier, all showing love in the morning, baby. God bless you, my friend. Let's go. Let's get that coffee ready to go. What's up, Lebowski, Mitch Matsuno, Josh Oxley, Rodney Gibson, Harley Wells, baby. Good morning. Winning loser, Jerry Woods, be like Mike Dinosaur, Alaskan Assassin, Ray Aria, Ray G, Sungrown, Ricardo. Good morning. What's up, Carson, Victor, Zora, Samuel, Chris Leon, baby, Jeffrey Powell. What's going on, my friend? What a name. What a name. Hermes, baby, Dinos, C Money, Neil, Bruno, Dirty Bird, David, Brandon, Corey, the Red Bull, Open Face Sandwich in the house, baby, Kakana. What's up, man? How you living? What's up, Tim Whitman? Battleborn's ready to go. Dirty Bird, David Tello, C. Michael, Chris Flores, Stoper, Tim Gonzalez, Me Nacho, Burlap, David Sart, Hank Blaze, baby, Mike, Travis Johnson, Jamar. Good morning. What's up, baby? How you living, Jesse? What up, Jawan? What up, Theodore? El Trapado, ready to go. Oh my God, I'm already yelling, bro. They already got me yelling. What up, Kev? Oh, Kev Dog in the house? Oh, the doghouse. Oh, my gosh. That's going to be a crazy day. What up, Kev Dog? How you doing, Lionsgate? What up, Brandon Mim, James Samuel, T. Grider, baby, Bank Market, Xavier McCoy. There, we got a lot of Xaviers, baby. What a beautiful name. What up, business? How you living, Dan Viva? What's going on, Tyler? Good morning, Osclim. Good morning, Mr. Trader-Lot, Florida Sloth, Josh Weber, Agent of Chaos. Oh, my gosh, Floor Slayer. Oh, my gosh. Jose Lima. Let's go, baby. Lima Lerma. Stephen V. Sam Timms. Young Blood. Javi Cruz. And Mr. Josh Murray and NG. What up, Awaz? Oh, and San Antonio. Brock Bremer in the house, baby. Let's get it. What about the Twitch? Universe's favorite. Sencal Hustle. Good morning. Feed Me Seamer. Black Bear Gale, baby. Or girl. Sidonian Sasquatch. Hailstone. Don Lido. Lucky J. El Coyote. That's Jones Jacks. JJ Silver. Jimmy Fontana. Mother Liquor. It's Mums. Pingo. Avance, baby. Mr. Big Curly. Charlie in the trade. Good morning, baby. What up, Ryan A? What up, 12 Jimin, baby? How you living? Vasily, Unani, Pickle Pickler, KJ Lemur, baby. Good morning, Blizzy Bean, Avatsk, baby, Ibex, Mr. Belvedere, Sim Race Review, Preforms, 333, Sleazin, Most Dope Andy, Robo Handtech. And I'm gonna have Blazing Bob and Spirit, baby. What's going on? How you living, Ryan? Good morning. What's up, Chalu? How you doing, man? It's a big day, bro. That's it. It's Powell. You realize I was giving you fun facts. It has been 4 Fed. This will be the 4th Fed meeting since they did not raise rates. So again, 2008, they had 9 meetings. 2001, they had 6 meetings. So we either got a little runway or we don't, man. Oh, man, there's a lot. But Chad, that's it. Try to keep me calm, okay? Try to keep me calm. Don't let me go crazy on the voice. You know what I'm saying? Let me. Woosah. But let's get into the news. Let's get it. Are you ready? Bond yields remain lower on Treasury plans and data. Bond yields remain lower after the Treasury increased their quarterly debt sale, but suggested no more boosts are coming. Tech giants weighed on stock futures as earnings failed to live up to high expectations around AI. Just hours away from the Fed decision, a relief from further boosts to auction size for longer-term securities is seen helping support demand for Treasuries. Bonds also gain as a broad gauge of the U.S. labor costs cooled by more than forecast, and data show that U.S. companies added fewer jobs than forecast at the start of the year. The market rallied in the knee-jerk, presumably as a function of passing event risk with the fact that there'll be a final round of increases, said Ben Jeffrey at BMO Capital. Treasury 10 years declined by 2 basis points to 4.01. The dollar was little change. Big tech weighed on futures after Microsoft, Google, and AMD took pains to highlight progress on AI after reporting earnings. NASDAQ 100 dropped about 1%, while the S&P 500 signaled the benchmark will trim its monthly advance. Boeing suspended financial guidance for 2024, sending a message to investors that it's focused squarely on addressing a troubling string of quality slips that culminated in a near catastrophic panel blowout on the 737 MAX earlier this month. MasterCard fourth quarter beat even as operating expenses grew more than analysts expected. Biogen is terminating the main clinical trial of their controversial Alzheimer's drug, Adalimumab, and is returning the rights to the drug to Neuroimmune, the private company that invented it, the pharmaceutical giant said in a statement. NYCB, the regional lender that purchased deposits from Signature last year, reported a surprise loss for the fourth quarter and cut their dividend. Saudi Arabia is considering plans to receive a follow-on offering for Aramco as soon as February in a multi-billion-dollar deal that's likely to rank among the biggest share sales in recent years, according to people familiar with the matter. As far as events today, I mean, it's just all about Powell. Then tomorrow, China manufacturing PMIs on Thursday, Eurozone S&P PMI, CPI, and employment on Thursday, U.S. productivity, construction spending, ISM, and initial jobless claims on Thursday. Then Apple, Amazon, Meta, Deutsche Bank, and BNP Paribas, and the ECB rate decision, actually. So you're going to get Lagarde following up Powell. I want to be like Powell. Okay, anyways. Fed Day. The Federal Reserve's latest policy decision is ahead, with an expectation that it'll hold interest rates and avoid signaling any imminent plans for a first rate cut. The majority of Fed officials have pushed back on the market, betting on a first cut in March, a 40% chance of which is still being priced in. Chair Jerome Powell, who will hold a press conference following the decision, may use that to reiterate the message that while recent declines in inflation are encouraging, there is little urgency to start cutting given ongoing labor strength and robust economic growth. The decision is at 2 p.m. Washington. Bond gyrations. Being a bond trader nowadays means having to put up with more frequent gyrations in the market, something that big investors like PIMCO and BlackRock are happy to deal with. We really like this environment, said Daniel Ivaskin of PIMCO. Traders are heading into a packed week of risk events for bond markets too, with the Fed top of mind, and there has been a ramp up in wagers targeting a bigger sell-off. And for investors who have gorged on treasuries, a pullback in bill supply is coming at just the right time. Big tech disappointment, meaning investor expectations on the growth offered by AI is proving a tough task. Software giant Microsoft, Google owner Alphabet, and chipmaker AMD all fell short of the bonanza required to satisfy. Microsoft's revenue growth was the strongest since 2022, and AI products helped that, but there was hopes for even more given the run in its shares in recent weeks. That took its market value over $3 trillion. Alphabet, meanwhile, was hit by a miss in Google's core search advertising, and AMD's lackluster outlook overshadowed their AI chip prospects. All three are lower pre-market. Elon's pay A Delaware judge has struck down the $55 billion pay package for Elon Musk at Tesla, which had been challenged by a shareholder in the EV maker. The ruling means that the board of Tesla will have to come up with a new proposal for Musk 5 years after he'd been granted the largest executive compensation plan in history. Musk took to social media to express his feelings over the decision. Never incorporate your company in the state of Delaware, he wrote on his X platform. Tesla shares are falling by around 3% in trading. Ba-da-ba-ba-ba. My goodness. What else do we have? We have more. S&P futures are down by 0.4 and NASDAQ down by 0.9 in Wednesday morning trading, though off of pre-market worst levels, comes after U.S. equities finished mostly lower on Tuesday, which involves small caps trailing after rallying to start the week. Logistics, appliances, and oil services, some of the other underperformers. Autos, money center banks, and steel outperform. Treasuries firmer across the curve with the front end outperforming. Dollar index flat. Gold is up by 0.4. Bitcoin futures down by 2.3, and WTI is off by 1.1. Pullback largely chalked up to post-earnings weakness in big tech, and Tesla also down on legal, though noting narrative changing in the takeaways and bigger issues seems to be expectations following the 23 rip and continued outperformance this year. Also some focus on the latest Fed pivot repricing into today's meeting, with March rate cut odds down to about 40 and market pricing in 130 basis points of easing versus the peak of 175. However, resilient macro data suggests that the reset and strategists continue to highlight the importance of recession avoidance from a performance perspective when the Fed enters an easing cycle and when the curve uninverts. The latest Treasury update, quarterly funding is in line with expectations, with auction amounts ratcheting up last quarter's pace. Also noted small value Treasury backups to begin in April. January private payrolls missed. Report said pay gains for job changers was the smallest since May 24th, Q4. ECI a bit weaker than consensus as well. This afternoon brings the FOMC decision at 2 p.m. Street looking for the Fed to remove the tightening bias, highlight data dependency, and leave the door open for a March rate cut, and stress that easing will be gradual, cautious, and mechanical. Big issue for the market is whether Powell explicitly pushes back on some of the aggressive Fed pivot expectations. QT tapering, another key area of interest, though Powell not expected to say much. If he does, that's very bullish. Overseas headline focused on fourth straight month of contraction in China manufacturing and PMI, China policy fine-tuning measures, easing of house purchases and restrictions, and then slower than expected Australian, German, French inflation. Bank of Japan NERP exit discussion in their minutes. Microsoft beat on Azure growth and street positive on margin guidance, though expectations high. Google hit by higher capex and elevated expectations. AMD guided below with takeaways focused on gaming weakness. TMO in line, though street disappointed. Guidance little change from prior commentary. Bank of America, Boeing core EPS and free cash flow beat, but company suspended full year guidance. Starbucks U.S. comp growth cleared lower buy side bar. Mondelez down on volume and mixed signals turn negative and guide light. BSX organic growth of bright spots. Street sees guidance as conservative. CPB on broader revenue and OR. EA down on softer 25 guidance. Skyworks said it's seeing signs Android market is recovering outside of earnings. Tesla down after Delaware court vetoed Musk pay package. Walmart announced 3-for-1 split. Oh, no way. PayPal reportedly cutting 9% of workforce, and Para received a $14 billion takeover. Wow. Not so bad. Australia's CPI for quarter four undershoots consensus at 4.1 versus 4.3. China MBS PMIs are mixed for January, with manufacturer coming in at 49.2, down from 49. Bank of Japan rate hike is getting closer, according to the summary of opinions from last week's meeting. One member said there is a golden opportunity to end negative rates before a Fed and ECB pivot. The yen rose and JGBs edged lower. France's CPI cools by more than expected in January, coming in at 3.1, down from 3.7 and below 3.3 forecast. Iran signaled that it's prepared to hit back against any U.S. strike on its soil or assets abroad, as the White House readies a response to a drone attack that killed 3 American soldiers over the weekend. Paramount soared about 15% pre-market after Byron Allen is said to have offered $14.3 billion for the outstanding shares. His plans to sell the firm's studio, real estate, and some intellectual property while keeping the TV channels, including Paramount Plus streaming. He is said to have banks and other investors lined up. January FOMC preview, keeping a March cut on the table. FOMC will aim to keep March on the table without sending a decisive signal by removing the outdated hiking bias from the statement and noting that future policy changes will depend on upcoming inflation and other data. We continue to expect FOMC to deliver a first cut in March and 5 cuts in total in 24. The main reason is that progress on inflation has surpassed the threshold that has already been given. And then Google, we already got those numbers. Heading into January month end, the Goldman Desk model estimates $10 billion of U.S. equities to sell from pensions. Given the moves in equities, bonds over the month, we saw one trigger event on January 10th with $12 billion of equities were sold, bringing aggregate selling in January to negative $22 billion by month end. Don't worry, there's a little more. Microsoft's revenue tops estimates with AI boosting Azure. Alphabet, Google search revenue underwhelms. Delaware judge strikes down Elon's pay package. AMD revenue forecast below expectations, renewing concerns about demand in core business. Weak demand weighs on Samsung's operating profit. Company flags chip recovery in 24. Novo rallies to record high as weight loss drug powers profits. Many high-flying EV stocks have been crashing back to earth. Wall Street Journal planning some layoffs and restructuring of its Washington bureau. PayPal to cut headcount by 9%, or around 2,500 workers. U.S. economy outperforming against all other G7 nations thanks to distinctive structural strength and policy choices and luck. China manufacturing stuck in contraction. Services expand for the first time since October. Inflation down in 6 economically important German states, pointing to a national decline. Falling French inflation near 2-year lows fuels investor bets on early ECB interest rate cut. German unemployment unexpectedly decreased in January, pointing to resilience in labor. Australian inflation slows by more than expected. Japan factory orders rises at slower than expected pace. Retail sales unexpectedly shrink. Fed will hold rates steady for a 4th straight meeting, but avoid signaling an imminent interest rate cut. ECB Lagarde declined to have a timeline for interest rate cuts, but emphasized wage data will be vital. Bank of Japan's summary of opinions showed more forward-looking discussions on easing. Reduced B of J JGB purchase stimulates more stealth tapering discussion. Investors pair bets on March rate cuts after strong jolts consumer confidence. Traders position for a larger bond sell-off. China's stock market sell-off suggests latest market support measures have failed to gain traction. China ramps up efforts to consolidate banking industry as financial stresses rise. China's major cities further ease home buying restrictions. Biden looks increasingly vulnerable as immigration issues against Trump, latest polls show. Biden decides on U.S. response to fatal attack on American troops, but said he's not seeking wider war. Iran-linked militia Kataib Hezbollah, suspected in fatal attack on U.S. troops, says it's suspending military operations. Yemen's Houthi threatens more attacks on British warships, stoking fears of protracted disruption. Saudi Arabia resumes U.S. defense talks after pausing them following outbreak in Gaza. Saudi Arabia asked energy minister to scrap plan to increase production by 1 billion in 2027, and Venezuelan oil production could fall by 30% to 600 billion a day, or 600 barrels per day, if U.S. reinstates sanctions. The headline said luck on that one. It really did. It really did. My goodness, what time? We got time, baby. We got time. As far as pre-market movers, they're all earning. So, I mean, unless I say anything else, assume it's up because of earnings. So Stryker, SYK up 7.4, Starbucks is up by 4.6, BSX 4.5, NMR 3.6, GSK 3.4, WBD they're up 3, Power to offer to acquire, it's a sympathy. CB up 2.9, Skyworks 2.6, Philips 2.4, ADP 2.0, SAN 2.3, FTV 1.7, VFS 1.5 off of nothing, MKTX 1.2, Walmart up 1.1, 3-for-1 stock split, Boeing 0.8, Hess 0.3, NDAC 0.3, and then Match 0.1. PAR is up 14.8. Allen Media Group offers to buy $14.3 billion in equity value for Paramount Global. Plug Power up by 6.7. Roth MKM upgrade. HPP up 4.2. Lucid 3.5 off of nothing. SGML 2.9 off of nothing. ZGN up 1.6 off of earnings. RXRX 1.5 off of nothing. AHT 22.4 off of nothing. Powell up 17.2 earnings and dividend increase. Rail Vision up 11.5 off of nothing. CRBP 7.6 to launch offering of indeterminate size. RDCM 6.4 off of earnings. DCGO up 5 approves new repurchase program up to 36 million of common stock during 6-month period of July. Lunar is up by 4.4 off of nothing. DX 4.2 off of nothing. OMA 3.6 off of nothing. TPIC 3.4 off of nothing. Surge 3.0 nothing. ASTS 2.7 nothing. ADCT 2.5. Nice recommends ADC Zenlonita. Zinlonita to treat relapse refractory DLBCL and HGBL after 2 or more systemic treatments. Trading lower, ROC down 9.2 off of earnings, Tear down 5.5, Google down 5.1, Tiva 5.0, AMD 4.8, Mondelez 4.8, NVS down 3.8, ROP down 3.0, Tesla down 2.0, Musk $55 billion pay package voided, Datadog down 2.5 off of nothing, SMCI 2.3 off of nothing, Meta down 2.3, Google earnings sympathy, Snowflake down 2.1, TMO down 2.0, Pinterest down 1.9, MGM down 1.8, GitLab down 1.8, NVIDIA down 1.7, AMD sympathy, Fortinet down 1.7, Amazon 1.5, VRT down 1.3, MasterCard down 0.6 earnings, Microsoft down 0.1 earnings, NYCB down 25% earnings and dividend cut and unexpected loan loss. EXTR down 17.1 off of earnings, MHO down 7.5, MOD down 7.2 off of earnings, SoFi down 3.1, Morgan Stanley downgrade, Lemonade down 3.0 off of nothing, Mark down 46.7, discloses further details on terms of cloud services and marketing agreement. AMCS, American Superconductor, offers indeterminate amount of 250 mixed shelf down 14.4, HAO down 8.0 off of nothing, PNST 6.7 nothing, PEPG down 4.0 nothing, LXU down 2.3, UBS downgrade. China ADRs are trading lower by 1.67 on KWeb, and then Bitcoin is all trading lowers down 2.4. Ba-da-bop-bop-bop. I'm in the coke. Hey. So not too bad, Chattadonia. I got a couple plays. We will go over them here in a little bit, but on that note, I'm going to go to the bathroom, get me some water, get a little bit more prepared when I come back. I hope you have plays. I hope you flipped this switch and put it in drive, baby, because we're about to get going, man. So I'll see you in a little bit. Follow me on Instagram at The Trading Fraternity. Happy Powell Day and BRB, baby. Let's go. Good morning.
Yeah, I think that the risk of that idea that the Fed needs to get out of the way is the presumption that we've got inflation licked. I know that everybody says we've got inflation licked. They also said it last year. They said it 2 years ago within transitory. And it just continues to be the story that there isn't an inflation problem. Count me in the camp that thinks that there still is. Yes, we had transitory inflation. It got us to 9%. But once that smoke dissipated, I still think we're in a 3 to 4% inflation world. I think the last mile has already been run, to use that metaphor, and that we're probably near the lows of inflation. And that's going to be a problem for the Fed. Now, if that is, then this presumption, get out of the way. Let's just cut rates. Let's just declare victory. Could look a lot like what we saw in the mid-'70s when the Fed did the same thing, and then you fostered a resurgence of inflation. So let's be sure that inflation is done and behind us. And I think that we're in a post-pandemic world and that the economy's changed enough that people are more in a spending mood, that if you give them more stimulus, you're going to see more inflation. And that's what my concern is.
By the way, I want to remind you, the world didn't stop at 5% rates in the 90s or 6%. The world did continue to run, and we bought houses and we did different things. So, Kate, let me bring it back to you. I want you to live in a world of where the last mile is tough and there's a stickiness at 3%. It's not that much of a challenge for you in 30 seconds.
Yeah, I don't think it's much of a challenge at all. And as I mentioned, companies have made significant changes to the way they approach debt.
Yellen don't care about that last mile. Chattadonia, I forgot. I should have played you it. I forgot. It's out, bro. You know that? You got the Paul freestyle. It's already out. I forgot to run that one up. Oh, yeah. I forgot to tell y'all, baby. So, he'll get you a little bit. I don't know. Let him run it up a little bit. I don't know, man. Are you ready, Chad? I'm telling you, this song makes me want to run through a wall sometimes.
It's a letter to the people. I'm
so tell me,
like I'm Paul.
What's the first play of the day, baby? What's the first play of the day? What do we got? Post it in the chat. Post it in the chat. Let's go. Drop it. Uncle calls. McDonald calls. Bitcoin launch. Short AHT. Just watching. GM. Starbucks. Short XRP. Got hacked. IWM puts. Sell out of EA puts. Run it. Tesla puts. SPY. 3 minutes. Easy SPY put. SPY put. SPY put. Pfizer low on the bounce. Waiting for Powell. Walmart calls. 170. More RKLB. Google. NVIDIA. Short live. SPY call. SPY call. SPY call. Short everything. SPY call. SPY puts. NVIDIA covering 6J shorts. Amazon 190. Waiting on Powell. CXNA. Big pop. TLT calls. Shorts. Fisker calls. AAL. ENSC. Learning. Starbucks puts. Long RKLB. Mara. SPY puts. Lamborghini calls. Rumble. Jesus calls. Selling MNQ. SPY puts. Short Hasbro. LABD. Get some good entrees. Flipping out of the Google debit spread, baby. ENSV. SQQ. Sitting on my hand. Starbucks. SPY calls. Holding. SQQQ. EWJ. Rug pull. SoFi puts. Power call. NQ price action. SQQQ. Watching XOM to break. Holding. Buy back my puts so I don't get a sign. Puts. Gonna watch the Powell show. Starbucks. Strangle. 1.5 standard deviations on Snap for Meta earning sympathy. Lost AMD calls. AMD puts now. All in on PHILO. Leap calls. Lift. Call puts. Powell. Patience. Pfizer calls. Hold. Small good decisions. Watching my Tesla put. Meta calls in the final plays. Double dip on Pfizer. Stepping on my finger. Sell Starbucks calls. Microsoft shares. Small plays till Powell. And March Fed odds in IWM move. Wow. So here it is, Chad. Here it is. I got a couple of plays. We got a little bit of time here. I'm going to be watching AMD, Google, Amazon, Meta. So the ones that report in the sympathies. I do want to see how Starbucks are. It has to depend on the premiums. I'm surprised they're still up, but the main play of the day is bonds. I'm telling you. ZB, TLT, IEF. That's it. My bond play I got wrecked on is almost back up now. And depending on the outcome, I think bonds historically today, in the next 2 days, pretty much, bonds should be on fire no matter what Powell says. Even though I will tell you, there's a lot of people buying puts and hedges, though. So it's not a guarantee, but I'm still liking it. So we'll see how it plays out. But Chattadonia, those are the plays. But they don't matter if we didn't have the freedom to do what we do. Oh, I hope y'all feel me. That's why here at the Cult, baby, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has made the ultimate sacrifice, giving us freedoms we take for granted and don't even acknowledge all the time. And that people that I'm talking about is the veterans of the United States of America. On behalf of the Cult, I want to give a huge special shout out, thank you, and encourage you all to hold it in your heart on a daily basis. A big shout out to all the active servicemen, past servicemen, anybody who has served this country, even their families, for real. Thank you, thank you, thank you. We love and appreciate you. God bless every single one of you. And big shout out to anybody else out there giving back to their local communities. All the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches. You giving back, making your community run, bro. That's where it all happens. That's where it all happens, baby. So God bless you and thank you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send to the Jets! Oh, it's game time, baby. Or nah, let's go. Oh, my goodness. Oh, my goodness, Chattadonia. Are you ready? Are you ready? Pow Day. We guys still got a couple of hours to kill. We got a couple of hours to kill, so we'll see how this all plays out, man. We'll see how this all plays out. Other than that, though, we went over the plays. We got 1 minute and 46 questions, or 46 minutes. If you have any questions, again, there will be a couple of pre- or post-earnings, so we'll keep our eyes out for them. We'll see where those premiums take us in the morning. And then other than that, man, it should be pretty straightforward. Again, a lot of high expectations kind of led to some disappointments. The Google puts, I might be down to hold them. I mean, they're kind of close. I don't know what the value will be. I mean, depending on how much they're worth, you know, if we could kind of recoup some of that money from yesterday. Otherwise, kind of down to hold, and I will be looking at, again, NVO. We have those. That's one that got me kind of excited here. That shouldn't move that much. Now, again, it's literally hitting the high, so I think NVO is going to be an interesting one. I hate Starbucks, but I'm still going to take a look at those premiums. And then who was the other one? I think Roper was the only one that was up. Not Roper, Rockwell. I think that was another one. Let me double check. It's a letter to the people. I'm penning it like a Paul. The regional banks, it was NYCB. So they announced a surprise provision for credit losses. Their losses went from 25 million to 189 million, which is big for their size, and it was unexpected. And then they cut their dividend by 70%, 75%. Who was the other one? Boston Scientific killed it, but no, I think Starbucks, NVO, Stryker, that was the other one. And then Rockwell Automation, I think they're the ones that are on the downside, down 9.2. So we'll see how they all play out. And again, I think TMO, but I don't know if those contracts are going to hit. So we will find out. But, Chad, we got about 10 seconds. Like the video. Make sure you guys are subscribed. Post any plays, info. Let's source it, and good luck. And let's have a good one. Here it is. Round 1. Fight. All righty. All right. I think Starbucks premiums are down. Let's see what we're working with. And then let me check the NVOs. I don't know if those moved up already. That would be nice if they did. The Thermo Fishers are up. I don't know if you could actually even get out on those bids. That one might be an interesting one. Let's see. Thermo Fisher. Yeah, they're only down by 0.5. We'll just throw in a higher bid. See if you get filled on that. Let's go to the Starbucks, the NVOs. The NVOs actually went up. Holy shit. So that's interesting. NVO, watch if those kind of come back a little bit. The Thermos hit. Yeah, I don't know how, but now the bid died. But NVO, that premium was up a decent amount. I'm very surprised on that. The bid is higher, but the ask is a lot higher. And then there's Starbucks. I think the 2 standard deviations, are those down? Yeah, the 105. Oh, they're just widening out the spread. Yeah, the spread is very wide on Starbucks. My goodness. What is happening with that? So Starbucks coming down. If we could get a little bit of tightening on this option chain, that maybe go to the February 16th. Remember, those were a lot cheaper. Yeah. So, yeah, the 105s, yeah, those just got cratered. All right, I grabbed 2 of the Starbucks next week. Oh, wait, did y'all like the video? I made a play, not a recommendation. The spread is very, very wide on those. I grabbed 2 February 16th calls. You could see it on there. I need some likes, though. I forgot. I need to hold y'all ransom here. Only 500 to start off the morning. Oh, man. Oh, man. Pfizer dump. Let's see. Netflix. Again, where's even Tesla? They got killed. NVO keeps going, though. So that one's kind of there. Those TMOs, those did not hit anymore. Again, the Starbuckses, we just grabbed those. Those are kind of holding. Where's the other one? NVO. NVO's up a little bit, but they calmed down. So NVO's still kind of moving slow. If they get above like 5 or 6, though, those will start ramping up. I don't know. I think the Googles even got clapped, no? Let's see. New York Community Bank plunges 44% at open. My goodness, Habibi. My goodness. The Google puts are barely holding, so they're pretty much break even. They're holding the premium from yesterday. Let's see. AXP went down a little bit. There's TM and NVO. That one, maybe we get lucky. The spread is just super wide. Those Pfizers are still around the same price as yesterday, even though they're dumping. So NVO, keep an eye on that one. There's Google. If Google gets a flush, we'll get lucky on that. And then Starbucks still dropping there. So Starbucks gave up like 2.5. We might have went a little too early on that one. I don't know what the premiums are at, though. How do they move since I bought those? They already know. Those got killed on the bid. NYCB halted. Russell bleeding. Yeah, so is the Nasdaq's down 1% right now. That's the crazy part to start off the morning. And then bonds. I'm about to go green on my bonds. That's insane. I was getting murdered on those the other day. How did the Google puts? Because remember, they're out of the money still. So all of those plays that we made was 2 standard deviations. So technically, Google moved as expected. That's why they even held up their value. But if anything, you need it to go a little bit more. But like I'm saying, the follow through, maybe even Powell, you might get a move. But that is the whole idea with a lot of those plays. So it's still, they didn't go up, but they moved in that direction down that was already priced in. Microsoft running. So Microsoft, new 52-week high, only up 1. Remember, they were pricing in, I believe, another 4 or 5% as well. SPY going back up. Yeah, Microsoft has gone green. New all-time highs off of that. And then the bonds are going green right now. CMA, where's the other one? Yeah, TMO. Oh, let me get the TMOs. Where is that? Oh, did I hit the news button? With some CI going up. I think it could be with Microsoft. QQQ. AMD. I forgot about AMD. I don't think... Again, that one too, even though they dropped, we were way out the money. AMD's only worth 7 cents. If AMD flushes, though, I mean, that'd be good for the double dip. But honestly, the only way you get a flush right now is if Powell or if the real opening trade gets a little ugly. Goldman on the high. I don't know if Boeing had their call already. It's usually like a little bit after the opening. I know last time they did change it, though, and one of them did. Small, stable banks. Again, KRE is vicious, down 4.5. Remember, yesterday banks were leading. Microsoft going up. Banks are still going up, though. XLF, the big banks are holding on. And then Microsoft hitting another 52-week high, all-time high, whichever you're into. Snapchat going up. So, again, Snap's down 2. I think even Meta was down 2. Meta's already recovered 1.5. The Cisco put is up. Really? Oh, yeah, that did. They have earnings later, but that one did. That was up like what? Under 50%? Interesting. I thought they had a pop yesterday. Interesting, Cisco. Interesting. Yeah, Humana, they kept running up. Yeah, Humana, we would have got a lot more off of that, but they came down from the morning. AXP's climbing again. Remember, we're about to go in the money on AXP, so that's going to be good. Procter Gambling. Damn, Procter Gambling keeps going. So PG, they're actually getting a lot of volume right there. And then again, Walmart announced a 2-for-1 or 3-for-1 split. I don't know how I feel about that. I kind of want to get Walmart. I like me some Wally World. Yeah, big banks are moving. Regionals are getting clapped from the Signature Bank thing. And I think Signature's halted. And again, big bond rally so far too. Oh, I need to open up another TD. Yeah, SoFi got downgraded in the morning. Oh, Match is on the high. I don't know if those even went up too. No, Match clap, but the spread is very wide. Treasury yield falls on the 2-year to 4.23, 10 basis points. Pfizer finally dumping. We'd be holding Pfizer medical or healthcare spinoff. They give us the shares, yeah, so it will change the company around a little bit. Yeah, Pfizer's below 27. Remember, that's the level. It either dies or bounce. That's what you played with yesterday. So see how that plays out. GSK on the high. And then Citi keeps going up. Again, XLF is still nonstop, ironically enough. Again, I think that's another new high for JP Morgan. XLF, Coca-Cola on the high. RCL on the low a couple of times. AMD is flushing down now. You're going to need a little bit more. The puts are at what? From 30 cents to 10? So they're all still down there. It's the only issue. STX. Oh, what happened to that one yesterday? What was it? Steel Dynamics? And then AXPs are still climbing. Oh, where's UPS too? Those puts are still fighting, but they're down. Yeah, watch out UPS. Remember, they got saved yesterday. Yeah, UPS could be another flush. Watch out for that one. What was the other one? STLD. Yeah, Starbucks, it is doing the cuck for the most part. So, again, usually if it has the post-earnings move, it would have taken off by now. So, give it a couple more minutes. Otherwise, It might just do what who did that? One of the other earnings did that the other day. Gold. Yeah, I think the bonds are helping out with gold. That's it, bro. I have a big bond position. I was really negative on that. Now I'm down $100 on it. So we're gonna see. But I think bonds are the answer. That could be affecting gold, though. Let me take a look at gold. Remember, gold will be a sleeper play today. A lot of people ignore gold on the Fed day. Yeah, gold's killing it, though. It's already up 0.75%. But that will, depending on what Powell says, that's somewhere to keep your eyes on. Google dropping now. And are we going to get a bid on those? The Googles are up now by $2. But again, at least the Google's kind of holding on there. We'll see how that plays out. But Google, AMD, they just had their flush there. AMD bounced a little bit. But Google's now down 6. And then Microsoft chilled out a little bit too. Marvel running. Rumble little pop. Yeah, Rumble's or Marvel's still down 0.9. Goldman on the high again. Yeah, Rumble's up by 1.9. I think people were talking about DWalk earlier. Yeah, UNP and Costco, 52-week highs. Citi, nonstop on the bank. SPY back to the level. Take them back to the plant. Let's see what we got. 4,900, man. We're still holding. Very, very good. Humana on the low. Illumina on the high. Some decent candles. I don't know if that's like a news candle. But they're going up there. Enphase on the high. High-low ticker is kind of balanced. Pfizer now, 26.93. A little bit below. J&J dropping as well. AXP, we're getting still a climb on that. So come on, get us in the money. Yalla. Yeah, AXP. Those Cisco's are up, though, interestingly enough. And then UPS puts are trying to come back to life. Bank of America battle for 35. China was all bad this morning. Again, their data was just kind of soft. Services was good, but everybody's still kind of, they're looking at all the recent stimulus. There's no immediate big move. People are still think it's all weak. Starbucks dump in. That might have been a dud. No continue. It was up a great pre-market. But again, I knew I hated it. NYCB unhalted. So again, they just cut their dividend out of nowhere, and they just had a very surprise loss on credit. They gave a loan to a commercial building, and then it went clapped. Oh, Procter & Gamble. Why you torture me? Yeah, Procter & Gamble. We sold out of it yesterday, though. That's a good GG if you still held that. That one's killing it. Yeah, Para got a buyout offer, $14 billion. So they're still holding that 13%. Excuse me. Remember Steel Dynamics from yesterday. Cisco's down 2. They were up pre-market, interestingly enough. Where's Intel? Yeah, AXP now we're in the money. So that one's $40 to like just under 200 now. But that one, again, we got like a couple more days. And then banks are good for now. Hopefully that one keeps running. MO on the high. MO catching a bid here. Bonds are there. Bonds keep running. I don't have a deposit. No. Remember, I already used my deposit on Pfizer because I wanted my dividend early. So I gave me a front run on it. JD on the high. Affirm going up. Again, SPY near the low. This is right around 4,900. NASDAQ down 1.1, SPY down 0.5, Russell down 0.47, and then Dow is up by 0.3. So Fed swaps price in 15 basis points of cuts for March versus 9 the prior day. Interesting. So March rate cut odds are getting a little bit more bullish. I am now green on my bond position. That's insane. Those, again, bonds the last couple days. This was I think 2.5% on the futures. So this is now correlating with the day of the last Fed. That's why I kind of like my position, but essentially 10-year and 30-year bonds, longer end, they should be actually 10 years above the Fed. So 10 years actually getting more of a bid on that. So now the question is, do we take the bonds now or do we reposition or hold it? So we're going to see Google having clapping a little bit more. Those plays are going to start running. So, again, right now we just have a small gain, but it kind of needs to pick up the pace. Otherwise, it'd be too slow. GLD. Yeah, oil. Gold keeps going. And then TMO, that spread is just wide. Well, I don't know. Maybe we'll get lucky on that one. Tesla gassing. Really, again, Tesla was down off the... Damn, Tesla's actually up 3.5 from the low. SPY on the low now. Boeing on the high. They're up 3.7. Again, they got rid of guidance this morning. Yeah, TMF spike. We'll see. This bond level might get a little tricky here. Again, they're already up like 1%. Futures on ZB are already up by 1% on the day. Microsoft continuation to the I don't even know downside or upside. It barely even moved right now. It's straight up holding break even. So again, I think you have more of a chance of continuation on AMD or Google. But even then, AMD is already bouncing a little bit there. Take the bond and reposition. It wouldn't be a bad idea. It's just a matter of but the way I'm looking at it is like if I get out of the bond play now, it's either we take it now and try to reposition, but if it keeps going up, it's going to be a lot harder to play on the Fed, if that makes any sense. Because then if whatever gap you're going to leave, and then if you do, I do think that's going to be the move, though. Bonds for Powell. Chicago PMIs 46 versus estimate of 48. And then Japanese yen is down by 0.5. Wall on the high. Google's still holding down again. AXP went in the money and then just fell out. AMD's on the high now all of a sudden. So AMD's still down by 3, but they've recovered another 2.5 from the bottom. Regional banking down 4.8, the most since May. Microsoft headed south. EA on the high. So they were down a little bit earlier. Again, AMD starting to go. I don't know, dude. It literally, AMD and Microsoft just switched. What kind of dance? And then Google's still lower. What kind of dance are we doing here? And then Amazon's down. Meta's still down. They're trying to hold on. Where's Apple? Pfizer is getting clapped now. They're down by 0.7. And then UPS. What was the other ones from yesterday? Whirlpool. Whirlpool's actually up. But Pfizer's starting to give up now. Again, 27 is the number, but the further it gets away from that, not so good. About Boeing, I don't like Boeing. I think wait. It's just still in drama mode. Yeah, UPS is kind of catching some steam. AMD is running up, man. Kind of 0.5% at a time. Yeah, MA, they're just right. They did good, actually. EW on the high. Edwards Life Sciences, that's been the value one. And then Thermo Fisher's down. So TMO, again, I think there was a little bit of a bid, but it's just because of the spread. Pulte. Microsoft, yeah, Stryker did very good. They're a little bit more expensive, but they're just holding. Not really any continuations, though, today. Oh, SYK just had a pop. Google's starting to flush. I mean, we'll see 140 on Google. Yeah, Stryker just woke up. I was like, it didn't look like it was going up. Watch if that one does, though. Yeah, so 140 is going to be a pretty key level here. You might have a little bit more downside after that, but 140, it could also get some support. Googly woogly. Got small gain on the Google plays. Starbucks down at 95. Cuckaroony. Yeah, Starbucks later, dude, it was up 6% in the morning. Pre-market, it just gave up all of it, but I don't know. Maybe we double dip on that. Let me take another look. Yeah, those contracts already got murked. You could get the 101s now. Oh, those are going for 90? My goodness. Bro, they widen these spreads so much. So we'll see. NYCB check. It's going boom. Like boom down or boom up. Don't give me those. Okay. Well, we'll wait on that. ALGM, Zion. So those are all going up, and then Square on the high. SMCI still going. AXP gave up a little bit. Proctor's even coming down. And then SPY from the bottom. Google clapping Microsoft. And then AMD's running, but Google, again, watch around the 140 level. Intel's on the high. AMD's on the high now. Again, UPS, I feel like he hasn't got that much attention, but he's still holding up. Netflix safe haven, it is. And then Tesla's still down by 1, but they came up. Netflix is just in its own little, again, they don't have to worry about any of that bad earnings. Should have held the TXNs. Did they get clapped again? I think, what do we get? Would those have been in the money? You got a little bit more. But we still got a couple 100% on those. So I was not too disappointed. Now that one did go down a little bit more. In your opinion, do you think it's unlikely that the Fed will cut rates? It's highly unlikely. It's like it's probably the most unlikely thing in the world. So they're going to talk about what they're going to do in March, but there's literally zero. I think there's a 1% chance. I don't even know. Maybe a 0.1% of a chance they cut rates today. And like you would need like the whole economy to crash or something insane. But yeah, very, very little odds of that today. Match, I don't think they moved too much. I think that was a dud. Again, literally holding break even. And they were pricing in 9% or something. Remember, they had a higher price in Roblo on the high. Google, I like it a lot lower. Again, don't forget, Google was just literally at all-time highs not too long ago. Bro, those Thermo Fishers are going up. You could have, it's 50 cents on the bid, 100 on the ask, ironically enough. Let me check the TMOs. What if we could ghetto spread those? That'd be funny. Because again, they're very far out the money. You got a little bit of a gain if you want. You can't really ghetto spread it though. The Chicago PMIs came in slightly softer just a couple of minutes ago, maybe like 10 minutes ago. Let's see. Yeah, and I don't think we have anything else here. The Chicago PMI came in at 46 versus 48. You got oil numbers that are coming out at 10:30, and then that's it. And again, we already got the Treasury and everything else in between. There's Starbucks. I wanted to try to get some better plays on there, but I was being a little picky with the bid. So we'll give it a Starbucks is either going to have to slingshot back up or it's going to dance into another round of premium kill. TMO on the low still. Strikers coming up. That's a post-earnings runner. DraftKings high of the day, still red. Yeah, but they're barely red, down by 0.7. Adobe's in the green, or excuse me, on the high, not in the green. That's another one. TLT still going up. Marvel, almost green. I like Walgreens, and I have it in the long term, but I don't know about throwing new money on it. I think you could just get way better plays. I think you could get both more value and more dividends from a lot of other plays. AXP still holding. Boeing's on the high. I think they're up, 4% now? And then AMD, they had that little 3% rally off the bottom, still red. Microsoft had their rally and then 1%, then came back down. And then Googly is just holding down 6.5. Zim is on the high. Redfin's been running. I don't know what's going on. Doesn't Redfin have earnings soon? Redfin earnings are day after Valentine's Day, but they're kind of getting pretty hyped there, ironically enough. I guess it's done this last couple days. It never really breaks out. Pinduo Duo on the high. Yeah, Walmart is happy as having the stock split. That was what they announced. Where's NVO? NVO climbing again. That one's a subtle one. Again, our premiums went up a little bit. I don't know if that stall killed them. Yeah, the stall did kill the premiums on NVO. Again, it's usually a small mover. If that one gets a little active, though, watch out for that. AX Pizzle. Gold. TMO still there. Again, gold keeps running. NVL 52-week high. Humana got Raoul. I put Jim. Yeah, it's still good, though. Again, 377 was a good rally. That was, I think that was the 2 standard deviations when we got it at the time. That was post-earnings. That was my exit. I exited before, but that was the strike price I had. But again, it was at 382 in the morning. Snap on the high, Uber, Nike on the low. Bonds keep going up. So, yeah, bonds, I don't know. You got to kind of speak now or forever hold your peace. We're green on our bonds now. So it's like you take your profits now if you want, but then it's going to be a little bit tricky getting back into it after Powell, or you hold until Powell. You can find a way to balance it out there too, but, actually, I do have an idea. I have a great idea. So you could buy a put. I'm talking the futures. I'm thinking possible future play, future put. We did that last time, if you guys remember, with some of the other yeses, but you could literally hedge it with that. It's an idea. $18.21. Yeah, the yen. So the yen, they had like their summary of opinions, and they literally were talking about cutting. So again, it kind of came out of nowhere. So we got people a little hyped on that. Well, let me see. I'm looking at future puts on these. Yeah, I don't know. I don't like that price. Whoa. Watch everybody. I don't know. Even the puts are pretty expensive. It kind of sucks. UPS still green. Let me see the JPY. It's kind of falling around the month. 0.69. We've seen some bigger ones, but lately, yeah, last like 10 minutes, it just rocketed up from open. I think Pfizer could go lower than 25. Yeah, I mean, stocks can go as low as they want. So again, especially if people want, wait till there's a downgrade. I mean, mother effers could take that as low as they want. So, but really, I don't think it'll disappear. Let's see. I'm looking at a bond play right now. Hence the quietness. Oh, big red. All right. I grabbed a put on my ZB. I have two, but I only grabbed one. I grabbed a 121 put for March. So I bought an option on a future. So that's going to buy me time up until Powell, and then even on Powell, we're going to be able to do a little bit of a dance. But it's about like $800, and then it should have like $2 or $3 grand of upside if the bonds return back there. Let's see. Any reason you're playing pure options compared to almost pure shares last year? Well, earnings is the primary reason, and then again we've been hitting a lot of the earnings. But at the end of the day, if the name is at an all-time high, I'm probably going to play options rather than the shares, so I don't get trapped in them. But we have made a couple of shares here, and again, I did make the mistake of buying some shares at higher levels, and I'm still trapped in them. So it's finding the balance there between them. And then 2 standard deviations has been hitting. But essentially, if the name has a lot more risk of buying in at the high, I'd rather throw a small, like a tiny amount of money and then call it a day. And then again, I'm not opposed, though, to shares. Any name that's like really at the low, I'm down with on the shares. I prefer them. And then even the futures. TMF. I like TMF. I like all of them. So I think the bond plays are very. I think the bond plays are going to be the number one thing to watch today. Gold as a number 2, and then the Russell. But essentially, bonds, like I told you guys yesterday, the history, it's quite phenomenal. Did y'all like the video? I need some likes on the video. If I'm gonna have to recap, bonds should be the easier play today. We'll recap the watch list at 1,000 likes. Amen, amen. But I got a cool little fun fact. It's actually quite amazing. So it's setting up a nice opportunity, but it relates to TLT and TBF and TMV, all those. Meta high ticker. Powell is going to be at 2:30, and then the release will be at 2 p.m., all Eastern time. Meta is coming back up. So, again, they were down 2% as a result of the Googly. Googly came up there $1 from the bottom as well, too. Some high trades so violently. Coin big pop. U.S. Department of Justice says eBay to pay $59 million to settle Controlled Substance Act allegations related to pill presses sold through the website. eBay getting a $59 million fine for selling pill presses. Very interesting. The dollar going down because of, I think, both the bonds and then now even the yen. The yen is rocketing. But honestly, the dollar is still, like, don't be fooled. You know, it might be doing the rope-a-dope into the corner. I don't think none of this, the dollar does not get me excited at all. The dollar, I'm very suspicious. Like, you know what I'm saying? Like, I would follow the dollar. I would tail the dollar. I don't trust him. Don't get your eye off of him. Even if the market don't want to react or not, but this isn't any real weakness until it's actually weak. So, like, even then, I do, like, December 13th, even before they, like, updated it, if you go look at the DXY, I mean, it was up a lot more, you know, and, like, we actually got a way bigger decline now. So the trend we're on is kind of fucked up. ZB. The dollar is a flight risk. Yeah, I would put an ankle monitor on it. I do not trust him. CMG on the high. Meta's still going. Again, AMD, they started to wake up here a little bit. Again, those Cisco puts came up out of nowhere. Starbucks still doing the dance, though. Starbucks kind of staying pinned, not really getting out of here. Yeah, NYCB, they had unexpected provision for credit losses in, rocket up, and then they cut their dividend by 75%. Vera. MGNX rocketing. That sounds familiar. Of 1.8. We've seen that before, right? Why are these China plays coming up? Yeah, Baba's barely red. Baidu also. Verizon on the high. PMI, no, it was slightly lower, but that was like a regional PMI. So it wasn't like, what's it called? It wasn't like the S&P Global PMI or ISM. Eli Lilly. Oh, those contracts did go crazy. Eli was running. NVO's up a lot too, but they're all still kind of within their range. Yeah, Netflix is in safe haven land. Again, it did sell off yesterday, but it's finding a way to hold up right now. NOC on the high. Costco 700, special dividends, never slowing down. A lot of reasons. Lawmakers grill CEOs of Meta, TikTok, and Snap and Discord at child safety hearing. Is that today? Lilly running still. Lilly and NVO. I guess Eli Lilly's 2%. Probably worth a lot more than the 5 on NVO. Because, again, Eli Lilly's huge. Eli Lilly had a drug approval in China. Takeda has the rights to sell it everywhere, but China, per a news article. Yeah, very big spreads on that one. Oh, dude, wait a minute. Can y'all do me a favor? I need to go to the bathroom. Yeah, whoa, the lizard's here. That's crazy. But, here's the deal. I'm going to go to the bathroom. I'll let you listen for a little bit. But I need somebody, whenever you get, what's his name? Johnson? Exactly. You need to tell me when Mr. Exactly comes on, okay? I'm just telling I need it. We have to listen to that one live. All right? Sound good? Sound good. All right, I'll be right back. Follow me on Instagram, at The Trading Fraternity. I will BRB.
1996, the same year the Motorola StarTAC was flying off shelves, and years before social media went mainstream, we passed Section 230 of the Communications Decency Act. This law immunized the then fledgling internet platforms from liability for user-generated content. Interesting, only one other industry in America has an immunity from civil liability. We'll leave that for another day. For the past 30 years, Section 230 has remained largely unchanged, allowing big tech to grow into the most profitable industry in the history of capitalism without fear of liability for unsafe practices. That has to change. Over the past year, this committee has unanimously reported 5 bills that would finally hold tech companies accountable for child sexual exploitation on their platforms. Unanimous. Take a look at the composition and membership of the Senate Judiciary Committee and imagine, if you will, there's anything we could agree on unanimously. These 5 bills were the object of agreement. One of these bills is by Stop CSAM Act. Critically, it would let victims sue online providers that promote or aid and abet online child sexual exploitation or that host or store CSAM. This stand against online child sexual exploitation is bipartisan and absolutely necessary. Let this hearing be a call to action that we need to get kids' online safety legislation to the president's desk. I now turn to the ranking member, Senator Graham.
Thank you, Mr. Chairman. The Republicans will answer the call. All of us, every one of us, is ready to work with you and our Democratic colleagues on this committee to prove to the American people while Washington is certainly broken, there's a ray of hope, and it is here. It lies with your children. After years of working on this issue with you and others, I've come to conclude the following. Social media companies, as they are currently designed and operate, are dangerous products. They're destroying lives, threatening democracy itself. These companies must be reined in, or the worst is yet to come. Gavin Guffey is a representative Republican.
Back. All we want is Mr. John Kennedy. That's it. All we need is we just have to listen to John Kennedy. That's it. That's the only thing that matters from this hearing. I know I'm sorry to downplay it if you care about it, but that's all I care about. It's just all I need to hear is Mr. John Kennedy. I feel like his line of questioning will be exactly what we need. We're going to get to the bottom of how the Wi-Fi is incorporated into Section 230. Now, is that 2:30 p.m. or are we talking 2 100s in the 215s? Exactly. Somebody needs to clarify this. Mr. Zuckerberg, is it ironic your name is Mark, like a bookmark, and everybody has Facebook bookmarked on their computer? Is it ironic? Now, what about the TikTok? Can I still use the TikTok if I don't have a clock? How does it TikTok if the clock doesn't work? Does that mean it's linked to my alarm clock? Exactly. It's quite ironic to me. I'm really excited to hear from him. I'm so excited to hear from him. You have no idea. Besides Powell, that's probably the number one thing I want to hear today. Yeah, gold is up a ton. And honestly, that put on that ZB is not hitting the same, even though it's called gold. Oof. The sleeper, bro. The gold is up there. So we'll see. Gold might see. That's my worry with the bonds. It might be just too high to touch it. That's why I'm like, ugh. But we'll see. If there's a pullback on gold, that's going to be a fun one today. And again, it does depend on what Powell says. Pinduoduo and the China plays are running. Again, Eli getting a lot of attention. Disney going back to green. And then, bro, those Cisco plays went up 100%, kind of out of nowhere. So we'll take it. Netflix went red. Oh, it came down off the high, but I was going to say, they were the one holding green here today. NASDAQ still down 1-2. The Dow gave up. The Dow was up by 0.3 earlier. Intel was in the green. They're coming down. And then AMD, Googly, and then Microsoft, again, it had a little pop there. Hit a new high in the morning. MO's red now. They were going green earlier. Gold chart's never been this bullish. I think gold is volatile. I don't know. I mean, it is bullish for a lot of reasons, but that volatility here, it's moving just like the bonds, but as long as they're holding above, I mean, I'm using GLD, but again, anything over 2,000 is great. So I just sold out yesterday at like 2065, I think, on my MGCs. UPS, I kind of like it for the long term. A couple people have brought that up. I'm not really opposed to it. I think it'll hold there. It sucks because there's one name that has ultimate premium, but I like it now. Walmart, if they do this split, I think you could benefit post-split off of it, but I do want Walmart as well. But other than that, though, if it is too expensive, I mean, I have my other names for this year that we will be eyeing. Arab BNB. MINM, what is this? Minim up 86%, one of these small cap movers. Chop all day. Well, we might get big moves ahead of Powell too, where sometimes it'll just sell off big and then bounce up right back to where you were kind of at, and then Powell will come on. And then again, we are expecting changes to this statement today. So at 2 p.m., you have a higher chance of a move. Celsius, I like it, but I do think it has a very high premium, no? So it has came down, but like you're still buying Celsius 100% higher than last year. So, I mean, it's up to you for the long term. Like I said, if, you know, the names that have premium, the higher growth names, as long as you've built out your portfolio and aren't going too big, I mean, that's a, you know, if your portfolio has room for it and it makes sense. But, you know, again, I do want to avoid the premium. Again, even then, I like Walmart like I was just talking about, but that one's, you know, at all-time high. A little lower here. I mean, we're right below 4,900, I guess, 4,887, 13 points now. But, I mean, this is the lowest you've been in 2 days now? You're going right below the Monday low, back to where we started the week. And then last week, your low was, 4,865? My goodness. No, last week's low was 4,842, so you got a little bit of room. You might be able to drop 40 points. Def add in UPS. It's not a bad one. Again, you're gonna have to deal with the recent volatility, but you know sometimes it could bounce up a little bit before then. But even then, it's a good name. Pays a 4% yield as well. So I like the idea. I definitely think we could add that to the list of something to watch out for, depending on how everything moves. Where is it? TMO's coming down. Little candle after hitting that low. STLD is chilling. AXP again. We were in the money for a little bit. Then Procter Gamble too. That one came down. But we sold out of that one. Still good to watch. Where's 3M? They're just chilling. Disney has been going up. I don't know if it's because of the Para stuff. But Disney is, again, a lot of other names are red. And then even Netflix is green. Starbucks, another low. Yeah, that one's not doing the continuation. These contracts were a lot cheaper earlier. I got killed on the 105s. Those just literally got burned instantly. Baba Green. Really? Baba is in the green right now. World Court says Russia violated anti-discrimination treaty by not protecting education in the Ukrainian language in Crimea. Holding SQ. New Uncle Fire, baby. It's always a fun time. Always a fun time. Yeah, eBay to pay $59 to Self-Controlled Substance Act for selling pill presses. No, Starbucks gave up everything. Even that was a very failure of the post-earnings. That's why the contracts got murdered. They were up like 5-6. But then again, we were saying how bad Starbucks was. But everybody just kept buying it up, and then Cash Open got dumped on. And Lee Auto, again, all the China plays are green now. They were down by like 1.7. Would you add UPS over Starbucks? Yeah. UPS is a better price and a better yield. And I don't know about like premium wise. So like UPS is at like 2020 highs. That's the only problem. But it's came down a lot. And then Starbucks pretty much at the same level actually. But then that was a level it hit in 2019, and then you get a way better yield. I don't know though, I think UPS would be more sensitive to broader economic slowdown. You might think the coffee would be, but in a weird way, I feel like shipping would be more in this world. Pfizer's still just tanking off of yesterday. Again, that 27 level it's going to probably it's either going to die from here or it's going to hold it up and then do its thing. Lawmakers got commitment on salt-tied marriage vote. I have no idea what that is. Sure, there's salt deductions in marriage. A wall on the high. NVIDIA kind of coming lower. AMD just getting right back up to open, or right back down to open again. A lot of the post earnings kind of all over the place. VWAP looks weird. Well, I don't know what the volume's at, but I think we're gonna have a weird setup. Always ahead of Powell. I mean, it hasn't even been an hour. We're at 12 million, so kind of active. Not the worst, not the best. Am I gonna dollar cost average if it goes down to 25? So my plan with Pfizer, it's not really going to be as much of the price as it is my schedule of deposits. So that's the blessing and the curse of the long term, is that I don't, again, like I already used the money. So whenever my next deposit comes in, I'm going to look at my portfolio and then we're going to see where we could build out and what has the better deal. But, you know, by the time I get my next deposit, then the question is, what price will Pfizer be at? So that way, although I like certain prices, you know, I'm moving based off of time rather than the price. So in that case, you know, 25, 24, 29, we'll see. And then if it goes too high, I'm going to go look at the other names. If it's still low and the yield is still high and it keeps doing what it's doing, I'm probably going to buy more Pfizer. Other than that, though, if it's, like I said, if the price goes up by the time I have my next deposit, then I'm probably going to be buying something else. TMO. Yeah, those contracts, they hold up kind of weird. But I'm down. If I had the deposit today, I would add more, yeah. Or I'd also look for something near ex-dividend that is on the list, like MMM or, I don't know where MMM is, or MO. But Pfizer is kind of at the sweet spot for me. So I don't know. I feel like 3M's ex-dividend, so you could get the discount as well as the partial point of the divvy. And then where's MO? MO, you already missed the dividend as well. But same thing with Pfizer. And then PayPal's already up. Or UPS, if you wanted to add a new name. I don't know. I kind of like UPS as well. Now it has a 4% divvy. I don't know when their ex-divvy is. You just missed. Oh, no, it's UPS, it's Pfizer. Yeah, you could still grab UPS and get the dividend. So, I don't know. It's up to you. I'd say Pfizer or UPS. Am I expecting cuts by March? I think it's all bullshit. I think the sooner the better. Just because if they do it later, then again, they've been waiting a long time. That's kind of the problem. I know some people don't want rate cuts. You know, there's people out there like, why the fuck would you cut rates right now? The economy, the inflation, but also at the same time, you also run the risk of Powell taking too long. And, you know, the Fed does not have a good history of holding rates. And what I mean by that is usually when they hold rates, they hold them too long where something gets cracked. So, in the same respect, though, I do think Powell is trying to give himself as many opportunities to exit as possible without tying himself in there. So, I'm not really like forecasting March or not. The way I will play in accordance to how things are said and how it moves. But at this point, I think it's a game of whenever the lag data finally hits, and then with the election going on, I think it's going to be a little bit more tricky. I think last year will play out a lot like this year with a little bit more volatility due to the election. $3M or UPS, you already got Pfizer. It's up to you. 3M has higher dividend, more value. UPS has more downside but more stability. That's the irony of it. And then a decent dividend. But then again, like I said, I would probably grab Pfizer again because I want to stack up the position. So I'm trying to use my other, instead of grabbing too many names. So if you already have 3M, maybe you could consider stacking as well. Yeah, 10-year under, bro, last 3 days of bonds have been insane. 2 days, really. Thinking about high rates help keep the dollar high. People keeping money. It does. That's why definitely when the bond yields go lower, the dollar can ease up. But also, too, another aspect of the dollar is that every currency around the world is kind of doing poor. Again, from the yen all the way even down to like the euro and then the more developing currencies. So the dollar is just, but higher rates are still acting as the wrecking ball. That definitely is factoring into it a lot. I'd say half of the equation. I don't think Fidelity doesn't have futures. Do they have futures? So if they have futures, it would be /ZB. Yeah, they don't have futures. I don't think you could pull it up on Fidelity. Corvana. PayPal just holding. What's the other one going up? Disney. Disney's still in the green. I'm still in the long yen play. I have one up, one down. My ones out for like next year are green, and then the short-term ones are red. I still think the yen is going to be big. No matter, I'm telling you, the yen, whenever it does happen, I know the what, I just don't know the when. And then we talked about you could even hedge it with the Japanese equities. Buy Japanese equities, buy the yen, one or the other. So if you lose on the yen, the equities will keep rocketing, and then vice versa. Tesla, Rumble's on the high. You guys brought that one up earlier. Rumble, 6.1. That Teladoc going up. Eli Lilly came down. NVO also dropping. GM, remember, they outpaced yesterday. We had TLT calls on the Yellen news. Nice. Up 200. So bond, those plays are going to be very interesting. Like I'm saying, I have a bond play I'm still holding. I think I might hold it for the Fed unless I like really like get a fat gain on it right now, like leading into it. But I do. There is like I said, I'll go over the watch list once we hit the 1K likes. We're gonna need 1K likes for a lot of things today, so we need 80 more people. But then again, I don't want history to screw us over, unfortunately, because it's going to be trickier than the numbers will show. But there's going to be a nice dynamic here with TLT and bonds today. PG on the low after hitting that high. GM's still running. HD, they're going up. Remember, they were doing green the other day. DWAC, Goldman now, 52-week. That's crazy. Remember, Goldman was getting murked all last year. They were the underperformer. And JP Morgan hit a new high, then chilled out today. Yen is on the high, so China plays are still going up. BABA at 0.29. Biden admin opposes measure blocking SEC cyber rule. Oh, wait, what? So Biden I'm pretty sure that's the rule that says that the companies have to report cyber hacks within a certain amount of time. Why would he oppose that? If I'm correct, I don't know if that's what he's actually, if that's what he's opposing. I don't know. I could be wrong on that. It just depends if that's what it's talking about. NYCB is on the high. Remember, they were just down 40, but it's still down 31. This is it. Yeah, that's what I believe it is too. But why would he oppose that? That doesn't even seem like it is in line with the Democratic agenda. Unless, I mean, lobbyists or donors, but maybe Biden likes Wall Street a little more than we thought. That's weird if he opposes that. That makes no sense. Yeah, he opposed Spirit Airlines, and then he opposes that. I don't get it. But that one wasn't Biden directly. That was just the DOJ. But if they're saying Biden is literally, I guess it says Biden admin. Maybe it's not him. I thought it was like a direct. He's like, no, You guys don't take your time reporting cyber hacks. Don't worry about it. You're overthinking it. Breaking news. Egypt, Ethiopia, Iran, and Saudi Arabia and the United Emirates have confirmed they're joining the BRICS, per Reuters. That's what Chad's saying. I didn't see that like flash in red. Interesting. Egypt, my people are in the BRIC. I think my mom asked me about the BRICS a couple months ago. What was that? I saw something red. Oh, oil stockpiles. So gasoline stocks 1.1, last are seen 1.4. Oil stocks 1.23 billion barrels a week, million barrels a week, seen by 0.8. And then Cushing inventories negative 1.9 versus 2.0 draw last time. And then crude oil 1.234, estimate was draw of 1.1. Gold coming down a little bit. Oil's getting a bunch of wicks. It's down, but it's still very high. Distillates, negative 2.5 million barrels. Estimate was negative 1 million. Snap CEO, yeah, he is live. This is Evan Spiegel. He looks so nice.
I started building Snapchat with my co-founder, Bobby Murphy, when I was 20 years old.
He still looks like a child.
We designed Snapchat to solve some of the problems.
I think he's married to Heidi Klum.
When we were teenagers. We didn't have an alternative.
You have a great hairline, though.
That meant picture share.
But I don't care. I'm waiting. I need Mr. John Kennedy. That's all that matters from that one. All that matters from that little government thing. Oh, Miranda Kerr. Yeah. I'm not Heidi Klum. I'm old. Miranda Kerr. OPEC January oil output falls by 410,000 barrels a day from December to 26 million barrels a day on new cut pledges and Libya outage, Reuters. eBay, they got a fine for selling pill presses, but I don't even think they reacted to it. They were already down. NYCB, surprise increase in loan losses due to bad commercial loan, and then they had to cut dividend by 75%. UPS. SPY flush a little bit. Again, maybe we get to the 2 week low. That's going to be like what? There's both 48.68. That's like one level to watch to the downside. And then like 48.45. Otherwise, it's going to try to magnet and chill around there. But again, be prepared for how we're going to, if we keep coming down, you're going to get a little bounce. We're going to like level out at a certain level right before Powell. So just keep that in mind. It's going to find, maybe watch if VWAP actually does decline. We might just be at VWAP by the time Powell or the release is coming out. Would I do a 2 standard deviation on TLT? Maybe, but I think you just want, like, the thing about TLT is just getting the moves. If that makes any sense. Yeah, my scanner was tripping out. So it's like, it's one thing. Can we get a 2 standard deviation move? Yeah, but in general, the history behind the bonds today is just saying, something good. Do we have 1,000 likes? Could we talk about it now? I think we needed like 15 more. BTC stick. Hit him up with a stick. Oh, 1,200 is what Carissa says. It is Powell Day. There is a Powell premium. But I feel I'm in a good mood. How about 1,100? We need like 40 more now. We hit 1,000. We'll do 1,100, 1.1. I think that's fair. We'll give them a Powell Day discount. Because we want to encourage people to pay attention to the Federal Reserve. My mom still thinks Jerome Powell is a furniture store. You know what I'm saying? So, I don't know. Just 1,100. We're right there. 20 beautiful souls out there. There it is. So, we talked about this on the watch list yesterday. Here's the deal. It is a phenomenon. They've actually studied this. So, there's like people in Harvard who have done their doctorate on this topic. It's actually kind of funny if you think about it. So like some of you, I don't know where you go to school, you could write a doctorate on something like this if you would like. You're getting to graduate school, you're going for your PhD, Literally, no matter what happens on the Fed day, the bonds get bought, a.k.a. the yields go down. So like literally, if you look at the 3-day window from even March last year or 2022 to December, when we started raising rates, even though we were raising rates and it was very bearish and rates should have gone up, people bought the bonds in the 3-day window of the Fed. So it's like the day before and then today and then pretty much the next day. Or it's like it should be 3 days, but it's technically around 4 days. But even the 3 days, day of the Fed, and then the 2 days after, bond yields always trend down. And why do I say always? Because literally even during the most aggressive tightening cycle, we're flushing right now, taking another L. Again, I'll tell you I already told you the price levels. We'll go back to it. So that's fascinating. So even last year, the last 2022, most aggressive tightening cycle, the Fed day and then the 2 days after the Fed, the bond yields went lower. That makes no sense, right? Even if Powell raised rates, bond yields would go lower. And then if you look at the non-FOMC that same year, the bond yields would go higher. So when it's not the Fed day, people sell the bonds. But on the Fed day, people buy the bonds. And then if you even do the same thing from 2010 to 2021, the same thing occurred. People would be buying the bond. It was even bigger during 2010 to 2021. So another 10-year period, same thing occurred. And then non-FOMC, this was the bond eternal bull market. You know what I'm saying? The bonds would just always go down. So there's a lot of reasons. The one Harvard dude who wrote a doctorate on it, his assumption is that it's because the Fed always reestablishes their goal of 2.5. That's why it's always there. Boeing expects NTSB probe into MAX incident to narrow quickly. So in general, though, you kind of have it's not, who knows? Again, like I'm saying, the problem is the bonds are up today. So the bonds could still sell off and end green. It's not going to be just buy the bonds and you make money today, but for the most part, there's a slight tilt. Today, in the next 2 days, bonds should have more upside or more things in their favor than not. Oh, and then you have the peach. What about the peach history on FOMC? Oh, my goodness. Ladies and gentlemen, boys and girls, Peach Nation, get your ass up. The peach is here. Bradley Frizzle and the peach, ladies and gentlemen. Or no. Let's go. Oh, my goodness. Oh, my goodness. It's a blessing. Wow. It doesn't matter what the bonds always do because I know what the peach will do. It's there, baby. God bless you, Bradley Frizzle. That's amazing. Oh, my gosh. I'm kind of getting sad, bro. I love the peach. I love the peach, man. Now it's become too ingrained. It's here every day. Oh, man. I'm getting sad. Now I don't even want to think about a day we don't have the peach, man. This is amazing. It's amazing. You want to hear the Boeing conference call? I mean, we can listen to it, but I don't know. I don't really like the Boeing guy. And then he likes to yell a lot. All must be revealed. Let's see, Bobo. It's going to be loud. I feel like David Calhoun likes to yell at people. I'm going to register as Alaska Airlines. Email doorwideopen@gmail.com. Company Salvage Title Airlines LLC. Company role. Oh, it put me at Southwest. What the fuck? Wait. Company role. Production.
What's needed. We will simply focus on every next airplane.
I told you he yells.
Ensuring we meet all the standards that we have, all the standards that our regulator has, and that our customers demand. As we go about that work, we remain confident in our recovery.
The Starbucks 100 that's
we've
great.
Been focused squarely on inculcating safety and quality into everything that we do.
And
getting back
Pfizer
to our
above
legacy
27,
of having
but if those
engineering
wake up,
excellence
that'll be good.
at the center of our business. That focus and commitment is unwavering, and we will continue to strengthen our processes and our execution every step of the way. Most importantly, we will be transparent every step of the way. And with our 170,000 employees in mind, I'd like to close with a message directly to our team. We have confidence in you, and we have confidence in Boeing. We have confidence in our airplanes. I know how seriously you take your work. Our men and women on the manufacturing floor and in our engineering offices know exactly what we must do. You know your work better than anyone else on the planet. Use your voice. Speak up. Focus on every next detail. We will seek out and act on your
said
feedback.
the guide IPO below range.
We're in a challenging moment. We will earn trust back through demonstrated action and a commitment to total transparency. I'm confident in you, I'm confident in our company, and that together we will do just that. Brian, over to you.
Thanks, Dave, and good morning, everyone. Let's start off with the total company financial performance for the quarter. Revenue was $22 billion. That's up 10% year over year. Growth was driven by higher commercial volume and favorable mix. The core loss per share was 47 cents. Better than last year, primarily on improved commercial volume, better mix, and lower abnormal costs.
He might talk
They
guidance.
were offset by lower defense margins and higher period expenses, including R&D, which we expected. Free cash flow was $3 billion in the quarter, in line with the prior year and up sequentially from the third quarter, primarily due to improved commercial deliveries and strong order activity, which drove favorable advance payment timing, some of which was anticipated in the first quarter of 2024. Turn to the next page, I'll cover Boeing commercial airplanes. BCA booked 611 net orders in the quarter, with 411 737s, including an order with Akasa, 98 777Xs, largely an Emirates order, and 83 787s. We have over 5,600 airplanes in backlog valued at $441 billion. BCA delivered 157 airplanes in the quarter, and revenue was $10.5 billion. That's up 13%, driven by higher wide-body deliveries and favorable mix. Operating margin was just positive at 0.4%, driven by returning to normal 737 delivery levels in the quarter, improved mix, as well as lower abnormal costs associated with getting to 5 per month on the 87 and resuming production on the 777X. Now I'll give more color on the key programs. On the 737, we delivered 110 airplanes in the quarter and 45 in December. the program also began FAA certification flight testing on the 737-10 in December. For the year, we delivered 396 airplanes on the upper end of the revised guidance range we provided in October. Per the FAA announcement, we'll maintain production at 38 per month and work transparently with the FAA to complete all requirements for future increases. At the same time, we'll continue to prioritize the master schedule to avoid disruption in our supply chain. On the 737-9, we're actively supporting our customers' return to service activities, and as of today, the majority are back flying. In our factory, we have 10 -9s in production, all of which will undergo the FAA-approved inspection process prior to delivery. Spirit has also adopted this inspection routine in its factory. The quarter ended with about 200 MAX airplanes in inventory. It's important to think about this inventory in three buckets. First,
planes
there are
with doors,
140
planes without them, and ones that
built
fall
prior
off.
to 2023.
What?
The vast majority are for customers in China and India. We still expect to deliver most of these airplanes by year-end as we work towards shutting down the shadow factory. In the second bucket, there are around 25 airplanes produced in 2023 that are still in WIP, given the disruptions in the second half of last year, and we expect these to deliver in 2024. And lastly, there are approximately 35 -7s and -10s that we will deliver once those airplanes are certified, the timing of which will be determined by the FAA. Moving on to the 787, we delivered 23 airplanes in the quarter, including 11 in December. For the year, we delivered 73 airplanes, within the guidance range we originally outlined for 2023. The program successfully transitioned production to 5 per month in the quarter, and still plan to steadily work our way to 10 per month in the 25-26 timeframe. We ended the quarter with approximately 60 airplanes in inventory, about 50 of which require rework, which continues to progress steadily. We still expect to deliver most of these airplanes by year-end as we finish the rework and shut down the shadow factory.
That's good news.
We booked $77 million of abnormal costs in the quarter and have approximately $300 million left to go that will wind down by year-end, in line with our expectations. On the 777X, we resumed production in the quarter and continue to progress along the program timeline, which remains unchanged. During the quarter, the Emirates order for 90 777Xs brought the program backlog to more than 400 airplanes and also extended the accounting quantity. We continue to follow the lead of the FAA as we progress through the certification process, including working to obtain approval from the FAA to begin certification flight testing. We booked $71 million of abnormal costs in the quarter, which is now fully behind us after resuming production in line with our expectations. Moving to the next page, Boeing Defense and Space. BDS booked $8 billion in orders during the quarter, including the Lot 10 award from the U.S. Air Force for 15 KC-46A tankers. The backlog is now at $59 billion. Revenue was $6.7 billion, up 9% on the tanker award and improved volume, and BDS delivered 52 aircraft and 2 satellites in the quarter. Operating margin was minus 1.5% in the quarter. A sequential improvement from 3Q, but still we have more work to do. 4Q results were impacted by cost true-ups on 3 fixed-price development programs totaling $139 million, as well as unfavorable performance and mix on other programs. Our game plan to get BDS back to high single-digit margins by the 25-26 timeframe remains unchanged. Our core business remains solid, representing 60% of our revenue and performing in the mid to high single-digit margin range. The demand for these products is very strong. We need to execute, compete, and grow these offerings.
Bob, again, Boeing's been going up.
On the 25% of the portfolio primarily comprised of fighter and satellite programs,
confident again.
Operational performance stabilized as we exited the year.
Sadly, it sounds like
nothing
is getting in
the
their way.
fourth quarter saw improved margin trends, although still negative. We still expect to return to the strong historical performance levels as we roll into new contracts with tighter underwriting disciplines as we move into the 25-26 timeframe. Lastly, we have our fixed price development programs that represent the remaining 15% of revenue. Despite the relatively modest cost true-ups in the quarter, we continue to focus on maturing these programs and retiring risks quarter in, quarter out, and we made some good progress in the fourth quarter. In addition to capturing the tanker award from the U.S. Air Force, the program delivered 9 aircraft in the fourth quarter, continuing to build positive momentum in spite of the supply-related disruptions to the factory that we faced earlier last year. And on the T-7A, the first Red Hawk arrived at Edwards Air Force Base in November.
Yeah,
formally starting the Air Force development flight test campaign.
I don't know if
for
it's
the
going to
aircraft.
wake up those contracts.
Overall, the defense portfolio is poised to improve. There's strong demand across the customer base, the products are performing in the field, and we're confident that our efforts to drive execution and stability will return this business to performance levels that our investors recognize. Moving on to the next page, Boeing Global Services. BGS had another strong quarter. They received $6 billion in orders, and the backlog is now at $20 billion. Revenue was $4.8 billion, up 6%, primarily on favorable commercial volume.
Not a
mix.
recommendation.
Operating margins were a very strong
17.4%, only one of them.
An expansion of 350 basis points versus last year, as both our commercial and government businesses were delivering double-digit margins. In the quarter, BGS opened a parts distribution center in India and received a follow-on contract to provide sustainment for the C-17. Turning on to the next page, I'll cover cash and debt. On cash and marketable securities, we ended the quarter at $16 billion. On debt, the balance remained flat at $52.3 billion. And over the next few days, we'll pay down $4 billion of the $5 billion of maturities coming due this year from our available cash on hand. We continue to maintain access to $10 billion of revolving credit facilities, all of which remain undrawn. Our liquidity position remains strong. Our investment grade credit rating continues to be a priority, and we're developing deploying capital in line with the priorities we've shared previously. Invest in the business and pay down debt. Turn to the next page, I'll cover full year financials.
Okay.
Full year revenue was $77.8 billion, up 17% year over year. Growth was driven by improved commercial volume, primarily on higher 787 deliveries. The core loss per share was $5.81, better than prior year, primarily on improved commercial volume and mix, as well as lower fixed price development charges in defense. Free cash flow was $4.4 billion for the year, up versus prior year, primarily on higher 787 deliveries and favorable receipt timing that was partially offset by higher expenditures as we increase production rates and invest in the business. While we're postponing issuing 2024 guidance today, given our current focus, we're committed to sharing timely and transparent updates moving forward. I would like to provide some additional context on our path forward. We always knew 2024 was going to be an important year in our recovery. Based on what we know today, we expect another steady year of free cash flow driven by the 737 production at 38 per month, ongoing execution of the 787 toward our long-term objectives, continued liquidation of our 737 and 787 inventory, and continued focus to wind down both shadow factories. Our defense business will continue to improve as we mature fixed price programs and transition recently challenged programs with better underwriting disciplines that we've already started to see. And BGS will continue to generate strong free cash flow. Longer term, we're focused on quality and stability, which will ultimately drive free cash flow. Nothing has changed on the demand front, and the backlog is strong and growing. Remember, our 25-26 guidance was based on achieving stability, and we have to earn that by applying resources to fix our issues and demonstrate predictability one airplane at a time, side by side with our regulator. This team is up to the challenge and will apply any and all resources to get back to deliveries that satisfy our customers and underwrite the long-term demand profile. We're still confident in the goals we laid out for 25-26, although it may take longer in that window than originally anticipated, and we won't rush the system. With that, I'll turn it back to Dave for closing comments.
Yeah, thanks, Brian. We're addressing you from Renton, home of the 737 MAX family. We're living in the here and now, and we're working with all of our people. And I couldn't be more impressed with their commitment, dedication, and the comprehensive nature around which they will look at this. Boeing will get better. I am confident in that. We will address everything that needs to be learned from the accident, and we'll move forward. So thanks. Happy to take your questions.
Thank you. And in order that your question be clearly heard, we ask that you not use a speakerphone, cell phone, or phone headset. Please use your handset to ask a question. If you're on a speakerphone, please be sure to use your mute function. That your mute function is switched off so the signal can reach our equipment.
How many times?
And as a reminder, in the interest of time, we're asking that
there's no video on this.
Up to one single part question.
This is just a conference call.
And our first question is from the line of Peter Armet. Please go ahead.
Yeah. Good morning, Dave and Brian.
Hi, Peter.
Dave. Thanks for the initial open color on the MAX situation and the steps being taken. So I guess just to follow on that, Dave, I wanted to ask you about where you assess you are in kind of the recovery of the MAX program when we think about what has been a successful transition to rate 38 and some of the progress in stabilizing the supply chain, and you've commenced deliveries to China. And I know we're not talking about 25, 26 targets, but directionally, there's been a lot of improvement since last fall and since your investor day when you laid out this long-term outlook. Thanks.
Yeah, Peter, I appreciate that. By the way, one stat which I was just handed, which I track all the time, is the number of our Dash 9s that have been returned into service. We're at 129, and that is progressing at a very quick rate based on the inspection protocols that our FAA and we all agreed with. I am very proud of the progress that we've made, and I feel great about it, of course, with one exception, and it's too big an exception, which is the escape. I also know that as the NTSB investigation narrows and concludes, and I do believe that will happen in relatively short order, all the learning that can be extracted from it and all the learning that can be extracted from all those inspections of all those airplanes flying day in and day out, that will inform us on what improvements we can make on our quality systems. First and foremost, we will run the door plug literally from the second a door is received at Wichita through their lines, all 12 positions, through our 11 positions here. Inspections will be added at every turn. It is on lockdown, and we've had help from our FAA, we've had help from our customers, et cetera. So that's sort of step two. The next one is, how do you take all of that learning and apply it through all the supply chain lines? And we have some medium and long-term efforts just beginning to make sure that we do that. My confidence comes from quality systems always can get better. And when you have a moment like this, you take everything. You literally look at everything. And we're all keenly aware of everything. So we're going to run that play as hard as we can. And we're going to take the time to do it. And the FAA, I'm sort of glad they called out a pause, because that's a good excuse to just take our time, do it right. And
I'm glad.
I wish I had called that out on the first day, but maybe I would have. We've been good at taking pauses.
Yeah, you have.
I've probably taken more pauses in the last 3 years, and I'll apologize to all our investors now, than have been taken in the 10 years before it. But this is what we do, and it's how we get better. And I also say, Peter, as you know, one of the nagging issues that we've been facing have been shortages here and there, where we have to pause our line. Buffer inventory is not quite as robust as we'd like them to be based on supply chain weaknesses. We will run our master schedule in accordance with the plans that preceded this. And each and every part we receive and all the buffer inventories that we get will stabilize production here on out. Less traveled work in our line, all things good come from that. So I feel really good about it. And I also have confidence in our airplanes that will be certified. I I like the respect that the FAA and Boeing are showing one another. Again, maybe too long a diatribe, but there are lots of sound reasons for why I'm feeling good, and in some ways, this moment will accelerate recovery, not delay it.
And just initial progress on China. Thanks.
Yeah. So, Peter, as we've talked many times, we have stood by our customers in China day in, day out. They have been flying MAXes now for the better part of a year. They are performing extremely well. And we'd always hoped and expected they would begin to take deliveries. And I think everybody has noticed that those deliveries have started. So we are just going to stay diligent, stay with each and every one of them, and make sure
Microsoft at the low,
our Chinese customers get what they've ordered and paid for.
Thanks so much, Dave.
Yep.
Thank you. The next question is from the line of Sheila Kahyaoglu from Jefferies. Please go ahead.
Good morning, Dave and Brian. Maybe if you could update us on how you're thinking about the MAX 10 and the MAX 7 certification timing, just given the MAX 7 exemption being withdrawn. What does it mean for the 10, and how does that phase in as you think about ramping production to 50 a month and the profit profile of the MAX line if there's no MAX 7 or 10?
Sheila, thanks for that question. I'm going to just give a little bit of a moment on why we made that decision on the time-limited exemption. I'll let Brian help quantify it. I visited Capitol Hill for a lot of reasons. My biggest one is to own the problem, be transparent, and convey that to all of our workforce, so that they know we're willing to do that, and then we can all be honest, clear with each other every step of the way in this process. And I'm glad I made the visit. I was not expecting, when I met with Senator Duckworth, the conversation that we had. She's a pilot and a decorated pilot. She listened to everything I had to say. We didn't have a debate about the safety
getting a little
of the
bounce
7.
off of that low for the last 10, 15
and the 7
minutes.
in its certification work was moving along at a pretty steady pace.
We went to the 4A4, right?
She had a way different argument for me, and it was right.
That was baby level number 1.
She said, you want to introduce this new airplane, a derivative, yes, but a new airplane.
After that.
And 9 months from now, you'll have an engineered solution to this issue. And why is that the right call? And in my view, it was a sound, principled position to take. I went home for the weekend. I talked to our customer, and you know who that is. Unbelievably constructive, and this is the right thing to do for aviation. So that is really how it happened, and it was that simple. But the passion and the argument that Senator Duckworth presented to me, I'm so glad I heard. Anyway, that's what happened. The 7 will have to move until we get that engineered fix in place, and then I'll let Brian sort of quantify okay, now what?
Yeah. And on the 7, the work at hand, we will design an engineering solution. We're applying the resources. Our view that could be within a year. But on the 7, remember, while it's a very, very important customer, the number of deliveries you're talking about is relatively small. As I mentioned, we've got 35 of Dash 7 and Dash 10s in inventory at the end of the quarter. There's a handful of 10s. They're mostly 7s. So we'll sort that out as the process works and that airplane per the FAA gets certified. On your question on the Dash 10, I prefer not to get into what ifs. It is a great airplane. Customers love it, and there's great demand for it, and it'll get certified at some point when the FAA decides.
It's a great plane. It just needs to be legal to fly.
Okay, thank you.
Because the doors keep falling off.
Thank you. Our next question is from Miles Walton from Wolfe Research. Please go ahead.
Thanks. Brian, you alluded to 2024 being another, I think the words were steady year of free cash flow. I think in sort of follow-on descriptions, you gave a lot of uppers to what's going to happen year on year. So is steady meaning growth in free cash flow, and or can you give some of the offsets to the uppers? Thanks.
Yeah, thanks, Miles. So I did describe some of the key ones. Obviously, BCA volume up, BDS less of a drag, BGS steady, there's a big investment in there that probably should have called out, now that you're asking, is the 777X investment. That's important and that's big. And also, we got a plan for, making sure that we stay laser-like our supply base on the master schedule.
Coin on the high.
We don't want them to take their foot off what they're doing. And if that means we got to hold more inventory, so be it. It's important because at this moment, it will allow us to have any of our suppliers that might have been at the line, might have been short of the line, they get a chance to catch up. So all of that in the mix are levers that we got to deal with as we move into the year. And in terms of what steady means, our belief we stand here today, the bottom end will look a lot like it did last year and maybe a little bit of growth. And once we know more, we'll put more specificity around it and we'll give normal guidance when adequate and when appropriate.
Okay, thank you.
Thanks, Bob.
Thank you. Our next question is from Seth Seifman from JP Morgan. Please go ahead.
Hey, thanks very much, and good morning.
Morning, Seth.
Brian, you talked a couple of times about the shadow factories and the path toward winding them down over the next year and change. Is there any way to quantify, how you think about what the cost of those shadow factories was in 2023 or what you expect it to be in 2024?
Yeah, so thanks. I would, the impact you're not going to see in 2024 just because we still have to move that work through the system. But as we exit, it will largely be behind us. And as we think about our expectations on BCA profitability over time, we've always talked to it getting back to normal. A lot of that productivity will be not only what volume might look like, can't say a lot about that now, but also we don't have this resource with these shadow factories. So we won't quantify it specifically, but it is an important component as we think about going from what our profitability has looked like at BCA historically and where we think we can get to.
And maybe I'll just add and refresh everybody's memory because we've talked about it a couple of times. In our shadow factories, we put more hours into those airplanes than we do to produce it in the first place.
All moving up.
So anyway, that's a metric I know everybody understands.
Great. Maybe if I could sneak in one more to the advances.
FTX expects to pay
it was a nice
crypto
tailwind
customers in full in
23.
bankruptcy liquidation.
How do you think about that?
FTX
in
has
24?
abandoned efforts to restart crypto exchange after no
right
buyers
now,
emerged.
we plan for obviously not to be quite what it was in 2023. That's factored into my comments. The good news is that we still have a pretty robust demand environment, and our commercial teams are working hard to chase every next order. So we're not counting on a big one, but we know that our teams can go win campaigns.
GM is still going too.
Thanks very much.
That's been nonstop since yesterday.
The next question is from Jason Gursky from Citi. Please go ahead.
Hey, good morning, everybody. Brian, just maybe a quick clarification, or maybe Dave, and then a question on defense. The clarification on the rate.
Boeing getting another high though. Conference, everything's going good so far.
Some blanks so that the number that you're actually
nobody really cares if you notice. They don't care about the doors as much as you do. Everyone's talking about the growth, the recovery, and everything else about Boeing.
25, 15
Welcome to Wall Street.
You talked a little bit about the 25% bucket and the 15% bucket in your remarks. I was wondering if you can just comment on the 60%, the remaining part of the portfolio, and how that's performing and where maybe margins are in that slug of business at this point. Thanks.
Sure. I'll take the first one. Yep, we've cycled to 38 per month. We said that. Keep in mind, it always takes time for that to equate into deliveries, but we're not firing blanks. On your question on the 60% of the portfolio on BDS, look, they've consistently, quarter in, quarter out, has still been able to deliver some very good performance on some products that the customers need. And the laundry list that we talked about, things like Apache and all that sort of stuff, missiles and weapons, things that are needed right now in this environment that we live in. And they're performing well, and they're in that mid to high single-digit margin rate. And when we step back, if we think about going from where BDS is with margins, two things have to happen. That 25% that's wrapped around fighters and satellites, that has to get better. We feel like expected to get better and look a lot like it used to. So then you've got 85% of your portfolio clicking at stable, consistent, mid to high single-digit rates. And we know we can get there. And then you've got this 15% of the portfolio on fixed-price development programs that we expect to be less of a drag as we retire risk over time. And we expect that to play out.
Great. Thanks.
Thank you. Your next question is from Doug Harned from Bernstein. Please go ahead.
Good morning. Thank you.
Yeah, hi, Doug.
Hi. I want to go back to the MAX 7 and the MAX 10 certification. And the question I have is, when you look forward, and given there's uncertainty on the timing of the certification of each one of those, and you look at both the mix in your customer demand, and certainly you've had more demand than you can respond to given supply chain issues. First, let's say that mix changes because of the timing of certification on those two variants. Do you still see your line as full because it could be moved around between Dash 7s, 8s, 9s, 10s? And then second, what kind of operational challenges, if any, do you have when you have to have some flexibility about what variant you're producing?
Doug, I'll just start by saying I think it's manageable. We will have this. If there's a delay in any way, we're not going to know at the last second. We're going to know with a considerable time frame, in my view. And by the way, right now, the status on the 7 and the 10 was progressing reasonably well. I don't believe the FAA has taken anybody off the course, and we haven't taken anybody off the course. And so they are making real progress. And I think we were almost close to the finish line had we not pulled, the time-limited exemption. So I don't, again, I'm never going to suggest a date or anything like that for the FAA, but they're working diligently on it, and they know how to separate these two, the issue we're wrestling with in our factory from the cert efforts. And I believe we're going to have plenty of time, and we'll be able to manage our product mix reasonably well. There won't be anything dramatic by way of change. If there are some subtle changes from quarter to quarter, first or second, you'll know it pretty early, and so will we. And I think it's quite manageable.
So is it fair to say that the supply chain ramp is probably still the governing constraint on your production ramp, not things like mix here?
Yes. Although I will say, if this pause goes on for a little while, I don't want to pause my customers, but the pause is going to be helpful for us in so many ways, in the sense that supply chain, they're going to keep running according to that master schedule. It's good for us if some buffers get developed and some of the more stressed suppliers get ahead of the game. So there is important progress that will get made despite this momentary pause.
Very good. Thank you.
Yeah. Thanks, Doug.
The next question is from the line of Ron Epstein from Bank of America. Please go ahead.
Hey, Ron.
Yeah, good morning. Hey, good morning. How are you? If I may, I got a two-part question, if that's okay. The first one, if you guys could walk through 787 a little bit. You mentioned the rate, what's going on in that line, that sort of thing. We get questions about that, and then I'll come back with the second part in a sec.
Yeah, so on the 787, there's nothing new on the 87. Team's doing a very nice job. We'll produce at the 5 per month rate, like we described. We expect to steadily increase those rates over time and liquidate a lot of inventory. And we'll give more dimensions around the specifics in line with normal guidance, but the program's doing just fine, and the backlog's big.
Yeah, it's been doing great. And then maybe the second question. This one's maybe a little more difficult. I'm still trying to get my head around how we got here. Meaning, if you go back to the beginning of the MAX issue, wasn't the 737 line like the most scrutinized production line in the world? So, what happened to get to where we got today?
Now they're asking.
I understand that revamping the quality system and all that is all great news. It's positive move forward. But why did that have to happen now? And I just don't understand that.
Well, Ron, it should never happen. So the question about now is not so relevant. It should never and can never happen. I am incredibly proud of the work that our people do on the 3.7 line. I think it has steadily progressed. Quality numbers have gotten better, but when you have an escape, and then when everybody concludes exactly what happened in that escape, that lights another fire. So you take another step forward with respect to all things quality, and you make certain that whatever it was that created that opportunity for failure in the sky or in flight can never happen again. And that has already happened. And then we'll learn from everything. So, I think I understand your underlying context for the question, but I probably take exception to that premise.
Okay.
The next question is from the line of Kai Van Rumer from TD Cowen. Please go ahead.
Yes, thanks so much. So now that you've waived the exemption on the engine anti-icing and you're designing the new system, you said it would take about a year. Have you accelerated that at all? And could you accelerate it more? Because my assumption is that is going to be the long pole in the tent in terms of when the FAA can certify the MAX 7 and 10.
I think that is an accurate statement that you just made. Given the fact that we made this decision just a couple of days ago, needless to say, we will throw more engineers at it. We're going to put more work into it, and I hope we can accelerate it. And the 9 months that I discussed with Senator Duckworth was based on my understanding of that project before I made this decision. So the answer is yes, we'll step up resources, we'll step up whatever testing is required. We will do everything we can to inform the FAA about that particular part of that program. And that's where we stand today. And you are correct. That is the pole in the tent all of us should be watching.
Terrific. Thank you. And then another quick one. With the supply chain running at the master schedule, but you're delivering not quite as many, should we think about a fairly large build in the inventory account here in the next couple of quarters until you get
beyond my plan will be if the bonds come up here.
Yeah, there's two things, Kai, that are going to be things we have to deal with in cash flow. One is going to be the 777X investment I discussed, as well as what you just described. And that's contemplated in my description of what we thought the bottom looked like. And then we just got to go run the play and work through what's in front of us. But more work ahead, and we'll describe it more specifically as we move through the year.
Thank you.
Hey, Lois, we have time for one more question.
I'll go over it after this question.
Come from Noah.
Yeah, Boeing's been up $3 since that
Sachs. Please go ahead.
thing where it started sounding good.
Hey, good morning, everyone.
Hey, Noah.
Hi, Noah.
Might go over one if I'm last, but Brian, recognizing that there's some limitation here in how you can discuss it, but maybe just trying to talk out MAX units this year with assumptions of not breaking to higher rates. You made it a point to say you're at 38. I know, that rate, final assembly, where the entire supply chain is always a different number. But, if I just simply said 31 for 6 months and 38 for 6 months, that's in the low 400s, and then you unwind 5 to 10 of inventory a month, I can kind of get, somewhere near 500 or just decent growth from 2023. Is that just a reasonable starting point as we wait to learn more from the FAA?
Noah, I completely understand the question. Those are the inputs I described. But, I out of respect for the process that we need to go through the FAA, I just got to steer away from specificity. It's just not the right time. We've got work in front of us, and I promise, when appropriate, we are going to be more specific. But anyway, it's probably going to be on the specificity of those numbers. Wait and see. It's just not appropriate.
Yep. Fair enough. Are you willing and able to speak to just updating what the cap is these days on the monthly inventory unwind and how China plays into that?
I don't know we think about a cap. We've got these shadow factories that have been working for, quite a while, and they know the routines, and they've been pretty steadily on both the 3.7 and the 8.7, consistently meeting month in, month out liquidation targets and expectations for customers. So I don't think there's any kind of cap. We're just focused on, we know exactly the PHILO's inventory. It's 140 on the 3.7 that I described. It's 50 on the 8.7 that have to get the rework, and we're just going to move through this year with real focus in order to be in a position where we start shutting these shadow factories down. And then we're just going to run that play as hard as we can.
Okay. And is China officially fully 100% taking deliveries? We see it in the press. We see the reading of the tail number websites. But can you just declare that that's just fully officially on at this point?
One at a time. And yes.
Okay. And then, Brian, just one more defense. The margin's still not where you want it, but better sequentially. Any framework you can provide around how that progresses through 24? And what was the final defense cash burn in the 23 cash, so we can think about where, what to work off of as we go into 24?
Yeah, so the cash burn, we put out some numbers a year ago on what we thought the operating cash was by division.
Factory, I'll explain
BDS,
that's supposed to be the last question.
The worst case end for them in that range.
Honestly, we can wrap it up.
They were much worse than that. And that.
Thank you. So a Boeing shadow factory, they have like mechanics in Everett in North Charleston that instead of building new planes, they restore the parked Maxes and the 787s that have long delayed deliveries. So that's what it is. They kept talking about that. You guys are like, what's a shadow factory? And then I made a play on the bond futures on the 10-year. I'm already in the 30-year or a bond option. And the idea here is if I want to dump the 30-year, I could hold the option. So if we get a little bit more run up in the next 3 hours ahead of the event, I'll be able to have some flexibility to either dump or hold. So we will see what happens. But, yeah, I'm going on the call side on the yield. I think yields will go lower today or over the next 3 days, more or less. But, yeah, man, you got a little bit of movement there. Boeing did, again, they were sounding good. They were focusing a lot on deliveries. If you ignore the door flying off, which is kind of hard to, but, again, a lot of the analysts, there was a couple of good questions on it towards the end, but for the most part, again, everybody's looking at their recovery still, how much money they're going to be making, what they plan to be doing, and that, honestly, it got things up there. Again, what they were talking about with deliveries, it didn't sound like, based on the sound of everything, it didn't seem like what was going on was going to slow down their plans of ramping up deliveries on these planes. So we'll see. TLT March 2.0, I don't think so. Not until we get like real rate cuts. But again, I just think there's going to be a lot of bond volatility for sure. But I don't know if it's going to have a monster move, 5-6 standard deviations out of the money based on what Powell says. So we will see. We will see. You think that text dropped after good earnings is to price in what the Fed's going to say? I just think the bar was really high. That's it. Again, not necessarily the bar as much as the valuations. Again, we've seen this before. I think it was around the first times we've done any of the AI stuff, but the stocks just started moving so much. So Microsoft, AMD, they all had crazy run-ups there. So the fact that they went up so much and then their earnings weren't like blowout numbers. Again, AMD I think is a great example because they moved so much leading into their earnings, and then they didn't really have, not everybody reported like it was NVIDIA or SMCI and everything else. So I think that's why they went down. I mean, the Fed, there's a lot of implied volatility coming into it, and people are, getting a little nervous on it, but not necessarily. It's not always bad, but I don't think that the Fed was the reason why these earnings went down. Yeah, Boeing, literally, it's up another $4 since there. So they're killing it again. Market had a little bounce off of one of those soft levels back to 48.90. So again, like 48.84-ish. And you got a little bit lower if we do drop. Otherwise, we're going to dance around. Like I said, I'd watch VWAP coming into all of this. Again, I think we're going to get a move on Powell. And then, again, you're going to move a lot into it. And then right before his event, I think we're going to get the move. And then, again, the statement, there is expected to be a change. We'll go over all of that like 30 minutes ahead of the event. I'll go over some of the preview for you, and then we'll be good to go. Again, it should be easy. You think Google will recover? I think if a lot of the other earnings get better, then if analysts come in and then, you know, other broader factors like rate support, I think they will. But if anything, Google's still up. I mean, the paradox of what's happened with these earnings, like they're kind of where they were. Google took a bigger drop, but I think even like Microsoft, like it didn't change anything. You know what I'm saying? They had their earnings after the other companies reported, like SMCI and all of that, and they just held up. So that's why it's like, yeah, names came down, but did like they really come down? Apple was already getting dumped off the chip stuff, so some more than others. But I think it's just really going to depend on the broader factors there, and then let enough time go by without bad news, it'll be able to do its thing. Otherwise, people will start kind of downshifting, analyst expectations come down, and then there you go. This is the change that the Powell has made, Wonder where Tesla... Again, Tesla's reacting to the compensation thing. Some people were arguing that it's better for shareholders, and I could kind of agree on that. So it's interesting that they were down. Again, people are probably worried if Elon's going to take his ball and go home. I think that would be the only risk with that. But other than that, I mean, it's pretty decent. And then there's Tilt coming down. Would I buy the dip on Google? No. I still think, again, these names are at all-time highs. I'm not really, I'm not too keen on these. So I guess it's came down from the all-time highs a pretty big amount, but even then, I mean, we should have been buying Google at $90 and $80, maybe like $120 if you wanted the middle, but that's in between the highs and the lows. But I like Google. I don't think they're a bad name, but I just think there's way more value out there in the market that you could get instead. Have I changed my opinion on BRICS? No, not at all. I think the BRICS is a total distraction, let alone I don't think it's going to have the weight a lot of people think it would. My email is tradingfraternity@gmail.com. Good morning. We living good. I'm excited for Powell, man. I'm excited for Powell. Again, this is just remember, last time we had Powell, December 13th, man, a lot changed. There was a summary of economic projections, but, you know, even then the market is like, I don't know. I feel like the market today is going to be like, you know, like some of y'all like getting complimented, right? You're like, tell me again. Or you ever tell your girlfriend a compliment and then she finds a way to have you repeat it? That's what I feel like today with the market is just, even though Powell, he might push back. That's the only risk. But I feel like, you know, even right when the statement comes out, you know, people are going to be like, oh, yeah, we're making progress on inflation. Tell me what happens next. Oh, yeah, what kind of progress? Yeah, good progress? Yeah, great. Okay, progress that, so the rates, you're not going to tell us, you're not raising, but so March may be a possibility. Maybe, I don't know. I know it might won't happen, but maybe. So we'll see. We'll see. You got Euro close in 2 minutes here. Or I guess 1 minute. What time is Powell coming on? How did you get to this video today? Did you spawn here? How did you spawn in the video? I saw this question like 3 times today on both like the Twitch and YouTube. But like legitimately, the title of the video has the answer to your, like, what did you do? Like, how did you arrive here? Like, you just clicked it. You didn't even, like, care what the title is. I'm going to make the title something ridiculous. Tomorrow is going to be, there's the chicken out the hen coop, and you got to get it running and stir up the spindle. I'm going to make that the title tomorrow. Like, but then you guys will be like, Josh, what does that mean? What is stir up the spindle in the chicken coop? I'm not following. But I don't know, man. Yeah. How would you go about investing in the BRICS? I wouldn't. But I think the play you'd be looking for would be either gold or buy another currency. But that's or I mean, again, investing in certain emerging markets. But I like that idea without what's it called? I like that idea without like a BRIC situation. Like I think going after some emerging markets right now, and it's one of the most active trades. So like literally, I think last week, more money than ever has flowed into the emerging market trade. So even then, people like the emerging market trade, excluding China, but even in general, there's those opportunities on that end. The bond, the refunding, it was actually slightly higher, but borderline in line, and then there was a kind of reassurance that there wouldn't be more issuance, so people like that. Otherwise, no real big event off of it. But then again, I mean, Janet is still selling more bonds, even though the borrowing estimate went down. But it was in line with the last couple of times they've done it. And then now the future looks a little bit more calm in terms of Yellen selling. Would you sell at before the minutes? What do you mean? The statement? There's no minutes today. So depending on the price of the bonds, if I'm like, again, I was up a lot on them earlier. If I could find, and now that I have the options, I'd be down to sell out before and then have some exposure. But if I don't have any way to pull that off, I'm down to hold for today. A big Powell. I think the bonds will be a big Powell move. It just depends what he says. So there's you're going to get reassurance of rate cuts. Pretty much Powell is going to let you know that the door is open, but he is going to try his best to not tell you when he's going to walk through the door. That's the best analogy. So all about today is letting us know the door is open even for March, but we're not going to know when he's going to walk through it. There's a couple of clues. Again, like I said yesterday on the watch list, if he says certain things, it will be extremely bullish, but he's not expected to say them. But then at the same time now, if Powell does come out with pushback and he does kind of, echo some of the other Fed members and gets a little bit more aggressive and, he really, lets you know the door is opening, but he's like, I'm really not walking through it on this time frame, and it's really aggressive, the market could get a little bit of a hiccup off of it. But that, again, most people are leaning towards the more positive side. The BT, if he talks about, that's the key to today, the bank term funding. He's not supposed to tell you when it's going to end. But if he does, that is really bullish. It's very obscure if you think about it, but it makes a lot of sense. Because if he is giving you like a strategic, hey, this is exactly when we're going to be ending these certain programs, and he's confident that they're going to end it, he's probably confident that rates will be lower. So if the more he is like really specific about it, then we're going to see. They have an end for March 11th, but it's kind of tentative for now at the same time, and there's other funding mechanisms that they have in place. And then same thing goes for quantitative tightening. If he starts talking that they're ending the QT and the balance sheet runoff, the implications of that are very, very bullish. But he's not supposed to. So he is just going to be ending, he's supposed to be kind of talking about him but not really giving you any specifics. And if he does focus on specifics, that's Powell planning. But then that's the paradox of today. He has to, if you really think he's going to cut in March, he kind of has to start being aggressive today. Otherwise, it's not really giving you enough runway to really prepare for that. The new loans end in March, but not the whole facility. So if he starts talking about ending it all and saying, we're going to return to this, no new loans, and then now we have a specific end date of all of it, then that means what is that means why would he end the facility? Because he knows rates are going to be lower and they won't need it anymore. Dollar climbing. Bonds came down a little bit. Bonds are kind of chilling out from the morning. Dollar is coming back up. Still negative. Where's the yen? Yen was up 1% earlier. Yen's still up by 0.9. So honestly, the dollar probably moving off the euro and some other things. Uncle Air, you got a new uncle, baby. Paul Freestyle. Spotify, YouTube, everywhere. Yeah, the Starbucks double clapped. I was trying to go for 2 of them. But no. So it literally went up. That's like a 6% move top to bottom. I think a little more. Earnings on XOM. They're on Friday, so we could go over them on Thursday. They're Friday morning. But other than that, man, today's Powell, there's a lot holding in it. Again, I think the market's going to like to hear sweet nothings in its ear about rate cuts. But then at the same time, does Powell bring the stick? Y'all remember where Powell used to walk around with the stick? Powell used to just be hitting the market left and right. He would keep his speeches short and sweet. He said, we're not even thinking about it. With the rates. And then again, we'll see what he says about real estate. But I don't know if Powell's going to do that, though. Again, last year, beginning of the year, we thought he'd bring out the stick and beat the market. But he didn't. He did the exact opposite and pumped it. Yeah, you haven't seen a bearish Powell in a long time. But then again, maybe it's good. He's given himself runway, strategic ambiguity, but also too he's like, he's not really. I don't think he wants to be. He doesn't want to. He wants to act like this. So when he does shift, I feel like he's trying to give himself a parachute because the Fed is usually late. So just keep that in mind. That's the one thing you can't forget. Above all else, like that, there's 2 sides to the coin for sure. Oh, Mitch Matsuno, thank you for everything and always preaching the long term. Thank you, my friend. Hey, man, I'll give you something special. Here you go. Instead of a horn, you get a... Oh, there you go, yeah. Because here's the deal. There's 2 sides of the coin when it comes down to Powell and his approach and rate cuts. Like I said this one earlier, because let me ask you this. How many of you don't like it that the Fed is going to cut rates? How many of you don't want the Fed to cut rates? How many of you, whether it's for politics, whether it's for inflation, whether you think GameStop is going to come back down, how many of you do not? Who thinks they should not cut rates? Me. I don't mind. Like my highs. Me. You don't want them to cut you. You're a real estate agent too, and you're like, nah, keep the rates high. Me. All right. Man, maybe we should take this to a poll. Maybe I'm honestly a lot of answers. Let's bring it to the people. Let's see. You got a flash poll. That was way too many answers. I wasn't expecting that many. So we'll organize. Do you want the Fed to cut rates? You can vote on it on the poll. Let's see. Wow, it's going 50-50. I think it's a great question. And there's a really important factor to it. the answer to all. This is why, like I said, there's two sides of the coin, baby. There's two sides of the coin. You just had 85 offers on a house in Toronto? My goodness. My goodness. It's literally 50-50. Almost 400 votes. And you guys are 50-50. And the amount of people who want to cut rates and don't want to cut. Wow, look at that. It's a legit 50-50, I know. So vote, man. Let's see. Chat is split. Very interesting. Ain't that some shit? There you go. The yeses are taking over. The yeses are trying to crawl up. This looks like the Fed futures, man. What's my vote? I don't care. That's why I've been saying, people have been asking me what I forecast. I'm watching the broader situation. These are all steps that are part of something bigger. That's why I'm not like it. All that matters is how they do it, when they do it, and if they do it. And that's why it's Powell kicking the can, playing the timing. Because here's the deal. So I'll let you guys keep voting, but here's the paradox, right? Some people clearly don't want rates to be cut. Some people clearly want them to be cut. But think about it. The issue with Powell is that, he could cut it, and that would mean, okay, mission accomplished, and then people would be worried about inflation and it coming back down. But then the other side, you got to think about it. It's like if you don't want them to cut rates, don't forget the Fed is always late. This is what I was saying earlier. So in a weird way, if your Fed doesn't cut, the longer they don't cut, the higher the chances of a financial collapse, essentially. Not even a collapse or a financial downturn. And then vice versa, right? If he cuts too early, they also run the risk of cutting too early, and then the market tweaks out, and then now the inflation comes back up, and then other things start running. So it's a very awkward situation. That's what you got to realize. Maybe correction would be the better word. But then again, though, if at that point, if Powell cuts, if they wait a long time, and then higher rates really start pounding the economy, it may be bigger than a correction. It would just be a recession. But are you feeling me on this? That's the problem that we have right now. You're juggling between, maybe, okay, you don't want him to cut, that would be healthier. But at the same time, if he waits too long, you're going to run into another problem. And then vice versa. If he cuts too early or he cuts it prematurely, this could have all been for nothing. So it's still very awkward. It's not like, when we're looking back and forth, and we're playing this game and it's still taking a couple of years. It's like you keep looking at every side. It's not as if this is it's not that easy. And right now it's just you only get one shot at it, especially because once you cut it, Powell has made it clear they want to avoid the whole cut and try to get back up there. So it's a very awkward situation on both sides. That's why everybody's 50-50, but both sides of that coin have a paradox to it where it could be both helpful and hurtful if he cuts or if he doesn't cut. And that's why, but then again, you just can't forget, even though right now it's looking good, in terms of soft landing, how inflation's coming down, Powell's doing certain things, Powell is in the Fed, even beyond Powell, just bigger than Powell, they do not have a good history of cutting at the right time. I would argue they never have. Maybe the early 90s, but even then, it's still not really it's easier said than done, to say the least. So welcome. And that's why I said earlier, on the watch list and even this morning, this is our fourth meeting of staying paused. So don't forget, 2006, and how many of you remember that? It's funny because I don't think it's a coincidence how it all played out. If you've been watching, there's an example I've been showing you a lot, especially last year. But how many of you remember me bringing up 2001 or 2006? And that's what we were saying with rates and how things were going to play out. 2001 and 1999, the early 2000s, they did that little pause and then they raised again, and then the rates did something, and they did the same thing in 2006, right? But there was two very distinct outcomes that occurred. The markets both went down a couple of years later, but the distinction was that, in 2001 when they did their pause and then they raised again, the rates started rocketing. In 2006, the rates never rocketed, and then it came back down. So we ended up playing out like 2001 when we did the whole like pause and stop and start to go over there. But like I'm telling you, in 2001 or 1999, they had 6 meetings of pause. So they paused and then 6 meetings. It's more than 6 months. I think I could show you the chart. So it was almost like a year, I think, because again, sometimes it's like every other month for a meeting. The duality of risk. They have to fight stagflation and the recession. Amen. And that's why it's like we get very optimistic, we get very bearish, but the task at hand is very difficult. Everything, pretty much be careful what you wish for and be careful for what you don't wish for. And that's because, again, everything, there's a fine print on both of them. Whether we cut or not, the fine print is real. God is good. Tell him, baby. So take a look here. Here's like the history. But like, look at 1999 or 2000, we went up to like what, 5.7 to 6, and then in May of 2000, and then 1 month, and then you waited another 2 months. So even then, this was like 3 months for those 3 meetings, but you stayed at all 6 meetings, and then you cut in January. So you went 1, you stop here, you pause for 1, 2, 3, 4, 5, 6, and then on the 7th meeting you cut. And then in 2006 it was the same thing. You had 9 meetings, I believe. You had 1, 2. This is the first you raised to it. Then 1, 2, 3, 4, 5, 6, 7, 8, 9, and then the next one you were cutting. So that's the difference here. Is that right now? And like, do you guys get it? What am I trying to tell you? So again, we've seen very similar reactions, 01, 08, even things. The size of the cut doesn't matter. It's about momentum, right? That's why the market made a big deal when Powell finally stopped raising rates. Because once he stops, he is going to stop. You can't get the boat moving and stopping that fast, right? That's why when they raise, they keep raising. When they stop, they finally the anchor is going down, and then they go tuk, 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 tuk. The nails or the chain starts going down to the bottom of the ocean, and then finally they're trying to anchor it right there. So they're not going to keep moving it. But what do you see there? It's like, so we're going over the back and forth right now. Why by too early or too late, cutting or not cutting, both has its consequences. But now, like looking at kind of some of the recent history in the last 2 decades, where are we right now? That's what I'm really asking you. Where are you? Think about it. If this is 2001 or the 1999s to 2001, we have like 2 more meetings, which again, that does put you around May. You have 2 more meetings until we reach the same situation as 01. But then if they hold like it's 09 or 07, then guess what? You're not even halfway through there. This will be our 4th meeting. There could be another 5 meetings of them holding. And again, if you start going back to the 70s and 80s and 90s, there's other history behind it too. So, but then again, it wasn't as modern, and it was a lot more choppier. But when it's all said and done, it's like we have a lot of runway still. So even coming into today, Powell doesn't need to do anything as much. But, if he wants to get to the 6 meetings and then cut, he might be more aggressive today. If not, we could keep gliding for a minute until, the economy or other things start turning in another direction. Overlay the SPY on the 4 to 5.9. It ripped. It absolutely rocketed. Even in 2001 or 2000. So, like, where were you? You went down a little bit, and then you ripped up, and then up until we started cutting, you just dropped when we started cutting. But then you even had, like, you rocketed up leading into 07. You hit new all-time highs. You had a little bit of volatility. You had another rebound to get another 30% in a short amount of time, and then it finally dumped on the rate cuts. And then 2001, could we get much higher? Oh. And then 2000s, when you started pausing, you ripped all-time highs. And then again, even until they started cutting there, you actually held up a little better, but you started dumping before the first cut. So the market did eventually have a downturn. You know, the scope of it, that was dependent on what was going on there. But then again, I mean, that could still be 2-3 years out, or it could be a year out. It depends if we're on 2006 or 2001. And so far, we're following 2001. But then that would mean we're closer to the end. If it's 06 style, I mean, we're not even halfway done with pausing. Yeah, and it's not going to play out exactly the same. That's what makes it all the more interesting. Now we're going to have even more craziness. I call real estate today, 1 hour after the close, baby. Hey, man. Shout out Call Real Estate. I call real estate agents. They said they said they want rate cuts or they don't want rate cuts. They said too many offers, baby. Love to see it. Oil dumping. Scared FOMC. No, I think it's just reacting to broader stuff. But then again, I do think oil prices will become an issue. If we do start getting rate cuts and oil and commodities are up too much, oh man. I think that's a very negative sign. Keep it up a bit longer. Canada's nuts. Canada, man, rate cuts or not, Canada real estate binge is going nuts. This is the biggest move we've had pre-FOMC in a while, I feel like, yeah. I mean, NASDAQ's already down 1.45, but get ready, though. I mean, literally, we still have how many hours? We got about 2 hours. So we got 2 hours, 10 minutes, and, you know, the market, it could recover a decent amount prior, but if we do hold, this will kind of be, you know, back in the day of, like, 2022. That was the last time we'd have, like, big pre-moves like this. If home buying doesn't chill out, would it send home prices higher? It would, but if they cut rates and the economy goes down, like if jobs go down, I think real estate will get hit. But right now, real estate and the Fed, they are just lying out of their teeth. And the CPI, it's bullshit. Again, remember how often they were like, we need Supercore to come down? Like, it hasn't came down, and they're all talking like it came down. It makes no damn sense at all. None of it, again, an owner's equivalent, all of it, it's absolute effery, to say the least. Because I get shocked anytime Powell and them talk about it. Yeah, it came down, but it's not. It's the same thing. It's like, it's bullshit. It's not. It didn't come down. The rate of change went down, but if you were telling me all you wanted was the rate of change to come down, then that was communicated much more differently. But like, Supercore is so elevated. You know, houses with real estate is very, very high right now, year after year. But if you look at the rate of change, yeah, the rate of change slowed down, but dude, these are the same elevated prices for the last 3 years. And so it's not. They're just talking about they're just talking about the rate of change. They don't give a shit about you know, the actual increase above all. Yeah, they do want stabilization, but you would have thought they would have. The way it was kind of communicated in the beginning seemed like they were looking. You know, again, when Powell's like, rents will come down, wait a year. They're still saying the same exact thing, but you know, you would have expected maybe give up a year of gains, I would say would have been fair, but it's all still very, very elevated. But they're getting happy about it, which is the irony. Best thing that Powell could say today affecting the market would be talking about ending certain loan programs. and talking about quantitative tightening, and then saying that he foresees a much tighter job market. Those three things you'll rip to 5,000. And the bonds, the yields will go to like 3.7 on the 10-year or something. But that's like if all three of those happen, which is unlikely. All of what I said is very unlikely. He's probably going to, again, the market will still like him whispering the sweet nothings of what's going on with rates and what they plan to do. But those three things I just listed, I mean, they're very unlikely to all occur. But if they did, it would go up a lot. What happens to gold when the dollar rate cuts? And what happens when they don't pause or hike? Well, when they cut rates, gold should rocket. When they pause or hike, you would think it would go down, but if it's based upon the assumption that, that's the irony, because why did gold go up? It went up when we started pausing. Why did it go up when we started pausing? Because the next step is cutting rates, right? It's kind of an order of operations. So usually it's there. If pretty much at this point, the only time gold is going to come down, it will be after a rate cut, and it will be once we start raising rates again. I'm not even in gold. I sold out of gold yesterday. Gold, I'll react when we get the data. Right now, I'm only in bond plays. That's what I'm going to be eyeing for the most part. But I think gold and the Russell will, again, be the sleeper plays of the day. Unfortunately, gold is up. Russell is cheap. That's the best deal right now if you really wanted to try to front run it. Like, where's RWM? Oh, damn, those IWMs are still expensive. Interesting. I'm in ZB, and then I have futures on ZN, and then I got one little put. So I'm in futures. I'm only playing future plays for bonds. You can look at TLT or the volatility indexes. The Russell is kind of attractive right now, too. The Russell is that's another sleeper play that's not up. Gold is up too much, but we'll wait till after. But I do think IWM, it's literally bonds, gold, and then Russell. Those are my three plays for today, in that order that I think have the best chances of moving. If Powell is good. Even if Powell isn't too good, some will play out a little bit more differently. You sent results. Email, too long, didn't read. 4 out of 6 iron condors hit. Total profits 3,400. Risk 11,000, or is that 1,100? And then could divide by 10 for smaller plays. So risk like 1,000. If you wanted to lower, risk 1,000 to make 345. The Elon thing, I think it'll be good for shareholders, but I think Elon might take his ball and go home. I think that's the risk. Because, again, he was just complaining about shit. Wasn't Elon just saying how, oh no, that was Ted Cruz. But, yeah, wasn't Elon just crying about the pay and, like, AI names and why he's doing certain things? How come you can't buy the actual S&P on certain brokerages? Are you on Fidelity? I think because it's a different type of like asset. Or usually if you put money sign SPX, it'll load up. Pfizer trying to run. Inshallah, Habibi. What's the other one? Starbies. They're just clapped. Yeah, our Pfizer plays are slightly down from yesterday. Well, we'll take it. And then where's AXP? That was doing good. Boeing keeps moving. Yeah, AXP came down. Yeah, I don't know if Fidelity's really good for trading, but it's pretty decent for the long term. I haven't really had any complaints yet. They redo the contract with Elon so he gets 26% vote while cutting his net pay. I don't know. Maybe he might be happy with that. But again, it was a big plan. You guys realize Elon has already had the highest compensation package in the history of the world. So, I don't know. You know what I'm saying? I don't know. Today's J Powell plays into your priced in skit. It might be. The only difference is we're just right back at the level of the last time Powell spoke. That's the irony. So you've went a month without Powell, and ironically enough, I mean, the SPY is up, but like the factors like bonds, not the dollar, but like most, like even the Russell and a couple of other indexes, they're like right where Powell was. So at least for the bonds, they are just sitting right where Jerome Powell was on the last meeting, right on the 13th. That was the top of today's candle. Am I planning something for my Valentine's? Like for the stream? Like we're not gonna have a stream, like special stream. Are you my girlfriend on another account? You're like, so what you got planned for Valentine's Day, Joshua? I don't know, man. I don't know. No one's really asked me. February 14th. Brought to you by Tesla. Get flowers while charging. Does she call you Joshua and not Josh? No, she calls me Stinky. Or Baldy. So it just depends on how she's feeling. I don't even think she really calls me by my name. She gets mad if I call her by her name. So if I like say her full name, she gets like mad at me. Why would anyone not want the Fed to cut? Because there's inflation, economic problems, craziness, stocks go beyond. What would make the market dump if Powell doesn't want to cut? If he's very like aggressive on that, or maybe he doesn't take rate hikes off the table, but if there's a strong pushback to the whole rate cut stuff, that would be very negative. About Biden's comment about Elmo, I did not see a Biden comment on Elmo. Maybe you could put me on game. How does that make sense? What part? The Elmo thing or what we were talking about with rates? We just had we'll cover everything in a little bit here. About an hour or 30 minutes before the event. We just had a nice little discussion on all of it when we put out the poll. So every chart shows stocks drop after rates get cut. Well, in this case, I mean, stocks can come down, but like, what's going to happen with inflation though? And everything else in the economy, or if we cut too early and GDP goes to 4% still, I mean, what would be the consequence? Rate cuts are good for real estate, but the reason you cut rates may be bad for real estate. I'll tell you again, and I'll tell you now, and I'll tell you again, man. It's so easy. Real estate prices will be dictated by the employment rate. That's it. High unemployment, real estate prices are going to come down. Low unemployment, real estate is going to stay sticky as ever. So your rate cuts, that's what you're really asking. Are rate cuts going to affect employment? And if rate cuts affect employment, it will have a way outsized effect on interest rates on real estate. You got to think about that. Why? Like, you have the perfect evidence. Over the last 2.5 years, rates have skyrocketed. And with rates skyrocketing, how many of you got an extreme discount on a house? Not too many people. Because rates were still elevated. Or rates were still elevated, but prices didn't really budge. They came down a little bit. They stopped going up 10, 20% in a year. But it's not as if real estate, it's not as if high rates even killed real estate. So low rates can help it out. But when it's all said and done, the number one factor is going to be employment. Do you think the economy is getting better or worse? I think it's just doing its thing. I think it's became more efficient in some areas and then less efficient in others, but I just think we're kind of at the same level we've been at for the last couple of years, and it's still it's not slowing down. I don't see it as cratering, more or less, but I do think there is signs, but it's going to have to be just all dependent. I'm going to let the Fed admit all of that for me. I'd settle for decent employment and government just clapping investors. They might. They're, a lot of people have been talking about banning the hedge funds, but then again, I just don't underestimate employment. So like people were talking about Palm Springs, like it sucks. And they're like Palm Springs bans Airbnbs. They're like the house prices are plummeting. I go look at these prices, bro. They didn't plummet. It's so fucked up. There was one house, the guy bought it a year ago for like $700,000. He lowered his price by $100,000, but he still has it listed for $1.9 million instead of 2.1 or 2.0. And it's just like they're not. Unfortunately, there's just everybody out there. So like banning some of the like Black Rocks from the market, that'll have a big move. But at the end of the day, it's still not like it's insane. It's just, and there's a lot of people employed. Just don't underestimate that, and what that does for the people who already have houses, the people looking to buy, people get new jobs, they want to go buy a house. The collective is a very big, important part, and not to mention how population has grown. Natty gas, I mean, I kind of want to get out of my play, but I'm kind of waiting till we get a pop. But I think the weather has cooled down. Without weather going up, I think natty gas is going to stay clapped. So it might have a little bit of a relief rally here, I'm hoping, in the short term after all that Biden shit. But for the most part, it's not. You need weather to drive that thing. And then again, I mean, when does winter end? End of the month? They get banned from buying, will they be required to sell? They might, but then again, it's a slippery slope. I mean, and then think about it. If the Biden administration is already vetoing, or they're saying they don't want that cybersecurity bill for Wall Street, it may be a pipe dream to assume that the government is going to ban these funds from buying real estate. That's it. If anything, they'll probably put a little tax on it, and the tax will end up just hurting mom and pop investors. But I don't know if it's a slippery slope. The moment you start banning people from buying houses, any group of people, It's I don't even know if they can with even real estate like discrimination laws and shit like that. Investors buy them, repaint them, and list them for $1 million more. Okay, this is starting to get personal. Okay, I feel really called out on that one. So, on that note, I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. I love you all. Get ready. We have 2 hours, hour 50 till Powell. It's game time. It's game time, baby. It's game time. And now, with my bathroom break, I forgot, bro. It's out. The whole idea. It's out now. You guys can play this on Spotify. It's on YouTube. You get it. Paul Freestyle, bro. Spiritual warfare is much more subtle. There you go. I don't take all the bomb. I'll be right back.
It's a call, baby. Yeah. It's a letter to the people. I'm penning it like I'm Paul. It don't matter about the evil. It matter about the God. It don't matter about the weapons. It matter about how you armed. All that matters is the weather. When weather to bet the farm. I ain't gotta see it to believe it. If it's signing, then it's needed. Then my eyes don't need a reason. I won't even try to explain it. Let's just say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run. They want it all today. My father is really awesome. Don't bother with giving snakes. Regardless, I can't control it. So either way, giving thanks. Yep. You could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
That's it now. This could be added to the workout playlist. That's it. Thank you, Uncle. Thank you. Looking as dope as ever. I love it. I love it. It just came out, man. It's called Paul Freestyle. Uncle, he wrote a letter to the people. He penned it like he was Paul. It don't matter about the evil. It matter about the God. It don't matter about your weapon. It don't matter about their weapons. It matter about how you armed. Bow, 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 bow. I'm hitting chest today for sure. For sure, baby. Gratata. And speaking of which, we already missed the push-ups, damn it. All right, give it 15 minutes. Give it 15, yeah. NYCB, they, big loss on a commercial loan, and then they cut their dividend, 75%. My favorite excise? It is, I don't know. Which ones do I like the most? I kind of like tricep pull downs. I'm not going to lie. Those are always fun. That's about it. Otherwise, I don't know. And then I like chest flies, actually. Big fan of chest flies. Chest fly, yeah. Cable flies, actually, yeah. No, I think cable flies and then tricep pull downs. I'm a big fan of that. I like bench press, but then, like, I don't know. Bench press always be, like, messing up my wrist and shit. The line, the 100 grand, says, take 100 grand, and then 100 undergrads. Pay them all to make a plan. I bet they couldn't comprehend what it means to never die, but somehow still be born again. So you could pay 100 people a salary, college educated, $100,000. That's it. You could pay them all to try to figure it out, and they still probably couldn't comprehend it. Like the Sadducees, it was a big question back in the day. Thoughts on going heavy on shares for REITs? Could be good. Could be very good, actually. You know, it's risky though, right? You know, again, you have a little bit of commercial real estate vomiting today, but that it'd be related to the cyclicals in the Russell. So maybe you could go for the Russell instead, but it'd be up there. You would definitely it may be short-lived, but depending on how today plays out, I mean, that's not a bad area to look at if you're looking for the rate cut bullish response. It worked, yeah, everything did go up very big last meeting. But then again, some of the REITs, they kind of faded pretty quickly, and then now you're going to have the earnings, and then, you know, your NYCB, their problem was a commercial loan. So, like, literally what happened, they had $25 million in provisions for loan losses, and it just shot up to $185 million because one of their loans on a commercial loan, it was a commercial loan project, a commercial building, it went into default, or they stopped paying for it after 3 months. So 3 months they haven't received any payment on it. I'm a beginner. What should I paper trade? You could look into the bonds today. I mean, you could see the reaction of the SPY. Maybe go for plays there. But I really, the plays I'm making are the bond plays. And if you want to paper trade them, you could see how they all turn out. That'd be a good way to start. Maybe watch TLT or /ZB if you want to paper trade Foots. Julius Baer CEO Rickenbacker is said to step down from Post. Yeah, VZ's been up. Mara and Crypto, too. They were running earlier. What was the major news today for the down? Just the shitty earnings, or I guess earnings not really meeting the expectations after some of those stocks moved 10, 15%. I don't think ADP in the ECI wasn't that bad, but again, I don't underestimate. Google's down 6, Microsoft was down a little bit more, even AMD was down 5 or 6. So again, that's why like the Dow's green right now. SPY's down 0.7, but the Nasdaq was the victim today. Some people are spooked about the bank stuff, but again, you know, Powell might give us a little color on that situation because again, what happens with rates will be more important. Right? If you could time or have a better idea of rate cuts or what he's going to be doing with certain facilities, then you don't have to worry too much about regional banks and commercial loans. However, if it does end up bad and we don't know, and the longer we have to wait for rate cuts, that's more time for commercial properties and other exposure and regionals to get mollywopped. Data dependent is in the cards for sure. Like we said, the best analogy of today is that Powell is going to open the door, but he's not going to tell you when he's going to walk through it. So he's going to try to keep the door open without letting you know when he is going to take the first step across the threshold. That's the simplest way to look at it. So it should be very similar to last time. And at last time, everybody turned into a crackhead. But it's just very simple. It's all about keeping the door open, having the door open today, but then making sure he doesn't tell you when that first step is. So that's it. Answer me this. What if Fed removes job stability from their mandate, only price stability? Then he'd cut rates. But even then, like they're even arguing that job stability is kind of already there. But they would never do that. So like part of that little example I gave you earlier today where we were talking about why the bonds get a bid on every Fed day is that one Harvard dude, his explanation is that the Fed's 2.5% mandate or 2% inflation target, the one that they always keep, that's what kind of always reassures investors. So even if rates are at 5, at 0, at 4, 10, whatever they're at, that always gets people like, oh, okay, we there's, as long as they're sticking to that in the long run, 5 years, 10 years down the line, you always have that to anchor with. So I don't think Powell and the Fed are in the business of dropping any mandates that they have right now. So you don't have to worry about it as much, but if we wanted to live in that hypothetical world where they did, then they would be may have already had price stability if you view price stability as rate of change, not hitting your 2%, not going as crazy. Or he'd say he's close enough where very soon they would be reaching it. HG? Oh, no, that was HD. And then bonds still doing their thing. They're holding up nice. My goodness. My goodness. Will we get more curse words from Powell? Probably not. The Fed meetings are usually on lockdown. You've never had a protester. In the 70s in Volcker, they did stand outside of the Fed and they protested the Fed. But that's otherwise, Fed meetings do not really have they're safe from environmentalists. You're tired of data-dependent Powell? Oh, no. Get used to it. Like we talked about, this is our 4th pause today. So if today, this will be the 4th time pausing, and like 2006, they had 9 times. 2001, they had 6 times. So it's like, imagine throwing an anchor. Have you ever seen an anchor go down on a boat? I would love to show you a video because I love boat videos. I love boat crash videos, but I think today you guys need to see boat dropping anchor. Let's see what happens. Is there any good videos? They don't show. I'm trying to get you a good example. But you know how an anchor, it starts dropping, and you watch the anchor go down, then eventually it hits the bottom, but the boat keeps moving while the anchor is still being dropped, right? And then until it really hits the ground and then finally is there, you don't get the thing stopping. That's kind of where we're at right now. So they said, anchor, we want to anchor at 5.5, anchor. So they dropped it 4 meetings ago. So every meeting, it's still going down, but it hasn't hit the ground yet. And that's what we're waiting for. So it has to, dragging until, is that what I'd search for? Why anchors drag? That could be a good video. Yeah, I wish there's better videos of it. Did Johnson appear on the meeting? I don't think so. I'm going through it, but we may have to wait. Maybe he wakes up later. It's been going on, though, for like 2 hours, I believe. 2 hours and 20 minutes. Mara, Bitcoin ETFs on the high. It's like the plane losing engines. I think that's more of an aggressive example because the idea here is just looking at the Fed and what they're doing. Again, the rates are being anchored right now. They're stuck at 5.5. So it's this idea of saying, okay, we want to stop. And then they stop, but the actual process still takes time for that to occur. Then once we get a cut or not in the next step, then we talk about plane analogies. IWM, it's still down by 0.5. D-Walk on the high. AXP came back up. Where's Uber? Uber's still down. Airbnb, they took us from 150, Habibi. It was so fun while it lasted. Mara up 10 from the bottom. Yeah, jeez. Even Beto, they were down earlier. They came back up. Rumble and D-Walk are still going up. My take on today, pump or dump. I think bonds are going to be good. That's it. I don't really know what Powell's going to say, but I think the bonds are going to find a way to like it. Other than that, though, it depends. I would probably lean towards more ambiguous, less descriptive Powell, but also at the same respect, I also think that we don't know what he's going to say. There's a chance that he might attack. I'm always worried about Powell attacking. You know, it's like Shamu. It's like a lion at one of those shows. You know, it should be friendly. You know, it should be a nice show. We should get some entertainment. We're like, ooh, whoa. But like, there's a chance he might bite your face off. So we don't know, but like, you gotta just keep that in mind. So other than that, though, I'm watching the bonds though. I think the bonds are going to be the simple one of today, hopefully. Otherwise, maybe we're in for a surpriser. You got to shower for work. You'll listen, but don't worry. You wear headphones in the shower? Are AirPods waterproof? I mean, I guess if a Neuralink is waterproof. Adidas decides not to write off most of Yeezy inventory. Yeah, but too bad they all suck now. Just make them like they used to, and I'll buy them again. I don't even care. But Adidas should pop off that. Was it ADDY? Why? Yeah, they're getting a pop on that. That was like $1 billion or so write down. Nike moving. How would he attack? If he just made it clear that if he, instead of, taking rate cuts off the table or rate hikes, if he started talking about rate hikes, if he started saying, we see employment going the other way, we see houses coming back up, if he just, borderline saying that the market is way too confident in an imminent rate cut and, maybe it doesn't happen at all and kind of flips the script a little bit, that would be Powell attacking. Oh, later over. Okay. Enjoy the shower. Enjoy the shower, man. Enjoy the shower. Have a good one. Attacking is hawkish, yeah. Again, hawks that makes sense, right? Hawks, they swoop in. Yeah, Adidas says board recommends dividends of euros based on preliminary unaudited numbers. Adidas currency, so Adidas is coming out with earnings, I think. Adidas currency neutral revenues are flat versus prior year. Latest guidance to decline at low single digit despite drag from devaluation of AR. In reported terms, sales were down 5%. In 2023. Mara's still going. What price is Mara at? I think it was almost at like 30 that one time with the cover calls. How likely is it that he attacks? I would say 10%, maybe 20. 10% of full-blown attack, and then the odds are different where he might kind of throw shade, if that makes sense. So, kind of like how some of y'all sometimes will just I love you, but you just throwing him a lot of side eye. Like, you might get a little bit more side eye out of Powell. So it wouldn't be a full-blown attack where market vomits off of it, but it might, kind of keep you a little bit more, keep everybody from getting too jumpy, to say the least. Pump NQ. Well, NQ's down today, but sometimes I think the last Fed meeting, all the things were down, and then they kind of had a run up within the last 30 minutes. Remember, I made that play on the Russell ahead of the Fed meeting, and it was already down, and I bought it. And then we had a big flush on the Fed meeting right before, and then an hour later it just came right back up. So we're either going to be right here at the Fed meeting, or we go a little lower. It's like you're going to find your way back up at one point of the day, but maybe this is it if we end up holding and don't flush anymore. So we will see. He can't raise rates, only pause for longer. He can, but he could also talk about raising rates. I mean, it's not out of the question, but that would be a very low likelihood, and that would be extremely hawkish. But at this point, the most amount of side eye should be just really hammering down that rates will stay higher for longer. But he said that before, and we didn't necessarily believe him. If he adds cautiously optimistic to his rhetoric, will insinuate what type of reaction from the street. Well, I think hasn't he already said that? I think that's already there. The only thing that would be moving it is if he brings up the loan programs as well as the quantitative tightening. I think those are the things that'll get you the biggest, implied reaction from all of it. Oh, did the thing end? I think they took a recess on the Mark Zuckerberg social media company thing. So a couple of reds right there. Again, Nike's on the low now. Again, Adidas had some numbers and then started talking about lower sales. Yeah, so even Adidas came down. Is the operating profit $500 million? Estimate was $1.27 billion. So Nike's getting clobbered off of Adidas. Yeah, that's a big guy down. It didn't sound that bad at first. That's a huge miss for guidance. We could put the dollar up when the Fed announces, yeah, for sure. Even then, the dollar's trying to find its way back up. I think the yen is still holding. A Google new low. What time is it? 9:30. So Chattadonia, we got to get one in, man. We got to get one in. Pfizer on the high. But ladies and gentlemen, boys and girls, we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the Chad. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, boys and girls, we've been here for 3.5 hours. We got 3.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then optometrist recommendations. Stare at object 10, 20, 30 feet away. Go blink, 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 blink. Relax those pretty little eyeballs. Blink, 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 blink. Oh, it feels good. There you go. Get some controlled blinking. You know what I'm saying? Relax the eyes, man. And then drop your shoulders, okay? Nobody is attacking you, okay? You a lot of trauma in life you hold in your shoulders. We like to call them trauma traps. So please relax the trauma traps. You might go through a lot of trauma with Powell later today. So just get prepared, man. Give your body a break. Give your body a break, man. Relax the shoulders. Then chest to the sun. Flex the core. Tuck the hips in. And boom, baby. You look good. Legs in front of you, though. Some of you look really weird. Why are you wrapping? You ain't riding a motorcycle or a dolphin. Why are your legs wrapped behind your computer chair right now? That doesn't make any sense right now. I don't even know how you're staying balanced. Not one caveman in the history of cavemans ever looked like that. What are you doing? You're going to mess up the DNA and the evolution of your species by how you're sitting right now. So do it for the people, bro. Come on, legs in front of you. Let's go, man. Legs in front of you. Legs in front of you, man. Okay, then relax the jaw. Breathe in really deep. Go. Breathe out with your tongue out through the dragon breath. Go. Just like that, man. Come on. Come on. Easy. Easy, bro. Easy. Easy. Oh, no. I just ran over my computer with my computer chair. All right, that's it. Let's go, man. Some resistances. Yeah. There you go. All right, go. One set done. See, I'm doing my resistance. I did push-ups yesterday, so it's good. Foot Locker still dropping. Oh, man. There you go, man. There you go. I got one more wall stretch, and then we're going to be good. One more wall stretch, and then we balance, and then we back in the game, and then we got, what, an hour and a half till the Fed? Hot dog. Echo. Let's go, Chatadonia. Oh, man. I needed this stretch. Oh, there it is. All right. We do the leg balance and we good, man. Yeah, Nike getting clobbered off of Adidas guidance. Even SPY coming down now, too. We got Googly dropping, Tesla. I think everything's getting a candle. Google. Yeah, Google's hitting a new low. The Googles are almost up, I guess, 37 to 49.50, $13. Not bad. Not bad. It's weird. Bonds are still holding up, though. So that's the good news. Yeah, they're steady. They're steady. You waited for 9 for the new uncle. I was camping outside waiting for a Stanley Cup. Let's go, baby. I know. I'm glad y'all finally got it, man. I hope it helps in the gym. You know, make the most of it. Make the most of it. Get a good workout. That's it, man. It's refreshing using Bing instead of Google. I think Bing is at a good year. Ever since, like, the AI stuff, I feel like a lot of people have actually used Bing a little bit more than many would have thought. But still, I feel like a lot of people Google Bing just to get to Bing. That's the only problem they have. Okay, come on. Bro, my balance is getting amazing. Not really amazing, but a lot of improvement from where we were at a month ago. You know, I'm very honored. I'm going for a minute and a half. So I hope that Stanley Cup helps you in the gym. Then bonds are moving. Maybe Foot Locker goes down too. Again, if Adidas is expecting lower sales. Boom, a minute and a half. He did it. All right, switching legs now. Switching legs. Market's reflecting no rate cut. Well, we know there's not going to be a rate cut. The question is, though, still for March. So remember, the market's still pricing in, I think, 135 basis points of cuts. That's another thing. It's just like, is Powell going to fight back against that? 135 is kind of in line with what Powell and the Fed's dot plot said, but then last time he agreed with that, the market priced in 175. Adidas is still dropping. That one's on the low. This feels like 2020? Nah. This feels a lot like last year. Honestly, that's why even last year, I mean, you guys don't think it's weird? Nothing bad has really happened. So, like, usually we were from, like, 2020 to 2022, I feel like we were starting every year with some crazy shit happening in the world. Then 2023, we didn't have any bad things happen until March. It was the banking. And then I guess you had, even then, beginning of last year, you had spy balloons and shit. I guess we started off this year with the Japanese earthquake, but it wasn't even, dude, so my friend was in Japan when that happened. And you know what he told me? I was talking to him the other day. He was in Japan when they had that 7.5 in January on New Year's. And he tells me, he's like, yeah, bro, it wasn't that big of a deal. I'm like, are you crazy? I'm like, what do you mean it wasn't a big deal? He was like, bro, I ordered room service. It shook everything shook for like 3 minutes. And he was like, no lie, like 5 minutes later, my room service arrived. I was like, he's like, they're used to it. I was like, you're insane, bro. You're insane. I said, stop playing with me, man. That's crazy. But so far, though, we haven't had any crazy big events like that were to start off the year. So I feel it's very reminiscent of last year. Last year gives, again, same vibe, same wait and see. And then we're going to have the election, but not really 2020 vibes, but we'll find out. We'll find out. Your next event, you think, will be rolling blackouts? The energy grid. Maybe it's going to be cyber attacks. A lot of people have talked about that, but even after hearing how they want to they want to go against that new SEC rule, I mean, I don't know, man. I don't know. Market will be clapped this year. Well, we'll see, man, with the election and then how Powell is going to play it out, if, when, how he does the rates. The policy is the number one thing, though. That's the thing. I think the number one theme this year is the if, when, and how of policy and the path we're on. And then next thing will be the election. Again, it's a very contentious one. The SEC rule. So the SEC rule on reporting cyber attacks that companies have, like, they have to do it within a couple of days. Apparently, the Biden administration wants to veto it, or they want to challenge it, which that just came out today. Leap year. Isn't it crazy, though? Is it like, so we're really about to have Trump versus Biden again for the election? And then it's the same teams that played in the Super Bowl? I don't know why they'd want to veto it, bro. That news came out today. I was still kind of scratching my head. That's why it was so confusing. I was like, I don't even know if I'm talking about the right thing, because it just kind of didn't make sense. So we'll see. And it's a leap year. I still don't understand the leap year. Does that just mean we have a longer February, or do we skip the year? It's a leap year. That's news to me. Yeah, just 29 days, one extra day to trade. Nice. We get it February 29th. I mean, I'm excited for my birthday. So that's coming up. You know, February 33rd. I'm really excited. Gonna have some fun. IBM's pop, it kind of faded a little bit or just kind of ended up holding. Yeah, it came down a little bit. You had 2 days of crazy options. But then again, all the earnings started coming in lackluster. Oh, no. Do I need another water? The Fed move, we'll cover it in a little bit. We've kind of talked about it all day, though. So, again, I think shout out to Chad, man. We had a lot of good questions, and we've went over it. Y'all hit that like button. We've talked about it even yesterday. I gave you some secrets on the watch list. We recapped it. We've talked a lot about plays. So we'll do another speed run, like 30 minutes ahead of Powell. I think that'll be fair. But, I mean, if you have any questions, I mean, we could keep it going. Whatever you have for a question-wise. Again, if I could encourage anything, just be prepared for anything. You know what I'm saying? It's like we kind of have an idea of what to expect today, but there's a lot out there. There is a lot out there. You hate yourself for this, but you bought an MPW call. It's okay. So the idea is there. You know, playing the cyclicals, the real estate stocks. I feel you, man. I feel you. I'm in the bonds. Oh, that's it. I put my money on the bonds. Hopefully that works. I would like gold if it came down, but gold got the run this morning. It's around the price I sold out yesterday, but it was a nice gain. Any recent plays? All I did today was bond plays. So I added a put on my ZB. I did a future option, an option on a future to get a little bit of downside protection on my 30-year play. I was smashed on that play, and it came back into green today. I'm green on it right now. And then I grabbed out of the money options on the futures for ZN, the 10-year bond. So I'm fully just in bonds. I might exit out now that I have the calls on one of them. I might just flip out of the ZB, but I'm also kind of down to hold it. But it's going to be what's it called? This bond play, it'll be one thing about today. But even if it goes against me, I do plan to hold till Friday. Microsoft flushing. And then PAR is on the high. But Microsoft's hitting a new low. And then SPR. Yeah, Paramount Global Class A. Those are running. It said 24, but it's only showing 23.5. I already sold the TXNs. If you held them today, you got an extra bag. But we sold them, I think, for like, 178? So I got a decent return on it, but I'm sure they're killing it now. Allen Media Group's previous offer for Paramount was rejected by Paramount board, according to offer. Previous offer for Paramount was about $18.5 billion. Allen Media had made a previous offer in April, according to the letter. So Paramount rejected an $18 billion offer. So again, they're up. What are they worth right now? Damn, that'd be double the price right now. Whoa. I've played this news so many times, though, and it never fucking hits. Literally the amount of times I've played this, and it never fucking hits. Ever. Ever. And I'm gonna burn it now, and it's probably gonna hit today. Tesla going green. SMCI, it's expensive. I mean, some people have said its market cap is low for what it is, but, I feel like I already missed out on it, and I'm not really. I'd rather chase some other things. I'd rather go for the value in that world, but could be a fun stock to trade if you have that risk management. I could do it small, but every time I play it small, too. I do like $10, $20 plays, and they just lose. Just left and right, nonstop. So I'm not going to play it, but you should. Not a recommendation. Because when I don't play it, it will work for you. because this one, I don't know. I've had too much bad luck with Paramount. I don't even have Paramount. Actually, I think I do on my Amazon. I'm not going to lie. I think I do have Paramount. But still. Trade the 500 psychological level. If the contracts are cheap enough, I'd be down. You're saying to the downside? But, dude, we saw that the other day. That one time I saw it, I was looking at contracts for 80 cents the day they raised the guidance, and then 5 minutes later, they all went up 1,000%. I was like, okay, well, I'm out. That's not for me. That one's not for me. From brain chips to Tesla Pay, Elon Musk's highs and lows converge. What a title. You get Paramount with Walmart Plus. I don't know why we have it. I have it on my Amazon. They actually got some decent shows. So I don't have the app, but I get all of the Paramount stuff on Amazon. But let's see. Again, Microsoft was just at the low. SMCI, SPY trying to work its way up. Is IWM creeping up a little bit? Yeah, trying to. And then gold is just staying pinned. Everything. And then bonds are slightly edging up. Do you use Amex flight points? Sometimes I have a lot of them stacked up. But they decrease the value. You guys know that. I told you guys this, I think, end of last year. So coming into 2024, a lot of like credit card points got hit by inflation. So like pretty much your points this year get you less than they got you at the end of 2023. But yeah, I got a lot of points stacked up. You can still get a lot if you know how to use them with like travel partners and all that. Para's moving a little bit. Good luck, my friends. Good luck. The news was they rejected an $18.5 billion offer. I think right now their market cap's at 9. What kind of poll is this? We had a good discussion on, the paradox of rate cuts. Why everybody who wants them cut and doesn't want them cut, they both have two problems. So as a Chad put it, the duality of the risk. Is the bonds going up good for the market? Yeah, for the most part. We will recap everything 30 minutes ahead of the Fed. So like 30 minutes from now, that's it, man. We have 1 hour and 8 minutes. It's approaching. And then even then, the market's probably going to make its final move. We're either going to dance around here, or we could even get like up to here by the release. Because again, even if we bounce up to here, market will still be negative, ironically enough. Powell expected to be dovish to a degree, yes. The door will remain open, but he will not let you know when he will step through it. That will be the narrative of today. Where is it? Powell will have a mission. If he completes his mission, holds to his mandate, the people will regard him as a saint. But if he fails, and thy landing is hard, thy people will revolt. For For today, the journey is made. I bid you luck, Powell, and I bid thee a farewell. May thy have the knowledge and blessing to make thy decision fruitful. Onward, young Chadlens. Boeing says Justice Department currently considering whether plane maker fulfilled obligations of 21 deferred prosecution agreement. That doesn't sound good. Oh, John Daniel Nambrana. Finally got my real estate courses. I'm going to hit the ground running. Cole Real Estate loves you, baby. Thank you, Josh and LT. Thank you, TNT, and all the chats, all the damn Chatadonia. Let's go, baby. We got another agent on the way. Let's do it, baby. Arn. Oh, my goodness. Right cut or not, thy real estate career will be fruitful. For Tyler and Trey and all the members of Chatadonia, they have paved the way. Congratulations, John. One day I will knight thee into thy real estate squad. I have too much fun with that. God bless you, bro. Thank you. You've been slacking. Don't worry, man. Don't worry. Don't let the slacking even stop you. You know what I'm saying? In due time. In due time at the right time. No matter what, baby. No matter what. Do I buy East Coast houses or just in your area? Everywhere. Everywhere. I'll buy East Coast. I don't really have like East Coast. I have a lot like, I guess is North Carolina East Coast? Is North Carolina, that's on the coast, right? I got some North Carolina. North Carolina, come on and raise up. Yeah, the east side of the world, of the United States. Yeah, then I'm East Coast. I got some East Coast out there. Mm-hmm. Mm-hmm. Boom, 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 boom. Boom, 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 boom. That's where you live. It's nice. It's a good area. I think it's on a couple places there on the list for like good real estate this year. Still very affordable. North Carolina is as East Coast as you can get. Really? Well, there you go. There you go. Don't move here. Y'all really tell me not to move where you guys live. You guys like, it's my town, Joshua. Don't you come here. Like, okay, man, my bad. I'll live with the purple hair people in California. Need the spy to vomit. When you look at options, it's important to look at the bid and ask. Well, yeah, because if the spreads are wide, that tells you a little bit about both like the liquidity and kind of the volatility. So a lot of times if something moves crazy or it's like very illiquid, but mainly because it moves crazy, those spreads will be very, very wide. Do you have to pay income tax for each state your home is in? Not unlike my broader income, but any income generated in that state, I have to pay the tax rate. So my rental income, I have to pay the North Carolina tax rate. In Ohio, I have to pay the income tax rate in Ohio, wherever it's at. So Texas, you don't have income tax. So that's the good part about it. But then again, Texas properties, I don't like the property tax. So you have to require, you pay taxes on wherever region you generate the money in. So if you generate the money in California, you have to pay taxes in California. So like even if I move to Texas, and you know how everybody's like, oh, there's no income tax in Texas. If I move to Texas, but I make all my money or like all my houses, my rentals in Cali, then I still have to pay income tax for California because that money was generated in California. BITO and crypto is still running. Even if your company is registered in Texas, yes. Because the money was generated in that local. So they want their money. So like after I pay that tax, and then if I bring it back to another company, whatever your federal and then state income level on the year, then that's it. Then you don't have to pay on that, but it just depends on where you're at. But anywhere. So like anything that you make, this applies to everybody. If you make money in Texas, you have to pay their tax laws. If they don't have any, you're good. If you make the money in Kansas, Oklahoma, wherever, whatever their tax rate is, you are liable. No finessing or loophole. Not really, unless you spend the money in that state, but then again, you won't if you want the income. Then no. Yeah, but California property taxes are great. That's my one advantage I love about Cali. Everything else is a shit show. And then the income taxes are high, but property tax, man, they ain't got nothing. Nobody has anything on that. You get all the valuation, you get the crazy valuations of property, and then you do not have you do not have to pay as much property taxes. So I've showed you guys that example. Like you could own a house. If you own a house in a long run in Texas, you might end up paying more than California, even if the house is 5 times cheaper. Just because the tax rate on the property in Texas is so much higher. And then if you have a loan and interest, it's even crazier. The Cali house is expensive. In the long run, it's not. In the short run, yes. So like you could go find a Texas house, $300,000, it'd be super nice. That same house may cost you $1 million in California. But if you're paying 5% mortgage and then a 2.5% tax rate, and you actually hold that house for 20, 30 years, you're probably going to end up spending around the same you would have in California. Just because the tax difference is huge. So that's the thing. I don't like my rentals in Texas as much because my property taxes are very high in Texas. It's literally the highest. You're leaving Texas, but your house is in Cali. You commute to save money. It's a funny joke, man. How long did it take you to think of that one? It's a great one. I've seen people though. I know some people who commute 4 hours though. So I've seen craziness. But hey, sometimes it's worth it. I don't know. I like driving. So I would commute if I could live in a way, way better house. That's how that's a lot of Calis like that. But then again, I know some people who will literally live in like Bakersfield and then work in LA. I'm like, you're insane. That's very, very large, Habibi. Want to trade one of your houses for mine? House on Long Island from the Hamptons. The beach is at the end of the road. I mean, maybe. What are you looking for? Like, what kind of house would you want? I've almost traded a house before. There's like a network. I forgot. Like, you could trade houses. Like, people do it all the time, but like it's not as common. But it depends if I have something you'd want. I got like a nice. I'll call it a starter home. It's like I think it's like 2,300 square feet. It's a new build. I have one in Cali I'd trade. It's probably worth like $850, $900. Sadly, I didn't buy it for that price because this was a starter home back in the day. But I want to trade that house if you got. I'll trade. It depends. Or you want an NFT? I just thought I'd throw that one out there. I just thought, don't worry, don't take offense if not. But I got NFTs if you want. Cali worth 500K. Maybe a condo, but you wouldn't want it. Like the condos now that are 500K are like 1 bedroom, dude. And they're just tiny or they're very dated. Unless, I don't know. That sounds like a nice townhome, 4 bedroom, 3 bath. You know, a couple years, that'll probably go to $1 million. It was an AZ. Close to the beach. Close to the beach, bro. You're going to get a studio for 500K, sadly. That's it. And then it'll be so old, like, I wouldn't even want you to live in it. I don't know how you could do it. It'd be awful. In Indiana, in Illinois. Nothing in Illinois. I want Chicago, but I've never bought Chicago. I just went to Indiana instead. Like, that's it. Like, Indiana is just so dope, bro. But, like, Chicago, I've seen some good deals in Chicago, but I've never done it. Santa Ana has condos. Yeah, I mean, if you want next to the beach, if you go up Inland Empire, you could get a nice condo, townhouse for 500K. If you're willing to be like an hour from the beach or even Oceanside, a little closer, I could get you a condo for 500 that's not like a hut. Oh, I was going to respond to you that the one in Indianapolis. I think he should list it. He just bought the house. So, honestly, like, unless he wants to sell it at a loss for me, I wouldn't do that, especially if it's a brand new property. I could forward it, see if we could get you a Colt real estate agent, help him out, but I would just list that house. I don't think I'd be a good buyer unless he wants to, give me the property cheap. Oceanside, that's Animal Kingdom. That's San Clemente is Animal Kingdom from the show. It's like San Clemente, Oceanside. I do have that one near the water still. Yeah, I don't live in it anymore, though. So I don't use it. I just rented it out. I go through my midlife crises. So I said I was having one the other day, so I don't know. We'll see. I kind of want to, I don't know. I kind of want to live on the East Coast. I kind of want to try it for a year. I watched Animal Kingdom back in the day. White House briefing with Jean-Claude Van Damme. What are you doing, Jean-Pierre? I'm going to be Jean-Pierre. You buy subject to deals? Depending on the value and what's going on with it, yeah. Creative deals I'm always a big fan of. It all depends on the value. If the value of the property's not there, then I'm not motivated at all. But if it's like if there is value in that property and the price is right, I'm in there. The fossil and climate protesters priced in, they are. It's funny, we were just talking about this earlier. We just said you're not going to have any protest. Are you ready to get rained on? I heard that. Where should if I want to total a car, where should I park it? I got a couple of cars I want to just flood them out real quick and get the insurance money off of. So I kind of hope it does rain. But last time I got the rain, but nothing happened. Just bring it to my shop. And be like, it needs $80,000 of damage. There's a paint chip. Zoom info, ZI on the high. Popper, little one. ZI, 2 candles there. ZI. Check news on that. ZI. Zoom info. Bank of America upgrade. That's old. ZI, 2 big candles. Decent. It's 1% in 2 candles. All I see is stock upgrades 2 days ago. I don't know. AI, do they have earnings coming up? That could be it as well. No, yeah, we got the girlfriend's car fixed. But still. Yeah, I don't see anything on ZI. Still hitting the gym. Yeah, man. Just got back into it. I got a good workout the other day. We got chest today. So I'm excited. It's good. It's weird though, because like I can't lift as much, but then like I don't have the shoulder pain because I took a month off. So it feels really nice. It's really like trippy. We did our stretch rate. Yeah, Pars is staying down there though. Again, they had news about rejecting the buyout. So we'll see. No leg day. I've been doing the foot balancing. That kind of counts as leg day. I'm telling you, my legs are like a lot stronger. It's kind of crazy. Let me try. I've done legs, man. I've done legs, but definitely not as much as I should. I need to do leg day and core. I was doing core right before I stopped there. I did several core workouts. But it's good. The little leg workouts are helping me, man. You know, the leg balancing, it's given me a lot more stability than I had. So I'm really excited. I'm excited. So I could get into the legs pretty good. And then now you have new Uncle Answers for the gym. So, it's just going to be great. It's going to be great. Chicken legs ain't it? Yeah, but I'm short. Nobody even looks at my legs. I'm too short. You know what I'm saying? So, like, it doesn't even, like, nobody looks that low in general. So, I'm honest. It hasn't really affected me too much. How do you feel about carrying trades on margin versus the capital you have? You better have experience with it and make sure that you have a better plan with the play, because margin can dictate your plan rather than you dictating your plan. So I think for trading, if you have experience, you could run it up if you'd like. But again, you got to pick and choose. But long term, I think it's a really bad idea. Unless there's totally a market collapse and it's like a once-in-a-life opportunity. Powell says no rate cuts till 2025. Bonds die, stock market dies. If he's like adamant about it, if he just comes out like it's Jackson Hole and he's like, okay, we're done. We're not raising rates. You know, we're making a lot of progress, but we're not raising rates till 2025. Or no, not cutting, a minimum. And then the market will vomit. Do you think it'll play out like the last FOMC? No. Things might go up, but you're not going to get a reaction like last time because there's no summary of economic projections. Yeah, Powell's not going to say the no cut thing, but that's one thing you got to realize about today is that there's no summary of economic projections. So in December, when we went crazy, it had nothing to do with a Powell rate, whatever, and then, you know, his speech. None of that mattered. You don't remember last Powell? Nobody even fucking listened to his speech. I'm going to be real with you. Nobody cared what he said. You don't remember? It was a green candle every 5 minutes. There was one red candle, 2 red candles during the speech. Why? Nobody cared what he said. All that mattered was the dot plot. So this time around, you don't have a dot plot. So we will be more focused on the statement and then the press conference, but for the most part, you're not going to be getting that sort of juice. The ZQs, they got clapped today. I was only down $2,000 on them, and then they went down $2,000, so I'm down $4,000 on them now. But that's only 1/3%. I just went big on them. So all goes well. I could get hooked up on them, but also, too, if things go bad, I can get more pain on them. But I got more time on those. New York Community Bank did not fail. They had a surprise gigantic loss on a commercial building, and then they cut their dividend by 75%. So they dropped about 40%, down 36 now. Only if he confirms cuts in March or April, we go parabolic. Yeah, that'll get everybody. Because then again, that'll be kind of like the dot plot. But if he doesn't, then, it's just going to be a weird mix of last meeting and then a meeting with nothing else. SMH on the high. Chips are running. I don't think Google's a buying opportunity yet. It is a big drop from all-time highs, but, I feel like you could get a better deal. Or, again, even if you don't want a better deal on Google, you could find other names to pick up with a lot more value. But that's just my opinion personally. MPW is still on my radar, but it's also on the injured reserve. So I need an update from the doctor, a.k.a. the earnings, before trying to put that one back in the game. So it's on the IR. I don't know. I wouldn't even renew the contract until we could hear about the health of it. I need to see that they got good health and rehab. Intel Stewart trying to sell hospital. There's even talks about the government bailing them out, but even then, though, it's just I still like. I'm dripping all of the dividend, so I don't mind that. But in the meantime, we'll get an update, and even once we get the update I want, it'll still be cheap, so I'm not too worried about that. How goes turned on again? We got 45 minutes, so we'll get a recap of everything here in a little bit. We'll go over everything we need. I might get you a audio.
Will the Fed minutes be a turkey? They have been in the past.
I'll get you. I have audio previews. Microsoft, are they dumping still? You asked the question, why is the mandate for FOMC to keep it at 2? Why not shoot for 0? I think it started, I want to say, was it back in Greenspan or a little bit after we did QE? But the general idea, I think it could have been longer, but the general idea is 2% is a level that they see as appropriate where it's not too restrictive and then it's not too loose. So that's pretty much the level they see as price stability. It's where you're able to get price stability and growth at the same time. So, and then the fact is that level could be debated upon. Like you could say, well, why can't you do that at 1.5? Why can't you do it at 2.5? But the fact that they've, they just pick a level and more or less the fact that they've stuck to it is more and better of a guide than anything else. But in general, it's the rate at which you could both grow and have healthy inflation while not being too much easing and then, having any other thing negative from it. January 31st. It's crazy, man. Alrighty. TLT snitching. Nah, just doing what it does. Again, it holds up very well on Fed days. That's what we've been talking about all day. So I don't think it's snitching. It came back a lot, but 10-year is right at 4%. So remember, anything a little bit below is very, very positive. Anything above, anything above 4.25, we could start changing up the tone a little bit. So we'll see, but I think it's just doing what it needs to, and then it's going to respond to everything else. But I do think equities might move more than bonds. I think bonds will be the easier focus. Will kind of be in their own little world, but equities, again, they've ran up more than bonds and everything else. So if anything, bonds will catch up to equities, or bonds can hold up and equities will come down to where the bonds are at. Will Meta beat? Well, people got worried after Google, so we'll find out. But I hope Meta beats. I think Meta could beat on ads revenue, but then I don't know what the hell they're going to do with spending. I still think Mark Zuckerberg is a wild card. And quite frankly, this stock has gone up so much. Even last earnings, he kind of spent like a drunken sailor. But when the stock is doing good, nobody gives a shit. So I'm worried that that homeboy might have gone a little crazy again. That's my biggest fear with Lizard Man. So other than that, though, I think ad revenue will be good. Because, again, Google, they missed a little bit, but it was minor. But, again, I do think I think ads this last quarter have done very well, even with, again, 4 point whatever GDP and all that stuff. So, but I do think spending is a little bit more unknown when it comes to Meta, and that could be either very good or bad, because it's either he spends crazy or maybe some of their bigger price cuts or cost savings, job cuts, all of that come into factor into it. You think Powell's script will be any different? No, I think this statement, I am expecting some changes on it. So I don't know if I have the read through on it, but I'll go over that here again in 7 minutes. We'll do a little bit of a Fed preview. We'll just recap everything we talked about, and then I will go over the statement with you guys, and I'll show you some potential changes that might occur. And then that's it. And then we're just going to go through that. We'll see. I'll get some analyst comments right before. And then that's it, man. Isn't that great? Look at this. The first one of the year, bro. You ain't even have. Look at, there's nothing. It's clean. It's a clean slate until today. Ain't that wild? That's nuts, man. That's nuts. So we are going to see. Oh, yeah, the earnings shit. I forgot. How are we going to do that? Oh, wow. So maybe because, again, Powell's going to end with like 30 minutes left. So what do we have? Qualcomm, Align's expense. Honestly, there's not that many good companies. So maybe we'll do Qualcomm, Align, and Wolfspeed. And then call it a day. We could do them real quick. But then Altria shit in the morning. Screw Royal Caribbean, Peloton. Just go ride a bike. Honeywell. So, yeah, we'll try to. I don't know if we have time. It might be a little bit more difficult. We'll do a speed run, though, for sure. Well, I don't know about now. I mean, if we start talking earnings, Powell's in 30 minutes. I don't want to be talking pricing on earnings because then, again, everything is going to change. You see what I'm saying? Like, we could try to price everything in now, but you may have a better deal after Powell speaks, better or worse. But for the most part, the event risk will go out the window. I do have a PHILO, but we may not have time for that either. So we got a lot on the schedule. So we're going to have to see, baby. But Powell is the main event. Powell gets to skip the line to the top, man. That's what's up with it. Ba-da-ba-ba-ba. If MO drops significantly, would you ever outsize it in your portfolio? Like, make it my biggest position? Yeah. Why not? I like MO. Again, now, what would be the reason it dropped like that? Because it's usually stable. You know what I'm saying? It really hasn't had that much, like, it hasn't had, like, a mind-numbing move either direction. So, but if it did, I'd be down. I'd be down for some MO. It's like the fourth largest in our portfolio, fourth or fifth. So you get me a discount. We put a couple deposits. If I put, instead of buying Disney or instead of buying Pfizer and BABA, if I put it towards MO, I could have made it the biggest in the portfolio. So I'm not opposed to it, and I like the yield. I even talked about that kind of with the goal for this year of raising dividend. We definitely can get it up there. Big Unk, how you been? I've been good, man. Are you ready for today? We're very excited about today, man. There's going to be a lot on the table. A lot riding on it. We'll go over stuff in a little. So let me go to the bathroom. Maybe that would be a good time. Let me get ready. Get me a water. Make sure everything's good. And then we'll go over some previews. Let me put out a stream alert so everybody is prepared. Mentally, I'm amazing. Even after I got a good PHILO to share with you, but God is good, man. Above all else. So I think PHILO's been helping a lot lately, and I'm excited. I was just having a midlife crisis not too long ago, but really, I love PHILO, man, and thinking about certain things, man, and above all, finger to the sky, bro. It's taken me a long way, man. Taken me a long, long way. My job, Cardinal Health, earnings, peak, please. I got you, man. We're going to hit them up. We got to hit all the earnings after Powell. So we will have to wait a little bit. So, again, we're just going to recap everything we talked about here for the Fed. We'll answer some questions. Again, there's not much. I'm going to go over the statement with you guys, and then that's it. Then 15 minutes after that, so around 4:45. Around what time is it? 1:45. I'll have analyst comments, and then we're gonna start going over all of that. So on that note, I'm gonna go to the bathroom. I'm gonna get some of this stuff ready, and I will BRB. Let's see. Do I have a commercial break? Well, I might have to just play you Uncle. I got to give you some new Uncle answers, bro. Paul freestyle. It came out today, baby. You can have it.
It's not what you think that you watch something feel like the exorcist. Spiritual warfare is much more subtle and it's much more tricky.
It's a call, baby. Yeah. It's a letter to the people. I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about their weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. I ain't gotta see it to believe it. If it's signing and it's needed, then my eyes don't need a reason. I won't even try to explain it unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the troops. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yup, son, that's gonna happen too. But the harvest's on the way. You gon' barter every day. That means you have to make a trade. Either life or it's the grave. The result will not remain. Every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run. They want it all today. My father is really awesome. Don't bother with giving snakes. Regardless, I can't control it. So either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank. A speaker without a face. A people without a race. They eating without a taste. They scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
It's a call. Chattadonia. Like that. Tell the people that Powell water is back. Ugh. Jerome Powell had rates, so cut them. I ain't got none, but I'm planning on raising some. No? Imagine Nick Timmerhouse going dumb. What? Anyway. Ugh. Y'all ready? So, Chattadonia, let's begin to talk about everything we already talked about, okay? So, we'll start from the top. I've said this many, many times today. I said it on the watch list, but I really need you to understand it, okay? I'm telling you, it's super important. The number one thing you got to get right now is that, where is it? Is it on here? Yes. Understand where you are at in the cycle right now. So today does not hold that much. Why is today important? Because it's the first time of the year. This is the first Fed meeting of 2024. And then on top of that, we have not heard from Jerome Powell in a month. So that's the two most important things if you really want to look at it and remember what happened last time. I just said this earlier. This meeting is not going to be as crazy as last meeting. It may be. Maybe we're wrong and we'll see what happens, but there is not a summary of economic projections. So if you want the craziness that you saw in December, you're going to have to wait till March because that's when the next SEP comes out. But like I'm saying, you have to really understand where we are at, where Powell is not expected to change much. Why is he not expected to change much? Because this is our fourth meeting if he does not raise rates. So this would be the fourth pause. In 2006, they paused for 9 meetings. In 2001 and 2000, they paused for 6 meetings. So there's still a lot of runway for Powell to waste time, if that makes sense, where he is supposed to keep rates higher for longer. He could realistically do this for another 2 meetings before we start to enter an era of too fast, too soon, any of that, because he still has a lot of time, okay? So that's the number one thing. Now, the other analogy that we've talked about today to understand what you are going to be getting here shortly is that the main goal of Powell through the statement as well as the press conference is Powell is going to open up the door for rate cuts, whether it be in March, whether it be May. He wants to open up the door. The door for rate cuts is going to remain open today. As he communicates, even this is the number one thing you got to realize. When I get to the statement, you'll see there will be a statement change, or there should be a change in the statement that will highlight the door being open, where Powell is going to leave it on the table that rates could be cut in March. However, there is going to be enough ambiguity where he doesn't want you to know when he is going to step through that door. So they want the door open. They don't want you to know when they're going to walk through it. Everybody say it with me. They want the door open, but they don't want you to know when you're going to step through it. They want the door open. They don't want you to know when you are going to step through it. So that's the number one thing. Okay? Now, let's talk about the craziness and what could be potentially very bullish. Okay? Before I get to the statement, or maybe let me go to the statement. I'm going to go to the statement first. We should go in an order of operations. Okay, let me go over the potential changes to the statement. So the last statement that you got, this is how it looked. This is how it read. Recent indicators suggest that job growth of the economy have slowed and yibbity-bobbity-boo, right? So there's only, I think, 2 potential changes. So this first line right here, we should be getting a change today. Does anybody know what would change about it? What do you think? How do you leave the door open without letting me know you're going to step through it, when you're going to step through it? What would you change? So the first statement, the first sentence, recent indicators suggest that growth of the economic activity has slowed from its strong pace in the third quarter. So what would you say? How can that change? I said jobs stronger than expected. Remove strong. Indicators have remained the same. There you go. That's the closest one. That's how you would go about it. Instead of saying that they have slowed from the strong pace, they could potentially remove this and just say that recent indicators suggest growth of the economic activity has remained solid or remained stable. So they could keep it there. So they don't have remained in here. This says has slowed. So pretty much get rid of the end sentence and then keep remained. So that's the first one. And then the only other change, I guess you could see it here. Job gains have moderated since early in the year but remain strong. What could you do here? And unemployment rate has remained low. How could you change this? Very minor. So this one is kind of technical. Why? Because this is our first meeting of the year. So he's not going to talk about earlier in the year. They're just going to say that over the past year or coming off of last year, he might just pretty much explain it, and they're just going to say has remained strong and unemployment has stayed low. This is where they say remain, but they're going to say the same thing on the economic pace in the third quarter. Okay? And then now there's one big line. This is probably the most important in the third paragraph, which I don't know if this will change because this could get the market jumpy right at 2 p.m. right when it comes out. There's one damn word. I guess 3 words that you could change. What do you think it would be? What do you think it could be? Anybody? This is where the committee seeks to retain employment. In search of these goals, they decide to maintain the rate. The committee will continue to assess additional information, implications of policy, and determine the extent of additional policy firming that may be appropriate to return to 2%. They'll take into account cumulative tightening, the lags. What else could they? What would they change here? This is it. This is the biggest one. So this should change if Powell And depending on if they add more than what I'm about to tell you, that's where it could get really, really bullish. But think about it. This was December 31st, bro. Imagine you read this in December 31st and you had a different reaction. It's kind of crazy. Think about how crazy everybody went last in December. It's nuts to think about. There you go, baby. You got it. Additional policy firming. Bro, that's crazy. Think about it. Even though we all went crazy last December, they were talking about additional policy firming. So he shouldn't be bringing that up if he's ready to cut. 4 meetings in, this might change. But here's the deal. What's the problem with this? Are you ready? Last month in December, people forecasted this to change, and it didn't. So that's kind of the paradox. That's why even last month, the statement said additional policy firming, but you got this bullish reaction. And then again, but that's where Powell kept it on the table where he might raise rates. You see what I'm saying? So, yeah, it was. And then Nick Timmerhouse came in, and then he did say, but at that point, remember, I said this last time, or when you go look at last meeting, unfortunately, Powell's press conference meant nothing last meeting. The dot plot was what drove 99% of the gains. You know, Timmerhouse got in there, and he kept pumping it afterwards and then the next day. But don't forget, the dot plot, that was the real driver. So we're going to see how this plays out today. But this should be changed because last time they expected it. You do bring up a good point about getting, pushback and making it inconsequential. So we'll see. But this should be the thing that really keeps the door open while at the same time still does not tell you the timing. But then again, changing this may be too direct. So maybe they have to wait till March, and then they change this in March when they're ready to cut. However, if that does get changed, March rate cut odds might go up a little bit. So we'll see. But other than that, that's all you got. Again, you might have changes in who voted for what and all of that, but those are the only 2 expected changes. So literally update on pretty much the economy staying sustained or remaining strong, not doing anything changing the earlier in the year, and then keep an eye out for additional policy firming. How does that change? That's what we're going to be watching immediately right when the data comes out. Ta-da! This is a hawkish statement, yes. So if this gets removed on paper, that would be dovish. Great question. Yes. But if it stays there, although it stayed last time and you didn't have a hawkish reaction, I would say at face value, this is a hawkish statement. So if it stays there, it will be hawkish, but it doesn't mean you're going to get clapped unless Powell really wants to come back to it and say, well, we still have additional policy firming that could still happen. The most hawkish thing he could say is they keep this statement. I don't think you'll get anything hawkish from this statement. So that's, I'm glad that you asked that question because it kind of brings you to the conclusion. The statement shouldn't be hawkish today. No matter what, I don't think you shouldn't have a negative read on this statement. I doubt that the statement comes in more hawkish. The only way it comes in hawkish is if they think that the job market, if they talk about the job market reversing and that they're saying that, literally the job market is actually getting much more tighter. And now what we saw, maybe if they changed the economic activity and they said it's much more stronger, and then instead of saying jobs have moderated, if they say jobs have moderated but are back on the rise or are looking to increase again, that could be hawkish, but it wouldn't be the most hawkish when it's all said and done. But that is where you would get a little bit more clapped on that. So that's all we're looking for the statement, though. So just additional policy firming. We'll see how they reference the economy and any sort of trends that can arise from that or what they're looking at, and that's it. And then now let's talk a little bit about the press conference. So what's the deal with the press conference? I don't know what to look out for besides how they're going to question him on March. So his goal, all I could tell you for the press conference is understand the goal. Powell wants, if they take out additional policy firming, Powell wants that door open. But at the same time, he does not want you to know when they're going to walk through it. So we are going to have to see the questions. I would follow Nick Timmerhouse's tweets. He has the propensity to kind of drive the market midway, but here's the deal. All that matters is the thing I told you about on the watch list yesterday. There's only one very bullish outcome, or there's pretty much two topics that you should be on the lookout for. So I just want you to hear this, because when you're listening, I want your ears to perk up. Anytime they talk about quantitative tightening or balance sheet runoff, specifically balance sheet runoff is what they're going to discuss. You should start paying attention, okay? Does that sound fair? Balance sheet runoff, pay attention. Quantitative tightening, pay attention. Those are two things, and if he answers them in detail, that is going to be very bullish. He should avoid those questions, or he should approach those questions with a lot more ambiguity. So he shouldn't give you an answer. He should briefly describe it, briefly talk about it, but he, just like when you would ask him about rates at other times, he shouldn't talk about it. But if they speed it up, if he talks about it in depth, then that's going to be more bullish. I wouldn't doubt the market to take that as green, or it'll subtly be green shortly thereafter. And then on the other hand, the other thing has to do with the bank term funding. If he gets specific on ending the banking plans and what they're doing with the loans, they're already stopping the new loans in March. But if he starts talking bank funding, bank term funding program, any liquidity to the banks, regional banks, pay attention. But specifically the bank term funding program, that is where you want to perk your ears up. Those two things, if there is detail, that's going to be a tell. You know, and why I'm bringing these two things up for you, because if that's the case, if they remove additional policy firming and then Powell goes into detail on those two things, the odds of a March rate cut are going to surge, because those are all very, very bullish. Other than that, though, like I said, back to the statement, what is going to be bearish in the conference is if Powell starts talking about real estate going up, the job market tightening up again, or even employment costs going back up. He hasn't. You know, every other speech in the last year, though, he has talked about every single one of these favorably. Do you guys understand? So even on like bro, your boy Powell, stop even caring about what's it called? Wage price spiral. He wrote that off 5 months ago. He didn't even give a shit about it. So if he does bring that up today and starts getting worried, that I would take that as a warning sign. If he starts saying that the labor market is tightening significantly and that they don't see it as calming down and he doesn't approach it with that soft attitude, then it's going to be that those would all be negative. But other than that, expect a little bit of pushback. He's going to push back against the odds, and that's the final thing. And that's all, when it's all said and done, a broader view of what we're looking at today is how does he combat how many rate cuts and then when. So that's another thing. A lot of the market right now is focused on the when. Like we said, the door goes open, and he doesn't want you to know when they're going to walk through it. But the other thing is, remember, there is still a gap between what the Fed thinks is going to happen and what the markets are pricing in. So we do want to see if he pushes back against how many rate cuts. He may bring up the dot plot or one of the questions. That will be the final factor. So on that note, are you ready, Chattadonia? We got about 12 minutes. And out of 12 banks, every single person thinks they're going to be a pause. So I got a couple of previews now. Let's get into some analyst comments. So this week's meeting is going to be the first of 2024 and is likely to be a quiet one. Fed is widely expected to hold rates steady at a range of 5.25 to 5.5, where they've been since July, and Powell probably won't offer too many details on the first rate cut and when it will come. What we will be watching for is any hints of how open the Fed is to a March cut and any insight in whether policymakers talked about tapering the central bank's quantitative tightening program. So Bloomberg, they're expecting that the rates stay the same. A few tweaks to policy statement will hint at how close or far the committee is from cutting rates. That's what we went over. The FOMC could add a sentence to the statement or release a short addendum addressing the pace of balance sheet normalization. Fed powers should offer more detailed guidance at the press conference on the condition for rate cuts in March, including a reference to upcoming CPI revisions, a discussion in broad strokes on conditions of the FOMC to begin tapering QT. Rate cut expectations have shifted significantly since the Fed's meeting in December. Policymakers signaled at the gathering that their next move would be a cut instead of an additional hike that they had previously forecasted, and markets interpreted that as a pivot in policy. Investors quickly piled into bets for a cut as early as March, but Fed officials have talked that down this month, expressing caution around declaring a victory too soon. Market participants then shifted their expectations for the first cut to May meeting, but softer labor data this morning and some resurfacing banking sector anxiety have again led investors back to March bets. Powell is likely to repeat that policymakers are carefully watching incoming data. Strong growth in a steady labor market also give the Fed more leeway to wait before rate cuts, and some officials have expressed concerns that easier financial conditions, stocks, and bonds have rallied in the past few months may reignite inflation. So the market continues to price for a pace of interest rate cuts that probably won't be realized. According to Bloomberg strategist Ira Jersey, price reflect expectations for steady reductions through late 25 down to 3.3 based on SOFR futures. That's basically the middle of the range that was priced over the past year, with the option market less convinced of a tail event. The option market priced for decent probability of rate cuts below 2% after the March bank hiccup, then priced the possibility of hikes on October on strong economic data. The market now has a high conviction of cuts at each meeting this year and most of next, yet we think the Fed will hold at some meetings unless the economy deteriorates quickly. So literally, unless the economy gets absolutely clapped, this is going back. The Fed has a lot of room to hold, whereas every bond, every future right now is pricing in a decent amount of rate cuts. Hold on. Let me check one more thing.
By taking two.
I'm getting the set up. Oh man, that thing's lagging. I'm getting multiple feeds up for Powell so I could find the fastest one. Okay, where were we? U.S. stocks are lower on the day so far. It'll be interesting to see what Powell says about the balance sheet. We know from the December meeting minutes that several policymakers said the FOMC should start discussing which factors could impact the decision to slow the pace of quantitative tightening. Since that meeting, we've heard a few officials talk about it publicly. Powell will likely be asked whether there was a full discussion about this during the meetings this week and whether the Fed will announce a policy shift soon. Funding pressures in the fourth quarter last year had some in markets concerned that reserves were getting too low. Investors are wary of repeating the 2019 market blow-up, which was in part fueled by the Fed underestimating the level of reserves needed for a smooth functioning market. Most Fed watchers aren't expecting anything specific on guidance today on reining in quantitative tightening. If we do get a suggestion on the timing of tapering up to 95 a month of the bond portfolio, that could spur demand for treasuries. The market has been acutely sensitive to news about supply over the past few months. Any visibility on the end of QT would alleviate pressure to the treasury to raise more debt from the public. So again, this is why I kept telling you, right now, if he is very specific on quantitative tightening, most people aren't expecting that. So if that happens, that's not going to be priced in. But again, if quantitative tightening, if we could get closer to an end, does that make sense why the bonds would get a massive bid? Why? Because if they start talking QT and earlier, that means less bond supply. Even if Yellen's dumping, now the Fed could go from a seller back to being a buyer. Oh, I hope y'all feel me. I hope they feel me, Chattadonia. So more from Ira Jersey. The Fed may give more color on when and why it might slow balance sheet reductions. We see the lowest comfortable level of reserves at $2.6 trillion. Based on the bottom-up analysis of the banking system, a slowdown in QT could mean runoff might continue into 2025. So Anna Wong, and Stuart Paul. I like Anna Wong better. Officials' main focus at the meeting will be laying out when and how to communicate about rate cuts and the tapering of quantitative tightening, with the balance of risks and rewards on even-sided and some crucial data points still to come, including revisions to CPI seasonal factors February 9th. Policymakers will likely hold rates steady while explaining their criteria for a future cut. If the FOMC did indeed start to cut rates in March, as we expect, the definitive communication will likely come from Fed Chair Powell's Humphrey Hawkins testimony in late February or early March. By then, the committee should have enough data to make a determination. Interesting. So they're saying, even if we are going to do a cut in March, Powell ain't going to say shit today, and then the meeting ahead of the March meeting, or like a speech, that's when he's going to come out and do it. Interesting. So the Fed won't release economic rate forecasts at this month's meeting, but we'll get an update to those in March. But Powell may be asked whether the rate cut forecasts for December still hold. The median estimate for February 19th saw 3 cuts this year. We're also unlikely to see dissents at this meeting, given that they're expected to hold rates steady. The 4 rotating members this year: Cleveland Fed Mester until she retires in June, Tom Barkin, Fed Bostic, and Mari Daly, head of the San Francisco Fed. For the first time today, today's focus is less on the Fed decision. Given a policy move either direction would be a shock. Instead, all attention is on the signaling and messaging that Powell chooses to send. Does he let the market hairs run loose through dovish comments on prospects of rate cuts, or does he hose down the expectations as he seeks to help control the narrative? If it's the latter, he could probably hold his ground for now, given the data shows the economy is in good order, but that line may get harder to hold as months roll by. So the first thing to be looking for in the December statement is whether the words in italics change from the December meeting. In determining the extent of additional policy firming and returning 2%, the committee will take into account the cumulative lags. If the Fed is expected to cut rates at some point in the coming several meetings, that language has to change. Morgan Stanley suggests something like in determining the stance of policy. So that's literally what I told you there too. So that's, again, statement. People are eyeing that. The overwhelming consensus of Wall Street is that policymakers will keep rates steady in this meeting. What are more closely going to watch is Powell's tone during the press conference. Jim Reed, Deutsche Bank Research. The big question is instead of the timing and speed of rate cuts moving forward. That's something they've explicitly acknowledged since the dot plot last meeting. December penciled in 75 cuts this year, which triggered a significant amount of market rally in response. He added that economists in his firm believe Powell will leave the door open for a potential cut, but will not express urgency around cutting rates. So yields in the dollar have particularly rebounded from declines following FOMC. Looking at the models suggests that market participants are second-guessing just how dovish the Fed policy stance will be, especially with strong economic data in recent weeks. And then Wednesday morning, markets had a flashback of March 23 regional crisis. New York Community had a surprise loss. It made a $552 million provision for losses, about 12 times analyst estimates. Think back to March when the fear was that we would have a whole lot of institutions out there with major losses on fixed income, which had tumbled thanks to rising rates, and that would have depositors yank their cash. Treasuries rallied this morning and stocks tumbled. Let's see if Powell is pressed on this in the briefing. All right, man. We got about 2 minutes. I think that's a good place to wrap it up. So, Chad, do me a favor, like the video. Make sure you guys are subscribed, okay? You call out anything if you see it. We're going to have, the best part is, actually, you don't have to worry too much right now. Why? Because if you don't know what's going to happen here, literally, we are going to get the statement, and then, once we get the statement, we are going to have to wait 30 minutes till Powell. So we should have an idea of what's going on. Again, like I told you, that statement change, additional policy firming. If we get a move there, then that's it. I don't know. The first move may be wrong. It may not be. It depends on that statement. So again, if they do change additional policy firming and it is aggressive, just watch out for it. And just like last time, if it is going to be a fade, you'll really watch it fade. You'll watch a big pop, and it will give it back. But if you watch a big pop, and it only gives back like a tenth of that move, be mindful that could be the crackheads coming out to play. So we'll see. Yeah, every 15 minutes for sure, though. So it'll take us 15 minutes to digest, and then after that, it'll be another 15 minutes, and then we'll see where it's at with Powell, and then we'll go from there. All right, Chad, 1 minute, 15 seconds. Let's go, baby. Like the video. Make sure you're subscribed, baby. And then let's keep it clean and have a good one. And again, I will chime in with my commentary here and there. In the wire, so you have a live news wire. Other news will come out here, but you should see in flashing red all of the headlines. So what I'm going to do is you guys could read from here. I'm going to go to the statement right away, and then I'm going to read you the quick things that are already prepped up and ready to go. All right, 45 seconds. My goodness. Here it is. Here it is, man. $30 seconds. All right, man. So be on the Fed website, refresh. Again, I'll read you the comments as they come out. Well, all we got to do, additional policy firming. That one, more or less, that's going to just be the easy thing we want to look towards. So you don't have to waste too much time. Okay, 10 seconds. All right. 1. Boop. And we're off. Interest rate decision is not on the website. Hold on. They keep rates the same. I'm not even getting one. What do they say? Inflation eased over the past year but remains elevated. Jobs have moderated since early 23. Remains strong. That's not good. So remember, I told you if that's still there, but then again, they had to keep one. Economic activity expanded at a solid pace. Highly attentive. All right, I have the statement now. So again, don't get on the pump fake. The committee does not expect it will be appropriate to reduce the target range. In assessing the stance, the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of committee's goals. The committee will take into account a wide range of information of labor market conditions, and that's kind of double-edged, but they changed it. But they're saying that the committee will monitor them because they said the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the goals. So that kind of even leaves a hike on the table. Does that make sense? They could have said it a lot more dovish, but I think that's pretty hawkish. They changed it. He opened the door, but it has a bearish tilt there for sure. So I'd watch out, though. Again, I don't think that's over just yet, man. I don't think, again, watch the bond. I think the bonds are going to get bid up no matter what. They made the change, but initially they said that they left that the way they worded it was very again, that still could mean if there's other risks that emerge, they could go the other way, but they did change it. They said risk to goals are moving into better balance. Economic outlook uncertainty remains highly attentive to inflation risk. They don't see cuts until more confident inflation nearing 2. Reserve leaves key overnight policy range at 5.2. Fed judges the risk to achieving employment inflation goals are moving into better balance. Says they do not expect it will be appropriate to reduce rates until there's greater confidence inflation is moving sustainably towards 2%. Fed to consider any adjustments to interest rates. Yeah, speech is all that matters. That one's slightly hawkish, though. I would give it a slightly hawkish tilt. But then again, you got what you wanted, but it kind of, it sounds kind of aggressive for the most part. Let's see. So I'm going to be eyeing bonds. Give it like 15 minutes. Wait till you get Timmerhouse. They keep the statement language on inflation remaining elevated. So that one's not good. Again, labor, I don't like the labor market strong. Said they're not confident. Again, that was a hawkish read for sure. But then again, that statement change was good. Do you see what I'm saying? Yeah, the statement changing is good. Everything else, though, but I think the statement change was a double-edged sword. They said goals moving in a better balance. No specific guidance on timing. No rate change as expected. So we'll see. I'm going to go for the bonds again. I'm going to look for a double dip on that. So I'm watching out for there. Futures down. You dropped a little bit, but keep in mind where we're at with everything else. This is very small compared to last time. You may hit that low. We'll just watch for the bonds, though. It's going to be all about Powell, though. Again, the door's open. You see what I'm saying? The door's open, but Powell, again, all of those statements kind of push back against the amount of rate cuts, which I do. That's what I'm expecting now. I think Powell is definitely going to fight back against rate cuts. The amount, remember, he's going to try to defend 3 cuts. The market's at 6 or 7 right now. Slightly hawkish, but then again, they made the change. That's it. Additional policy firming, he just changed it. That's it. So they said depending on risks, but risks could be both the economy crashes or inflation goes up. literally what we've talked about all day today. I'll give it a second. Powell comes on in 30 minutes now. They're saying the outlook to economy is uncertain, so they're ready to take action if needed, remaining highly attentive. That's why I'm saying it's a double-edged sword. Inflation's not back, but he's playing both sides. He changed the statement, which was, again, that was the bullish part. That means you could even get a rate cut as soon as March. Now the statement is even changing, but at the same time, he packaged it up with the same reasons that would make him want to raise rate, and then talked about them being risks. So he's essentially saying that if the economy slows down, they could cut rates, but also if the inflation or the data gets significantly better, the rate, that rate changes, policy firming, whatever, that could have its own little change there. So that's the thing where it's both bullish and bearish at the same time. And then everything else, they said inflation's elevated, labor's still strong. None of those are good factors, but you've heard that in the last 4 or 5 meetings anyways. So does that make sense? So it has I think a little bit of a hawkish tilt, but that one statement changing is very good. Again, the door's open. You just don't know when he's going to walk through it. That's why I'm like, I wouldn't sell everything and dump everything and be terrified right now. Like I'm saying, I think the door is open, but I don't think the certainty around it, it's not quite there. Yeah, a little bit more of a cliffhanger. So let's see. Nick Timmerhouse remains unchanged. So these are all the changes that we got. See, here coming up. Yeah, they added a lot here. The committee judges that risk to achieving employment. This is where it was like better balance, but then they said economy's uncertain, and then highly inflation risks are there. They changed the whole damn paragraph. That's the big thing. And then they said been expanding at a solid pace. And then early last year, they kept that. So the fact they're mentioning, I thought they would have changed that one a little bit. And then again, this is where it gets weird. They're saying an evolving outlook, the balance of risk, they do not expect it will be appropriate to reduce the range until greater confidence. This is the not good part. And then where they added it, that's where they followed it up by getting rid of policy firming. So they're saying there's other risks and things in the labor market that they're going to be looking at. So very interesting. No, he wants it to be a double-edged sword. They don't want you to go too crazy just yet. What time is it? It's only been 6 minutes. So give it a little bit. But Timmerhouse is already saying tightening bias is gone, but in a way it says that a cut isn't necessarily imminent. So that's to Timmerhouse. I could get that. That's a great way to put it. The tightening bias is less, but the way they worded it, it doesn't give you all of the juice that you wanted. So we got to wait for the follow-up questions. They're trying to not really hold back the bulls, but they're trying to hold back the amount of rate cut odds. Remember, Powell and the Fed, their dot plot last month has 3 rate cuts on the year. Right now, the Fed futures are at 6 to 7. So that's why they don't want you to think it's going to be imminent, because if it's not imminent, then that means the less amount of rate cuts on the year. But they also don't want it to seem as if that they're still in a tightening stance when they're clearly not. It ain't over till Powell speaks. The Fed is removing the reference to further rate hikes in the statement, but policymakers clearly want to emphasize a cut is not imminent. The committee does not expect it will be appropriate to reduce target range until it's gained greater confidence and inflation is moving towards 2. The immediate takeaway is that the removal of the ongoing assertion of another hike was possible. At the very least, this suggests a neutral to dovish stance. I could get behind that. I'd say even then slightly hawkish to neutral, but then again, tightening bias is gone. Maybe neutral to dovish. More emphasis on neutral. I'm getting hawkish. It depends on how Powell communicates it. So right now, I would say you're neutral. But if Powell wants to bring the hammer home, this could get bad pretty quickly. And then at the same time, the crackheads could come out to play real soon. If Powell doesn't, if he gets asked the wrong question and says it the wrong way. But there is definitely, the tightening bias is gone. That's even the Timmy pump. The language about policy and additional firming, it's now neutral. The panel lays out general criteria for considering it. Note the word adjustments. That's not saying easing, but it says there's a cutting bias as the committee does not expect it will be appropriate to reduce the target. That's what I was saying in the beginning. They changed the statement, but adjustments doesn't mean cut. They could that could mean they could adjust it the other way, but then the fact that in the first sentence prior to that they're talking rate cuts, that could kind of be the kicker there. Well, insiders sell. No, there's still more on the. Remember, I told you guys we just talked a lot about it, bro. There's nothing. This is what nobody's talking about right now. There's one thing that was not mentioned at all. Everybody's getting already caught up in it, and this is why we got to listen to Powell. There's one statement or reference that was not included in the statement release. Now that we've gone through, we knew the statement changes. That's what we were looking for. You know what I'm saying? But this wasn't big enough to move it. Exactly. Quantitative tightening. Nothing. Balance sheet runoff. QT. Bro, Powell, whatever he says on that, there's still a lot of juice left. So that wasn't even talked about. So we got to wait till the conference. We'll see how he wants to reference these quote-unquote adjustments, but the quantitative tightening was left out of all of this. It's never in the statements. Yeah, but some people were looking for an addendum. I read that right before, either an addendum or something to add to it to maybe discuss it. But, you know, it's not as if even then the way that the whole wording was right there, it doesn't even give us any insight into that whole situation. That's going to be the wild card right here. Not to mention, I want to see, again, they were talking strong employment. That's the part I didn't like. I think the strong employment reference and not being confident, I think that's what gives it more hawkishness. But I do want to see what Powell says about the labor market. I think that one is going to have a much larger effect. So bonds are kind of holding down here. So watch. So is the SPY. And then IWM down 0.8. NASDAQ down 1.4. Gold just, I want it cheaper. It's hard to say. It might run up during the presser. But I think bonds, honestly, I'm waiting. I might grab another bond, but since I already have a lot, I don't want to push it. I want to wait a little bit and give it like 3-4 more minutes. So again, we might get one. If we get one more flush, watch if that'll be the little mini bottom. Otherwise, in 4 minutes, if we keep dumping, we're going to get a little bit bigger of a flush. So we're almost there, almost 15 minutes so far into this, and then we'll have another 15 till Powell. So FOMC is out and is expected to remove the reference for policy firming, change to any adjustments. It pushed back against the notion of an immediate easing bias, saying that does not expect appropriate and that they're not confident. That doesn't sound like a bank set to cut in March, and probabilities there should be a nosedive. There was no mention of QT tapering timetable. All in all, it's not as dovish as the current rate cut pricing requires, though there's still room for the FOMC to gain to the requisite confidence about falling inflation in March to signal a chance of a cut in May. Beware of chasing yields higher, though, because they usually come back down during the press conference. Whether it's a pushback of March or merely stating the obvious, we should get more insight with the press conference. It'll be really interesting to see how Powell fields the questions about March. Is it on the table at all? If he leaves the door open even a bit, we could see March bets pick up. So that's the thing. So yeah, that is a good point. Honestly, is Powell now, someone's going to ask him about, what's it called? They're going to ask him about March. He could fucking slam the door in their face. You see what I'm saying? So, like, if he comes in and then if literally they just say, if they ask him about March, yeah, they're totally going to ask him. But then he comes in and just says no chance at all, then that's it. Then we're going to see what happens there. Oh, whoa, what's going on? Yo, we got a raid on the Twitch, baby. What's up? Oh, let's do it. That's a big raid. Oh, my goodness. Oh, I hit the horn on YouTube. That's offensive. My bad, guys. Let's go, baby. What up, stock guy? Let's go, man. I hope this could help you out, man. So listen, I'm kind of a crackhead when it comes to Powell, so I love you guys rating. I appreciate it, stock. So let me get into all of this, though, because we got to go over all of these, but let's go. My OG Chad, show him some love, baby. Show him some love, baby. That's awesome to see, man. That's awesome. That's awesome. We got some plays coming up too soon, so get ready for the presser. So what else do we have here? But yeah, like I'm saying, if he shuts the door on March odds right away, that could get you a little bit more negative pushback. There's the bonds 10-year running. Neil Dutta of Renaissance Macro says, what exactly does greater confidence mean? Waller said this back in November. I'm increasingly confident that the policy is currently well positioned to slow the economy and get inflation back to 2%. Just feels like a bunch of nonsense to get the hawks to come to consensus. So remember that it ain't over until Powell speaks. So Ira Jersey says, unless Chair Powell shifts tone quite a lot, we read some of the new sentences as taking out a March 1st cut. We still think the market is pricing cuts too fast given the data. Some of the recent bull steepening may unwind further unless Powell is more dovish in this statement. Interesting, man. Let's go, bro. Look at the Twitch, man. God bless y'all. Let's go, man. So, again, we got 30 seconds. So, like I told you, if we're not flushing after the first 15 minutes, this will be a pivot point on the market and the bonds. So, watch out for that. Let's see what we got. Yeah, God bless. I'm going to hit you up, stock guy. That's love, man. I appreciate you. I've never been really rated like, dude, I'm tripping out, man. This is awesome. Y'all rated me as I'm, like, reading everything and going crazy. Because I've rated people before, and they've, like, gotten mad at me. So, I hope you know I'm not mad. I love it. God bless y'all, baby. Yeah, W raid, man. So get ready. We're going to have Powell press conference. I will interject. If YouTube gets too sensitive, I'll only interject on the Twitch. So we'll see how it plays out, man. We'll see how it plays out, man. Let's see what we got. Yeah, what's up? I could do it now. You want me to... Hold on, Jerome. Tell Jerome better cut the rates. Thank you, stock guy. I probably appreciate it. You did. What you did right there. You bring dignity. You brought dignity to the table. I love it. Let's go, baby. That's what I'm talking about. Yeah, man. Oh, yeah, we are fully rated. All right, pivot point here, so get ready. I mean, right around here, low end of the candle, bonds coming down. It's either we take next 15 minutes, we sell into Powell, or next 15, we bounce. But, again, I do think neutral, slightly hawkish bias, but there's still a lot of there's a lot of room for Powell to smack everything down, or that's the thing. If Powell comes in soft, if Powell comes in like a puppy dog, then this could all bounce right back up. Unfortunately, fortunately, depending on how you want to look at it. So that's all you got to watch out for. You still have Powell, how he directly describes it, and then quantitative tightening. That's the one factor that I still think is a really big wild card when it's all said and done. If he's late, it's bullish. We'll find out. It could be anything. See if Powell gives any insight. We don't have anything in the statement nor the accompanying implementation note about changes to balancing. That would have been quite a surprise, as we're likely to get some telegraphing from Powell and other officials before that changes. The bank corp, Clarita, says it does not seem systematic for now. Gregory Farinello, head of U.S. rates for Amerivet, says the statement makes sense. They're taking additional rate hikes off the table. They're communicating to markets the patients want to embrace coming out of transitory. Yikes. So that's one analyst already shifting bullish. They're not even looking at the negative. Disney lawsuit against Ron DeSantis dismissed by federal judge. That news is coming out now. Remember, you have the wire up here, too. I don't know if that one's hit there, but there is other news coming out here live. Yeah, Disney lawsuit. No more Timmer. Again, Timmerhouse is pushing back against when the rate cuts will happen, but he's taking this as bullish, and then a couple of people already doing there. AMD says, CEO says planning for a large number in AI chip demand. So you got AMD coming out with stuff. We should have put up the dollar. 10 years trying to get a bid right now. So is the 30-year. So let's see. I'm gonna look. I still want bonds, but I don't want to get too crazy with them. What time is it? All right, we got 12 more minutes. I'm queuing up one bond play. I'm not going to take it yet, and I'm waiting on that. Last time Powell, it was the dot plot. That's why I was saying today isn't going to be like that. If you want to see a crazy move today, homeboy has to start talking about the quantitative tightening. That's going to be the number one thing. That's where you're really going to get like a crazy move. Otherwise, right now, the statement, it's like we got what we wanted, but the gift wrapping was really ugly. The statement changed. That's bullish, depending on how you want to look at it. But then everything else about it it has a lot of ambiguity where, again, Powell, you don't know what he's going to say about March still. So he's about to clear that up here probably in 10 minutes, and then we're going to hear all the other factors. If again, he said the job market's strong, they're not confident in 2% inflation, and that they still think, again, the labor market is there and things are in better balance. But they said earlier in the year, that's the part that kind of blew my mind. Remember, I was showing you here, they didn't even change the, what's it called? They didn't even say anything about they referenced last year. So they even said they've moderated since early last year. That means you're pretty much following the same train tracks from not too long ago, which is kind of nuts to think about. Quantitative tightening, QT. So in other words, balance sheet runoff. That's what we said earlier. When you hear the words balance sheet runoff during the press conference, that's what you're going to want to pay attention to. That's going to be the wild card, because he may give slight details to it, but if they say, like, if he gets into really big detail, the market's going to take that as bullish. Because, again, what's going to happen if they start talking not selling off bonds anymore, that means it's going to be very bullish for the bonds, and then the crackheads will come out. The spreads on the bond futures are high. I'm going to go with the other ones then. No, wait, how many did it? Okay, got me one. I grabbed another bond. I grabbed a future on the bond option. Or excuse me, a future on the 10-year. On the 10-year. What am I saying? I got an option, a call option on the 10-year futures. So I got a 113.75 for March. There's about $200 total, or 17 basis points, if you know how to price the commas. Which strike 113.75. I can't trade Chinese markets, no. Unless it's an ADR. You could trade the Nikkei futures. That's about it. If you're scared, you got options. Yeah, just in case. And I have a bigger position on the bond futures, so I don't want to go too crazy until we get the pressure. But they barely move. That's the crazy part. The bonds are mad stable right now. So like I was saying before this event even happened, I think equities have a higher chance of moving like bigger because, again, there's just still a gap. But the bonds are still doing their thing. Bond buying, accelerated balance sheet runoff, major QT buzzwords. Just really balance sheet runoff, quantitative tightening, and then BTFP, or Bank Term Funding Program. Keep your eyes out for that. And I'm not trading Forex. I trade futures. So you could trade Forex with the futures, but I'm very skeptical of those Forex brokerages and shit like that. So watch out for that. Why are the T-Mobile calls up? I didn't even pay attention. Are they? Habibi, I take it. Yalla. No, yours are up. Mine aren't. But yeah, we got what we wanted. The market got what it wanted, but it definitely came with conditions. And now Powell's going to need to describe that. Yo, TMOs went up. You got 50, almost 100% on the TMO put, so that one's kind of coming to life. I don't know if you want to run that one up. I grabbed the March ones, yeah, for the 10-year. ZN, it's ZNH24. 23 days left on the contract. It's already coming down, though. So we got 7 more minutes. So, again, it looks like second 15-minute window already pointing down there. Bonds a little less. He said the market got what it wanted, so it'll bounce. Not necessarily, because Powell could still, like right now, you got the statement change. It's opening up the door to that rate cut, but Powell might just get rid of the whole imminent nature. And then with what they already put in writing, I mean, this whole thing, it just doesn't sound like a Fed ready to cut rates anytime soon. Maybe down the road, but not like imminently. But then the job market, inflation, remaining confident. How many times have you already seen Powell play this damn game of, well, we're not confident. I have to be what the hell is confidence? It's a very non-objective it's a non-objective criteria that Powell is outlaying. So that's why what he says here in the next couple of minutes, that's what's going to be the most important. So we're going to find out. You didn't miss it yet. It's about to start. You got about 6 more minutes, maybe 5 minutes, 30 seconds. But so far, it's a small reaction, though. Again, compare this to last Fed. You're dancing around a little bit, but this isn't that big of a reaction as of now. That is the irony. Well, they said inflation is good. They talked about it, but they said they need to be confident on it. Like I'm saying, it's very non-objective in that. But realistic, does cutting rates too soon sound crazy? Yes and no. So that's what we talked about there. This is the number one thing we've been covering here this morning, is that it's a two-sided approach. So like some people want rate cuts, some people don't. But like you have to like really think about it when it's all said and done. Like if you cut rates right now, you could avoid the Fed being too late. But then if you cut rates right now, you could run up into a problem. But the only defense for saying like, well, we have to cut rates now, don't forget, throughout the history of the Fed, they have been unanimously late. They have been unanimously wrong in cutting at the right time. So that's why it's like if they hold and they hold for too long, that's a problem. But then once again, if you do cut the rates now and early, like you're saying, why the hell would we cut in March? If you do that in March and then you cut too early, inflation comes back up, and then then before you know it, we're back into the 70s, and then all of this work and tightening was for nothing because they cut too early, and then everything started going up. Yeah, exactly. It's a fine line between effed and very narrow. How long? That's the problem. So how long they could hold it, that's why I keep bringing it up this morning. If you go to look at like 2000 and compare it even to like 2006, they held it for 6 meetings in 2000, 9 meetings in 2006. You know what I'm saying? So that's it. Let the doves loose, baby. Oh, good timing, Chris Bull. My man. Horna. And shout out the Raiders on Twitch, bro. I see you, baby. I'm actually very impressed, man. These Raiders, they be asking good questions already. They already getting involved in the discussion. God bless you, and thank you, Chris Stock Market Bull. Let's get it, man. What a day. So, all right, man, you got 3 minutes. 3 minutes to the presser. I got 2 live feeds up for it. So let's see which one's faster. Sadly, I think the Fed's YouTube is faster than the Fed's YouTube is faster than the damn Fed website. Let's go. He donated in Rand, baby. That's South African Rand. Basically a 99% chance of reinflation or recession with a 0.1 chance of soft landing. Although I understand your sentiment, I don't think it's that extreme, but it's about 30%, I would say. Because again, if you take from 1970 till today, the last anytime we've had inflation and Fed rate cutting and hiking cycle, only 3 out of the last 10 times from the 70s has it arrived in a soft landing. So they may have a chance to pull it off, but again, this whole dynamic of cutting too soon or cutting too late, it is a very, very big problem. Again, it's paradoxical. It is. Someone said it earlier this morning. They said the duality of risk. That's all. It's like some people want rate cuts, some people don't, but both of them have a risk. That's what everybody has to understand. Is like if you don't cut rates, you run the risk of Powell ramming you into a wall, and then if you cut rates too soon, all of this was for nothing, and then we start running back up again, and then you play what you have to. So I could get behind it. So let's go, baby. Again, the conference is starting here in about 1.5 minutes. So I don't know. How do you want me? Some of y'all like it when I shut up, but Twitch, I'm not going to shut up. I usually use the Twitch as my secret communication when everybody complains, but I think I'm going to interrupt every time I get the chance to, okay? So bear with me. Otherwise, go watch it on the Fed website or the Fed YouTube. You're not required to listen. It's okay. You could like the video, but I'm going to try to keep you up to speed. Again, there's a lot going on, so a lot riding on the table. Let's see where this takes us, baby. And again, just keep a lookout for here. You also have the wire going on. This is a live news wire, so there's going to be a couple of things here. Well, let's see. Bop, 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 bop. 1 minute. 1 minute. Let's go, man. Interrupt. I will just tell you bullish or bearish. I'll try not to, unless he says something crazy. But again, perk those ears up. Quantitative tightening, anything on bank term funding, how or if he shuts the door for March, and that's it. And again, maybe somebody asks him what he means by the word adjustment. Can you be more specific, young Powell? I would like a more specific one. All right, man, get ready. All right, we're getting in live feeds in. They're still playing weird audio. I think this one's going to be the faster one. So we got a visual. Target not acquired, but we have visual. All right, audio is on. They cut all of the intro music. 8 seconds. Again, take note of how long it takes to get to the podium. That'll be if you want to ever go back and compare it with the review. And let's see. Again, so second 15 minutes was towards the low end of the candle. Again, bonds are down less than equities, but we're still barely moving right now. Let's go, baby. 30 seconds still. I don't think he's never taken more than a minute. Yeah, there it is. Arriving at the podium at 40 seconds. Speech starting.
Good afternoon.
45 seconds.
My colleagues and I remain squarely focused on our
audio.
dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high.
Remember, this is all pre-written. This is all just reading out the statement.
And the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation.
That's kind of bullish.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal.
Okay, there's a confidence.
Longer-term inflation expectations appear to remain well anchored,
Again, this is all
as
pre-written.
reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and
Market likes that.
if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Okay, that's the
But
door
the economy
open.
has
Read it.
surprised
Market just likes to
forecasters
hear it.
in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and
part you don't
progress on
like.
inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses
It's
across
about
the
to end now.
country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability
Very
goals.
small reaction.
Thank you. I look forward to our questions.
Gina Smiley from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%.
We have confidence.
Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for
He hasn't said that before.
better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are, in fact, on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6-month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about.
You just don't want to lose
In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
Yeah, he likes it. No, it's
And
bullish.
I'm sorry if I could just
You
follow
just
up
said
very
they have
quickly.
confidence,
When
strong
you say
economy is
that
good,
you want to make
the
sure
job
that it's a
market's not
true
that bad
signal, is
for
there anything
even
that you're seeing in the
strong.
data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten. Now it probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmerhouse. Dang, he's number 2.
Nick Timmerhouse of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for 2 reasons. One was the risk of a wage price spiral. 2, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these 2 tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those 2 risks?
He's asking about March
So,
with that. Could be a trap.
As you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, you know, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our Teal book, and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them.
Dollar keeps coming down.
And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is, implicitly, is so in theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing,
big driver on this. He just wants
we
more.
don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around for to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
So CPI drops before March. Is that what you're saying? Someone's going to
Thanks,
follow
Chair
that.
Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above, core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about,
jobs
in the
or
base
inflation,
case, the economy is
leading
performing
to more
well.
imminent
The labor
cuts.
market remains strong. If we saw an unexpected weakening in certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things, would argue for moving later.
Yeah,
in the base case, though, where the economy is healthy and we have
jobs come down,
we have
faster,
ongoing growth, solid growth, we have a strong labor market, we have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later.
That's the bearish part of today for now.
We're not at a place of really working out those kinds of details, because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel.
So first little read off of
Chair
that.
Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation, so the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say.
Timmy reiterating
so that will
with
help. But at the same time, we think goods inflation will probably. It's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Steve.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that working with tighter policy, which has enabled the supply side to recover, I think that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So So I think the question is when that peters out, I think the restriction will show up probably more sharply.
I think we're all dropping. They said they were not even talking about rate cuts.
Thanks for taking
and
the
then
question,
the soft
Mr.
landing
Chairman.
question hit. He said no soft landing.
You mentioned earlier
and we
we're not
gave up
seeking
everything.
a weaker labor market. I think that you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market by many measures is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think, job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens, it's probably will take a couple of years to get all the way back. And that's okay. That's okay. But we do see, you saw today's ECI reading, the evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is, I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to where it's still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance. And that's what we want to see. And one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here, and why we're not rushing.
More surprised if it just stayed stable at a higher rate.
I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor? Is that going to give you more confidence where things are going?
We'll just have to see. Yeah, we'll look at those. Last year was a surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation.
He doesn't want to say soft landing.
This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And of course, 12-month inflation is above target and getting down closer to target. Is not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question, we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward. Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call, when you ask me about unlikely, in the near term, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is
is this the start of
base case is no March cut?
Is it the start of a cutting cycle, or could it just be a one-off?
That's going to depend on the data. The whole thing is this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that.
Flipping on that.
And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves.
He just took March off the table.
There are risks that would cause us to go slower.
Not likely.
For example, stronger inflation, more persistent inflation. There are risks that would cause us to, or if they happened, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation. Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
New high on the day.
Victoria. Hi, Victoria Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about, the level of wage growth that's consistent with 2% inflation. We've obviously seen, you were talking about ECI this morning, in which it's cooled a little bit, but still sort of above what you wanted to see. Growth has been very strong. How much of those numbers do you attribute to productivity, and do you see that productivity as sort of just temporary because of the factors, the labor and supply chain factors you were talking about, or do you think that productivity growth will fade over time?
So this is a really interesting question, and I think my own view is, I think if you look back to the pandemic, you saw a spike in productivity as workers were laid off and activity didn't decline as fast.
Completely off
and then
the
you
table,
saw
for
a
the
deep
most part
trough
it is.
of productivity. And then over the last, you saw high productivity last year in 23. I think we're basically in the throes of getting through the pandemic economy. And the question will be, what is it that has changed? The productivity tends to be based on, fundamental aspects of our economy. Is there a case, will it be the case that we come out of this more productive, more on a sustained basis? And I don't know. What would it take? It would take, people talk about AI, but my guess is that we may shake out and be back where we were, because I'm not sure I see work from home doesn't seem like it's a big productivity increaser. AI, artificial intelligence, generative may be, but probably not in the short run, probably maybe in the longer run. So I'm not seeing why it would, but right now, I would say the productivity is kind of what falls out of the broader forces that are driving people in and out of the labor force, and activity returning and supply chains getting fixed.
Right, so would that be behind why we've seen such strong growth, but we've also seen inflation fall, that maybe there's just a higher level of productivity
That's
right
one
now?
way to look at it, yeah.
Weed News, MSOS, Washington, D.C. says marijuana
Hi, Chair Powell, Nancy
rescheduling
Marshall
imminent.
Genser with Marketplace. I want to ask a little bit more about housing. I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected.
Trump says he would
So
seek
when
to
we
block
think about
the non-U.S. steel deal. Again, you're still done everything from
our
March.
statutory goals are
taking March
maximum
off the
employment and
table,
price
God, I
stability,
just
and
clapped
that's what we're
everything.
targeting. We're not targeting housing price inflation,
two was the,
cost of
what's it
housing, or
called?
any of those things. Those are
The soft
very
landing
important
and the other
things for
question.
people's lives, but they're not. Those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address. But where it comes into play very specifically in our work is inflation, which is a combination. It's really rental inflation. You're taking owner's equivalent rent and then actual rent paid by tenants, and you're running that through the CPI calculation or the PCE calculation, the one we look at. And what that's telling you is that market rents are increasing at a much lower rate, or even being flat, and that will show up in inflation over time. It has to, as long as that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress asking the Fed to lower interest rates to make housing more affordable?
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly, mostly for people at the lower end of the income spectrum who are living at the edges, at the margins. And so for someone like that, high inflation, in the necessities of life, right away you're in trouble. Whereas even middle-class people have some scope to absorb higher costs. So we have to it's our job, it's what society has asked us to do, is to get inflation down. And the tools that we use to do it are interest rates. So that's how we think about that.
Courtney. Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes.
Get ready for this one. Balance sheet runoff.
I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now.
No rate cut in March, but they're going to be talking in depth on runoff
Quick
in
follow-up.
March.
Is it the case that the Fed would decide to lower
we'll see how that
rates
balances
and
out. I don't know
make
how the
adjustments
market
to
will
the
take
balance
it,
sheet
but you
runoff
get
in
some
tandem?
guidance, not as specific.
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening in one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
March.
Thanks.
He's going to talk about it in March. Interesting.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say, it's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Hi, Chair Powell. Evan Reiser with M&I Market News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the way down to zero, or is it something that you can start with a couple $100 billion there?
Not a decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to zero. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues
has to go to zero for them to
will
do
be briefed
QT?
up in the committee. We'll get into all of the issues that will be arising over the course of the next, let's say, year or so.
Greg.
That
Thanks,
kind
Greg
of
Brock from
balances
Market
out
Watch.
the March
Chair Powell, I
comment a
want
little bit.
to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
I don't have a stance on that. It's not something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Next.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
as you mentioned, core PCE has been running at 1.9% over the past 6 months.
Again, any little bounce right now is off
and you
QT
guys are
top.
actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look, as I mentioned, we're going to be reacting to the data. If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be, but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
Well, I think if we came to the view that that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Daniel. Hi, Chair Powell. Daniel Avis, Agence France-Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case, and we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But it is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Menace, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders in person to learn more about the economy in real time, given that some data are subject to large revisions, the issue of seasonal adjustments being thrown off balance, and many readings of the economy being quarterly. So did any members say they've learned anything not yet reflected in the data, or have you yourself learned anything through anecdotal evidence that hasn't been captured in the data yet?
Well, yes. I'm a big believer that yes. So we do meet with outside groups who come from all different parts of the economy, and I always feel like I spent most of my life in the private sector looking at individual management teams, and then building out from that. And so starting with GDP data and working into what's actually affecting people's lives is challenging. It's very hard. So I really like anecdotal data. In addition, as you know, the 12 reserve banks have really the best network of anyone. That in all their districts, they're talking to not just the business community, but the educational, medical, all nonprofit community, They have arms into all of that. And so when they come back, that's what goes into the beige book. But that they come back, and what each Reserve Bank president does is, during the Outlook go-around, they'll say, in my district, and they'll talk about 100 conversations. They won't talk up, they will give you input based on 100 conversations that they've had with people of all different walks. And I personally find it very helpful in understanding what's going on. And also, I think you hear things before they show up in the data sometimes.
Did any of them notice slowing economy based on what they've heard from like their district?
Yes, I mean, if you look back at the last, not this beige book, but the one before, there was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing, not in every district and not every person that we talk to, but you're overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Let's go to Jeff Cox for the last question.
Thank you, sir. Jeff Cox from CNBC.com. Just kind of looking to put it all together. You talked about basically the economy looking strong with 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And then also, perhaps, are you worried at all that the economy is maybe a little too strong right now and that inflation could come back at some point?
I'm not so worried about that. It's again, we've had inflation come down without a slow economy and without important increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So I think declining inflation, continued declines in inflation, are really the main thing we're looking at. Of course, we want the labor market to remain strong, too. We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
That's it? They usually say last question. Wait, how come? Very interesting. All right, Chad, it's very simple, man. It started off, again, the statement changed. They were talking about, needs more confidence. That was the adjustments. And then the first question, they're like, do you have confidence? He was like, we already have confidence. And then the market took off, started ripping. It didn't even matter what was said after that. People were taking that as good, the timing. And then the pace of March got mentioned a little bit. And then you started to drop a little bit. That's what kind of pulled you back. And then you had soft landing questions in between there. Then you kept dropping. But then right here, man, that's it. He took March off of the table. They asked the guy right after Michael McKee and then Steve Leisman. Their questions didn't really move much. And then right when he nobody asked about banks. But right when he said March, he said, we're not even discussing the March meeting. He said, we didn't even discuss rate cuts at this meeting. So some people were talking about March here. It slowed down. Then the soft landing, he doesn't see it there. But then he said the base case is not a rate cut in March, and that's it. And then we dropped, and then this little bounce where we stabilized, it was the question on quantitative tightening. So what he said on quantitative tightening was that we're not really, we're kind of thinking about it, but we're going to go into a full discussion about that in March. So literally, that QT, I told you it would be a little bullish. If anything, it just stopped the decline, but all you had here in play was literally just quantitative tightening saved you, but then taking March rate cuts off the table, saying that was very unlikely or not likely at all, that's what killed everything. And I mean, we're just, hey, what are we down? NASDAQ's getting destroyed. You're down 1.2. I guess it's like a bigger Fed meeting more than not, but you're going to have to let it digest. Notice the bonds are still there, so I'm glad we didn't trade anything else besides the bonds. They came down, but they're literally around the same levels they've been out all day, but that's it. Now you got to go through March repricing. Now everybody, I think unless the data deteriorates, he was talking about the jobs market data, if one or the other moves down, like that's what started to have kind of a good effect. He was saying if the job market moves down, then we'll like it. That's where you started ripping even more after the confidence, but he said he's weighing for inflation. But yeah, no March cuts, but then quantitative tightening in March, that's when they're going to have the discussion. So you had one really bad comment, and then you had a semi-good comment from quantitative tightening, but he did give more detail. So we'll see. It usually does rip after the press conference, but like legitimately the QT question that stopped us from dying and why you died was literally because he said March rate cuts are off the table. So honestly, at this point, the data will be highly scrutinized until then, but this was an elaborate punt until March. But then he did take off March off the table. So now, over the next couple of days, you're going to watch everybody kind of digest or decide what happens now with March. March at 35, it should go down. I don't know. I think maybe they'll hold on a little bit, but the March rate cut odds should get washed out after that. Because, again, we started dropping a little bit on any sort of like little discussion with it, and then he just took it off the table. There was one or two analysts, and even Nick Timmerhouse mentioned the same thing. So even then, Nick Timmerhouse introduced a little bit of doubt, but at the same time, some analysts were saying, well, he did shoot down March as unlikely, but unlikely does not take it off the table. So I still think bonds are going to rip over the next couple of days. Again, look at it, we're at the same price. Equities aren't there, but bonds, they're still doing their thing. So I'm glad we're only in bonds. I didn't look at gold or anything else there, but at the end of the day, I mean, there is going to be people, depending on the data, that's what you got to be careful with March. I would say March is off of the table now after Powell's comments, but what can happen? Anybody, again, in a world full of crackheads betting on rate cuts, every one of them would be hypersensitive to data. Don't worry, the jobs came down by 0.01. I think he's going to cut in March. But he said he's not going to cut. What is he going to... They didn't care. He's going to cut. It's going to cut. They didn't listen. Until March 2024. Next Fed meeting. Powell just punted. Yeah, so literally any set of data that comes in, they're not going to say it's priced in, but literally your first set, like what's happening on Friday, homeboy? Come on. Friday, you have the non-farm payrolls. So you have the non-farm payrolls on Friday. If those are extremely weak, then those March odds, those mother effers are going to try to bring them back up. But I would say right now, the Fed futures say 60-30. I would say 90-10. In my opinion, I would say there's a 90% chance you don't get a rate cut in March unless there is any economic data that craters. That's the only way. But the first sign of bad data, all of those are going to come back to life. So that's what you got. You said 98.2. All right, maybe. I'm going to go with 10. I like the solid numbers. I'd say 90-10. 90-10. But that's it, man. The whole meeting, again, we had our statement changes. It was neutral bullish, neutral hawkish, depending on how you wanted to look at it. Powell saying he had confidence in the 6 months. That got the market and everybody else running. And then borderline, there was a couple of things in between, but none of them mattered as much. He took March off the table. He did bring March up for quantitative tightening. So I think it's going to calm us down, but in a weird way, I'd say this is kind of neutral hawkish at the end of it, but I think bonds are going to still hold up, and then literally, if anything, maybe stocks come down, bonds come back up there, but that's it. No, it wasn't, dude. The CNBC and Bloomberg guys, their questions barely moved the market. It was the guy right after. I don't know if it was Associated Press or not, but he was the dude he asked the question, and then Powell out of nowhere just was like, yeah, it took him 30 minutes. So it took Powell 30 minutes in for him to say, yeah, we didn't even talk about a rate cut in March. So they did not even discuss a rate cut at all. And again, the market wanted it at 50-50, 60-40 or something like that. But nah, they didn't even discuss it. And then 10, 15 minutes later, we started. The first female question, that was in the beginning where it started to drop. But that wasn't, she kind of like hinted at it, but it wasn't as explicit. But Powell explicitly said, we didn't even have that discussion. Powell literally said March rate cut is unlikely. He said that is not his base case. Right when he said that, it just knocked it down. That's it. Rachel Siegel, I think she was in the middle there. She caused the first drop, but the dagger was right when he took that off of the table. And then again, there is some people who want to argue that it's still on the table, but I would disagree unless there is really bad data that arrives here shortly. So very wild to see right there, but I think that's what summarizes the whole meeting. That's, tomorrow when they wake up, yeah, people are going to talk about some soft landing here and there. They will talk about how Powell has confidence, and everything is just going to push more importance to the data, but all this boils down to now is rate cuts off of the table for March. So now if you really thought they weren't going to raise, you have a lot more evidence from the horse's mouth, Powell saying that this is not there. He didn't talk about the banks at all. So not one mention of banks. So that was an element of bullishness that could have been introduced, but it wasn't. The only thing was quantitative tightening. I think that you got to watch out for over the next couple of days because mother effers might run on that, where literally he did say they are going to talk about quantitative tightening in March. So he did give you a little bit of, it wasn't too specific, but he's saying, hey, by March, we're going to talk about it. But then at March, you're also going to have a summary of economic projections. But now, unless the data between now and March, like jobs data, literally either jobs crater or inflation makes a move, then there's no rate cuts on the table. Unless inflation drops in half by March, or if the job market really does die, then that's it. That's simple as that, man. Simple as that. So it's pretty crazy, man. It's nuts right now, man. That was very nuts. I'm actually quite shocked by all of it. It was shocking, but then again, like everything happened that we talked about prior. You know what I'm saying? It's not like nothing happened too far off, but it was just crazy that he came out. He was like, bro, we have confidence. They're like, why don't you have confidence? He says, well, we have confidence. And then the market was like, whoa. That was literally from the bottom, and then they were saying if jobs go down, he'd be willing to cut, all of that. But then I'm surprised we're not moving lower, but then that quantitative tightening, that saved it. So, but then again, we're not done for the rest of this. You know what I'm saying? Is like tomorrow could have a wicked follow-up, and then Friday. I think the bonds are trading as they should, but I definitely think the little comment on QT that started to put up a sail or throw a parachute out there and at least slow you down, because it was something bullish we were talking about, and he did come in and gave you more details than you had before. Prior to this meeting, there was two things that were unknown. We didn't know when they were going to cut rates, and we didn't know when they were going to be doing quantitative tightening. Now, at the end of it, what do we know? Powell most likely will not be cutting in March. And then now we know that Powell will most likely be discussing quantitative tightening in March. You see what I'm saying? So it's a very wicked concept right there. So we'll see. But any final questions on that? I think we're going to watch how the market plays out, because, Chad, we still have to go over earnings. So I'm going to go through an earnings speed run. I don't know if I'm going to have any of I should have got the previews, but I was listening to Powell, but we are going to have an earnings preview. Is there any questions, though, on what just happened? Any questions on this? Again, be here tomorrow. We'll see you. Shout out all the Raiders, everybody who joined today. Like the video on your way out. But we're going to go over earnings previews if you guys are interested. We've been making a lot of earnings plays, so we're going to go over some previews, see what's priced in, and do all of that. But my goodness. Balance sheet runoff. Yeah, quantitative tightening. So when they're going to stop the quantitative tightening, a.k.a. the Fed stops selling bonds, meaning that the bonds could catch a bid. So we're going to find out what happens there. All right, I'm sending out the stream alert for the earnings previews. But any final questions? That's it. Would you personally hold or sell? I'm going to hold my bond plays, but otherwise, remember, I have both long and short at the same time. So I'm making money on the shorts I was down on, but then I'm losing money on the Russells. So it's going to balance out, but I don't think there's enough to move on. But I do think I'm pretty confident in the bonds moving forward. I think, again, that you have a target to shoot towards in March, and it's not like the 10-year was, the 10-year already got blown out regardless of what the Fed rate hike odds did. I would short the March Fed futures, but now you don't really have that much risk to reward since they're already down to 35. But at this point, you will be surprised what will happen. I'm just telling you now. You're going to have everybody digest this. They're going to take it as hawkish because of the March meeting, but then a lot of people may start out of nowhere talking about what's going to happen with quantitative tightening and all that good stuff. You're saying go long on TLT. I'm down with it for a swing trade in the short run. I think you have 3 days of TLT. Again, look at how the market's reacting. Look at how bonds are still green. That's why I'm confident. Even if it's coming down a little bit, I like it in the short run. But that, depending on how everybody digests this, you got a couple of days, and then TLT may go out the window. So that's the way I'm looking at it. I'm in my bond futures and options. AMD. Yeah, we're going to have Amazon. All right. If bonds go negative, do you change your outlook? No. Because I do think the follow-up, like I'm saying, I'm just going with history on this one. I think the next 3 days, that 3-day window, day of Fed to 2 days after, up until Friday. So pretty much by next week, my whole bond scenario could change by Monday. So, but from now till Monday, I think bonds might be good. They could still lose a little bit just because they're elevated compared to everything else. But for the most part, I do think the short-term bonds are going to get knocked. So that's why I'm saying, like, 10-year to TLT, I think should be good. But then the short terms, they should be a little bit more riskier. They don't have as much of a gap. And you can see they're kind of more near their lows, selling off in between there. Good news, bad. It depends. I don't know. He avoided any questions on strong economy, this or that, but he did, again, I think bad jobs data, market will like, low inflation, market will like, and that's about it for the most part. So that being said, we'll see where the market takes us. It's time for an earnings speed run, ladies and gentlemen. Let's go through. I don't know if I could get the previews up that fast. So let's just see here. I'll try to go one at a time. I won't have screenshots for you. You need any? All of them, but I don't even. We won't have enough time. It'll slow us down. So I got Qualcomm. Revenue is expected 9.51 versus 9.1 to 9.9. They're in the middle. Gross margin 55.9. Operating 33.2. EPS expected to be 237 versus 225 to 245. Company guidance. Next quarter revenue 8.06 billion versus 7.7 to 8.3. EBITDA. Oh no, that's still for QCT, not quarter. And then QTL revenue 1.41 versus 1.3 to 1.51. Revenue next quarter expected to be 9.2. Gross margin 55.5. Operating margin 32. EPS 2.25. Since last quarter, Qualcomm is up 34%. 34.6. S&P 500 is up 15.5. And then XLK is up 20. Near-term options imply 6% move. That might have changed now. After all of this, last 4 quarters, gain of 4, loss of 8, or gain of 6, loss of 8, loss of 6, loss of 1. Revenue has beaten 15 of the last 20 quarters. EPS has beaten 18 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten 10 of the last 20 quarters. Forward quarter EPS has beaten 12 of the last 19. So that is for Qualcomm. Let's see what the options are pricing in. I don't want that one. I want this one. So, Qualcomm looks to be $8. Remember, it said 6. They're at 140. We'll use the 148s. I'm getting 840. So 840. What would that be right now? So right now, off earnings, Qualcomm is expected to move $8.40 either way. So 840 divided by 147.71. That's about 5.6. So it lost about 0.5% of pricing since Powell. So again, 8.4 now. So let's see if there's an outsized response. 8.5. 8.4 times 2, 16.8. 63, 16.8. So 164 to the upside. And then we are getting to the end of the week. Those are 73 cents if you want to get in the money, 52 cents if you want a little bit outside. 16.8. $130, so 131s. 131s are 33 cents. So let's see how those options moved. Again, SPY's still going lower, bonds still hanging out there. Was it 131? Those are clobbered. Oh, they're still up, though. No shit. So these plays, they were like 20 cents. You're still buying them for 32. And then what do we say for the upside? You need 162s. These are more expensive. They already ran up. They both have premium, honestly, both ways. So, I don't know. Maybe we'll come back to that. I like the puts a little bit more. But again, 132 to the downside would be 2 standard. And remember, it's $8 both ways if you want to play 1 standard deviation. So 131 or 162, that would be the wide range for an outsized move. Next earnings on the list, we got Cortana. Let me see. All right. So Corteva revenue expected to be $3.61 billion, EBITDA non-GAAP $313 million, EPS 7 cents. Price history since last close, loss of 5.7. S&P is up 11.6. XLB materials, they're up by 7.0. Near-term options imply a 7.1% move. Last 4 quarters, loss of 8, gain of 1, loss of 5, loss of 4. Revenue has beaten 13 of the last 18 quarters. EPS has beaten 17 of the last 18. So where is it? Corteva. Oh shit, this thing's clapped. No shit. So it's pricing in 8%. That is a high move, and it's already been clapped a couple of times. So let's see. Oh, only February 16th, so you have to price in with time. Pricing in 360. Is that 45? 320. We'll go with, I guess, not 320. But even then, the 360 would make sense with the time. So 3.6 times 2. So again, it's expecting to move $3 both ways, almost 10%. $7.20 either direction. So that'd be like what? Add that to 45.65. 52.85. So the 55s and then 45.65 minus 720. 38.45. So 40s or 55s. Even then, I don't even think these would get you in the money. Interesting. It kind of looks like a slow mover, though. A 55 would be like halfway recovery. It's pricing in a lot. I like kind of how it moves, though. I don't know. It's just pricing in a lot. It may have a big move in store. There's actually surprisingly a lot of option activity. So you could play it for $25 and $10, $35 both ways. There's a high chance of a cuck, though, because of the pricing. All right, we'll come back to that one, too. Next one is Align. Align is just going to be expensive. I know I'm not going to play this one. I think they can move, though. Align, it even has the pin. But maybe if we don't want to play anything else. So Align, they're expecting $932.5 million in revenue versus guidance of $920 to $940. Cases shipped 569. Non-GAAP gross margin 69.3. Non-GAAP operating 22.1 and EPS $2.16. Since last quarter, Align is up 4.2. S&P is up 16.8. XLV down by 10.1. Last 4 quarters, loss of 25, gain of 13, loss of 10, gain of 27. Woo-hoo! Revenue has beaten 15 of the last 20 quarters. EPS has beaten 14 of the last 20 quarters. So this one kind of moves a little crazy there. Again, this one's going to be mad expensive probably. So it's pricing in $30.70. That's more than 10% priced in. So that's literally pricing in more than 10%. So even if it moves 10%, you'll break even if you're lucky on a weekly. Are we still dumping? Low ticker going crazy. Again, bonds are still kind of holding up. So 2 directions would be $60, 61 maybe. So that'd be like what? What is that? 332? 322? I gotta get the damn calculator. So 267 plus 62, 329.66. $200. So that's just one direction. So, and again, and it's pricing in more than 10. So you could even still get clapped off of it. 267. 205. 205's for 70. Let's see. Of course, the puts are always cheaper, man. Surprisingly, it used to be the other way around. I don't know if I get these for 50. I don't think they won't give it to me for 50. Really? Come on, scammers. Why is it 202? Just the wide spread. You won't even get filled on any of these. Like, you could probably get a better deal trying to skim between the money here. Match. We still have those plays. I don't know if they're moving, though. Those TMOs are up, actually. Thermo Fisher, 40 cents to $1 now. You could get 90 on the bid. Yeah, I don't know if that one's going to fill. Somebody got to bite the bullet on that one, so we'll see. I'm down for a put if they give it to me cheap. All right, what's the next one? Wolf Speed. That's a chip. Speaking of speed, how much time? We got 15 minutes left. Okay, so Wolf. Wold. Oh, Wolf. Damn. They've been getting clapped. I thought they were up on the chips. So Wolf Speed revenue $206 million versus guidance of 192 to 222. Non-GAAP gross margin 16.6. Non-GAAP operating margin loss of 78.5. EPS loss of 63 versus loss of 70. Q3 revenue 222.6. Since last quarter, Wolf is up 23%. S&P is up by 17.4. XLK 23.9. Wolf is pricing in 18%. So last 4 quarters, a gain of 22, loss of 17, loss of 20, loss of 6. Revenue has beaten 16 of the last 20 quarters. EPS has beaten consensus 18 of the last 20 quarters. Forward quarter revenue has beaten 7 of 20. Forward quarter EPS has beaten 6 of 20. Oh, where is it? And then SPY's still just hugging the lows here. I don't know. That's pricing in 18%. That may be too much. So even a line is pricing in a lot. That's why I'm not like too in love with that one. But let's see. So Wolf 510. That makes sense over 3. That's crazy, actually. We'll use 510. So 10, 20 both ways. So that'd be $42. 60 cents, and that's a cheaper name. That's kind of expensive. Again, you get a line put for 60 or 70, and then $22, 21 dollar is out. Honestly, the puts are a lot better. Oh yeah, February 9th. You go for like the 24s, the only ones with 25. That one's decent. But yeah, it's priced in a lot, though. 2 standard deviations would have to be like a 30% move. Do you understand? So if you play 2 standard deviations on Wolf, unless that shit moves 30%, you're not making any money. All right, Aflac. Do we need Aflac? Insurance companies have done good. Let me just see how their chart looks. They're up there. They've kind of been going off everything else. Again, we might need to skip a couple. Does anybody want any of these? Avalon Bay, Century. Isn't Century CCS? That's a REIT. NXT, MetLife maybe. And then the home plays. I like Pulte more, but that didn't move. No, we're going to get into tomorrow morning real quick. MetLife. I don't know. MetLife maybe. Honeywell, that's tomorrow morning, right? We got 2 more minutes till 10-minute rigged. Let's see, MetLife. Let me just see how they moved. Oh, no, I don't even have that preview. All right, we'll skip it. So let's get into tomorrow morning now. We need what? Altria and Honeywell. I think those are the 2 important ones. I'm down, and then we'll wrap it up there. Altria and Honeywell. Is Merck in the morning? So Altria expecting revenue net of excise tax $5.06 billion, operating income $2.93, EPS $1.18. Since last quarter, October 25th, they're down 5.3. S&P's up 17.7, and Staples are up 7.5. Near-term options imply 2.8% move. Last 4 quarters, loss of 8, loss of 1, gain of 1, gain of 6. Revenue has beaten 8 of the last 20 quarters. EPS has beaten 11 of the last 20 quarters with 4 in line. So Altria doesn't really move. Last couple quarters, pretty much last quarter and then a year ago, it had outsized moves. They are near their lows, though. I feel like this one might be like Pfizer. Oh, wait, where are the aligns? I don't think it filled me on those. So MO pricing in $1.23. Yeah, that's about right. $1.23, so what? $2.50, $2.48, $2.50. So $42.60 to the upside. 10 cents for that's kind of expensive for considering. And then $2.50 to the downside would be like what? 37 and a half, 8 cents. Kind of expensive for the price of the stock. Let's just see the premiums, because these might just die tomorrow and then we could pick them up post. Yeah, these are already expensive. Honestly, though, I think we might just get these cheaper. Yeah, all right, let's do Honeywell. $10-minute rigged. Let's see. You've been selling off straight, though. Again, Bond's still holding, but SPY not been involved in any of this. Yeah, Honeywell kind of looks interesting. Okay, Honeywell is expecting $9.7 billion versus guidance of $9.6 to $9.9. Segment profit $2.28 billion. EPS $2.59 versus guidance of $2.53 to $2.6. And then segment operating margin 23.4 versus guidance of 22.9 to 23.2. So analysts have more faith in their margins since last quarter, October 25th. Honeywell is up by 7.2 to the sell side market on close. That could be some of that pension stuff or some rebalance stuff we heard this morning. And then Honeywell's up 14%, S&P up 17, and then XLI is up 16.8. Last 4 quarters, loss of 1, loss of 6, gain of 4, break even. Revenue has beaten 10 of the last 20 quarters. EPS has beaten 20 of the last 20. Forward quarter EPS has beaten 7 of the last 17 with 1 in line. Honeywell. Let's see. So pricing $6.48. That's about right. No, I'm getting 7. I say $7. So $14 either way. So $216.50. 45 cents. That's not too bad for a $200 stock. And then 14 would be like what? 186, 188, $30. That's not bad both ways. 187.5 for 30, and then 217 for 25. Honeywell doesn't really move though, yeah. Again, it had, I mean, in the last year, its biggest move was a decline of 6 and then a gain of 4. It kind of mad Procter & Gamble vibes. But yeah, it doesn't really go too crazy. That one's a cheaper one. Other than that, I don't think, then we might not play anything. Could be a good break. Oh, why do I have still that? Let me check. I know you guys want Peloton, but Peloton's going to price in a lot. It's cheaper. I already know how that one's going to play out. You said there's Merck? Yeah, Merck might be the last one. And then Cardinal Health. I forgot. Homeboy said Cardinal Health. Didn't they move a lot last time? We're running out of time, though. We only have 7 minutes. Yeah, Cardinal Health's actually been ripping. And then Merck as well. These are all at highs, so let's double check these real quick. Cardinal expecting 57 billion. Last close or last quarter up 15.9, SPY 14.1, XLV 11.3. Options imply 4.2. Last quarter gain of 7, loss of 3, loss of 1, gain of 1. They beat in 16 of the last 20 quarters and 15 of the last 20 on EPS. Market on close was 7.2 billion of the sell side. Mm-mm. 4.6, is that about right? 109.15. 370. Yeah, we'll do this $4. So $8 either way. So 117.55, and then 101.50. 35. Cardinal's not too bad. It's moved around a lot. That's the only thing I like about it. If it fails, that one could either keep the momentum up or they could kill it. I'm kind of down for Cardinal. We'll get one in here. What do we say? 118? Damn, I top ticked that. And then what's the other one? 101. We'll spend $60. So 32. I grabbed a 101 put and then the 118 for 35. 118 call, 101 put. Oh shit, you guys might have to land this later. We may not be landing today, baby. Yeah, no landing today, sir. No landing today. We still got one more. Let me get through Merck. One more, baby. Packed schedule today. Packed schedule. Ironic. So they're expecting revenue $14.4 billion on Merck. Last quarter, they're up 17. SPY up 17. XLV up 10.9. They don't really move too much. Pricing in 2.7. Last 4 quarters, gain of 2, loss of 1, gain of 2, loss of 3. Revenue is beaten 17 of the last 20. EPS 16 of the last 20. Again, they're at all-time highs, though, too. They kind of have momentum, but they're not really a big mover. It's kind of like Honeywell. So $3.01. 121, 138, 230, $3. We'll do $3. So $6 either direction. 126.27. So 38 cents. It's a $100 stock. Then $6 to the downside is like what, 115, 23. You can play it both ways. If they surprise on anything, they have had some quarters there. So that's it. I think we might go with Cardinal. Let me check one more. That's it. I think we're done. I want to see, go back to the aligns. So we only spent $50 today on any of these. Where is it? We got 3 minutes. Still got a little bit of time. Which ones were the ones we were looking at? These were the ones, the 205s? Or the calls at? You know what? Maybe we'll have better luck on these. Oh, no. What do we say? $60 be like $320. Calls are mad insane. That makes no sense. All these calls are juiced. Yeah, man. I want the aligns, but it's not going to go in. So we'll cancel that. Tough luck. All right, we're just playing Cardinal for tomorrow. That's it, man. That's it. Mm-hmm. All right, ladies and gentlemen. Hope you're having a wonderful day as we make this final approach. We're a little behind schedule, but as we make the rounds, if you guys are holding on to any bags, please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That'll be your nightly Watchlist and main channel layover around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. That's all we have here for today. We got to go in a little quick, and please make sure you cover your ears because it's going to get extremely loud. Have a wonderful evening, and thank you for flying with the Colt because you have 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Shares, options, futures, whatever you're holding, you better wrap it up now. Tomorrow morning, the digestion of Powell. A couple of economic names in the morning. Let everybody do their thing, but you got to make up your mind. Make up your decision. You have less than 10 seconds remaining, and then we got a couple of earnings after the bell. Qualcomm and a few other ones, baby. Qualcomm and a few other ones. You know what I'm talking about, but that's it. Ding 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 ding. Horna, let's go, baby. Oh, Chatadonia. We did it. We made it. We did it. We made it. Are you kidding me? Oh, yeah, you got a different GG. I need the GGs in the chat. There's Qualcomm. Qualcomm's already coming out. Oh, they're popping. A little popping locker up 3% already. Hold on. What do we got? Oh, Qualcomm. The numbers are already out, baby. Hold on. You got revenue. Hold on. No. Pause it. Revenue, 275. Estimate, 236. Revenue, 9.92. Estimate, 954. They see adjusted 8.9 to 9.7. Estimate was 9.3. See adjusted EPS, 220 to 240. Estimate was 226. So they beat. It seems like they beat and guided up. I think Wall Street needed one of those. It's been a while since any of these earnings took off, so they may be able to kind of get some of the juice that everybody else missed out on because it looks like that's finally a guide up by a bigger range. So they raised their guidance there. Align. Oh, did Align already make a move? Did I miss out on my put? Oh, it went up. I would have only wanted the put. Remember, Align is pricing in like 15 or 17% or something. So Align already had a very, very hard one. So we'll see. If that Qualcomm, that's good. I hope it hits for you, man. Because that one, I don't know, it's supposed to move $8, I think, was one direction. But that's your first chip maker in 24 hours who actually beat and then guided up. So, my goodness. We'll see if that holds. But then Align is up 13, so you got to go another like 20 more dollars. Remember, $60. Align might do it, though. Hold on, it's at 40. So if it could get another 5%, you'll start to break out a little bit. Align Technology, net revenue 956, estimate 933, adjusted EPS 242, estimate 218. See next quarter revenue 960 to 980. So their low end is on the highest point and they raised it. So yeah, they beat and guided up. That's another set of guiding up. They're there. They're close. The $30 was what priced in. You need $60 or $62. That's what will take you to the upside on Align. Microsoft price slipping because Qualcomm did good. Or again, even watch AMD. Qualcomm actually beat and guided up. So they're up 3. They're at they're right below 1 standard deviation right now. Remember, like we said, $6. You double that up, you need like $12 if you want to get a good one there. So we'll see. Is there anybody else after hours? There's a letter to the people. Aflac and Wolf. I think Wolf Speed and then maybe Corteva. Again, those would be the other ones. The line's killing it, though. It's close to it. It's close. Corteva comes out, and then Wolf. Oh, I'm sorry. Wolf. Non-farms are Friday, unless today's Thursday. Today's Wednesday. So you got one more day to burn. We're going to get tomorrow, Altria, Honeywell, Merck, and Cardinal Health in the morning. But then it's going to really be 1 day to burn, 1 day to digest what's going on with your boy Powell and how everybody wants to take that March rate cut off the table. And then you're going to get the non-farms Friday morning. UNFI, they had earnings. United, yeah, they were getting clapped earlier. Qualcomm's still running about $2 or $1 away now. Now you're at 1 standard deviation, so there it is. Qualcomm, anything above, you start encroaching into 2 standard deviation territory. Who's the other one? Align wants it, man. $15 more. Still, you're above 1 standard deviation barely. What's the other one? Wolf and Corteva. So again, Align's ripping. We'll keep those up until Wolf and Corteva come out. But Chattadonia, that's the day, man. For real, there's a lot of you still in here. Just before anything, we've been focused, man. I just want to say thank you to all of you who came out today, especially if you participated, showed love and respect to the Chad, had good questions, were a part of all of it, man. For real, thank you for your time. I hope I made the most of it. I hope I was able to give you info, keep you updated, get you stuff to think about. But if you held it down today, for real, thank you. Big shout out to the members. We do all of it free 99. So the people showing love when they don't have to, supporting the channel when they don't have to, man. Signing up for the stream alerts. Maybe you just don't pay attention, but either way, for real, it means a lot. Thank you to the support, and even without a member badge, anything, man, we do it for the people, so nothing hits like people really taking advantage of it, making the most of it, and just being a part of it. You know what I'm saying? So for real, thank you all for your time. I hope you enjoyed it. If you liked the video, if you made sure you're subscribed to, man, I really appreciate it. So God bless you, and thank you, my friends. I hope you had a wonderful day, but God bless the Colt, man. That's it. I think that's our day here. We got to go. There's Wolf now. Oh, did Wolf hit? Wolf was $4, I think, right? Or no, it had to go to like 28. So Wolf is down by 10. There's Wolf speed. Let's see what we got. Again, Qualcomm is just above 1 standard deviation. Wolf loss of $144 million. Revenue was $208. Adjusted loss 55 cents a share. Adjusted a loss of 55, and then net loss was $144, and then revenue $208.4. Operating loss $1 per share. I think they missed. Aflac EPS 125. They came in at 145. AFL, are they moving? They're not really moving at all. And then what's the other one? Corteva. That one's the last one that can move. And, bro, how about that TLT making the damn move after hours? Are you kidding me? Yeah, I don't have the easy numbers on Wolf either. I think they missed. It just doesn't look good. It's silicone carbonide, remember? Just like ON. So, honestly, those companies have been getting clapped lately. Yeah, TLT is going nuts. The idea was there, Habibi, I tell you. That's the only play I like today. I hope we get discount on gold. So we'll see. Oh, a line is climbing. A line is $10 shy of 2 standard deviations. That one might hit. Yeah, the bond's good. I hope so, man. If that goes up, that'll be pretty. But again, I mean, look at that. That's a lot of people pumping it after hours, just getting in. That's probably the end of the day. Pension plays and everything else people were talking about. Not too bad, bro. Go look up our tutorial. It's how we turn $600 into $7,000. It's been a strategy we've been doing for like the last month now. So get up to date. We're going to do more tomorrow. There's a lot bigger earnings tomorrow, and we're going to have a lot of time since it's not going to be Powell and other things, but definitely take a look at it. What's the other one? Corteva. I think Align might hit, dude. That one's to the upside. And then where's Quali World? Quali World's right at 1 standard deviation. TLT, new high as after. It could be, again, there's a huge market on close, and then a lot of people were dumping like on the market on close, but that could be affecting the bonds. But like I said, man, I was just playing history on the bonds, man. Usually it likes it days after the Fed, so we'll see, especially if, again, QT's on the table for March, no rate cut, but bonds already paid for the sell-off. How many of you were asking, think about it, the market priced out rate cuts. Markets didn't sell off, but the 10-year did. So I don't know. I think there's a nice balance, and now we could talk. Dude, more volume came in today on TLT. What the hell? I'm down. I guess since it's a Fed day, but that's pretty surprising. Is TLT ex divvy tomorrow? That could make sense too. No, that's 12:14. You already passed ex divvy on TLT. Yeah, Align wants it. And then Corteva's the only one we're waiting for. Otherwise, I think Qualcomm was a great beat. I'm surprised out of, the other chip makers yesterday, they didn't really do good, and they got decked. But then again, Qualcomm actually guided up and beat by a pretty good margin. You got filled on 150 shares of Wolf at 50. Did you do a market order, or did you do it after hours? Or did you have an option to get assigned? That would be the only thing I could think of. Did you sell a put or sell a call? Is Aflac dying? I thought it wasn't moving. Oh, that would have been a hit. Aflac don't move, man. So I don't think they were pricing in that much. Was it at 82? Yeah, these were 30 cents now, 50. I think 81 was the price. Yeah, those would have hit. Half clap. There's Qualcomm again. Like I said, I think that was a good earnings. I'm surprised it's not getting rewarded, especially when nobody wanted to reward the other ones. So Qualcomm's right above 1 standard deviation. I don't know. Did Corteva have earnings? That's the last. That one kind of caught my eye. Otherwise, we only made 1 earnings play for tomorrow. And then again, Thermo Fisher hit. I don't know if you guys saw that. TMO, that shit closed at 110 on the bid, 150 on the ask. So it's what, just above 100% there? Close to 200? Wolfspeed. Wolfspeed kind of a cuck. Remember, that was pricing in a lot. You got sold at 140 on TMO? No shit. Really? I don't even see a 140 on there. That's crazy. That's dope if you did. TMO just has time, but I guess if it did do another $28, you'll be close to being in the money. If it bounces, though, we're screwed. Hopefully we get a 2-day sell-off. Wolfspeed, I don't know about the long term, no. I don't really know about them. I know they have that silicone carbonide. There it is. All right, you might get 2 standards on that. You need $12. You're almost $9 gain on Qualcomm. It filled at 140. I see the highest trade at 116, but sometimes that happens. So sometimes, like, I've been filled higher than what the chart even shows. So it's possible. Align. It's right at 2 standard deviations. Or just it's a little bit below it. In the monies will give you a nice gain, but other than that, that's it. All right, I don't think Corteva might call it a day. Chattadonia, thank you again for being here. I hope you enjoyed it, but that's the day, man. Go read the books, Richest Man in Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And honestly, I might do a live watch list tonight. I don't know how y'all feel about live watch list. I got a couple of things here, so we might get caught up a little bit. Unless, I don't know. Well, we'll see. Maybe watch list, live watch list, a normal one. We'll find out. Otherwise, either way, Chad, that's it. I'll give you a song to jam out. You got a new track on the way. It's already out. You could go listen to it now. Spotify, on YouTube, Apple Music, wherever you have music, bro. It's Paul Freestyle. It's out. It's out, baby. It's out.
A letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. I ain't gotta see it to believe it. If it's signed and then it's deeded, then my eyes don't need a reason. I won't even try to explain it unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you're willing to wilt away. We was never willing to be the same. We want it all in the long run, they want it all today. My father is really awesome, don't bother with giving snakes. Regardless, I can't control it, so either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
Run it back. It just came out. I'm running it back. One more. The whole idea get another warfare is not what you think. Let's go, baby. Game time. Spiritual warfare is much more subtle and it's much more tricky.
It's a call, baby. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. I ain't gotta see it to believe it. If it's signed and then it's deeded, then my eyes don't need a reason. I won't even try to explain it unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you're willing to wilt away. We was never willing to be the same. We want it all in the long run, they want it all today. My father is really awesome, don't bother with giving snakes. Regardless, I can't control it, so either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a call.
Yeah, it's called Paul. Uncle Answers. Paul Freestyle, baby. That's it, man. Enjoy it. Have a wonderful day, man. That's it, man. I got a PHILO for you. You're gonna wait till tomorrow. We got too many earnings. Man. I got a good PHILO, bro. I got a good PHILO for you. You know what I'm saying? So thank you, man. Thank you for being here, man. Everybody else, bro. Even shout out to the raid, bro. That was awesome. Shout out to everybody in the game, bro. I think tomorrow's going to be another interesting one with the digestion. But that's it, man. We made it to the end. So I told you, go read the books. You know you got co-real estate today too, man. So I don't know, man. We even had to talk the other day because, you know, somebody was surprised. They were like, yo, I want to get in real. They found out that I will pay for your real estate. If you really are telling me you are getting held back and there is nothing, like you can't afford it, but you want to start it, you want a career, you need to get some money to get up that option savings account, the long-term savings, seriously, I got you. You got to pay me back if you don't do anything with it. If you do something with it, you'll pay it forward. But it's simple. Don't ask me for that tomorrow and not show up to the co-real estate tonight. That's all. It's in 30 minutes now, 40 minutes. They're going to be there, Tyler and Trey. They'll run you through the process. If you're really about it, man, nothing will stop you. But that is in 45 minutes. So run it up, baby. Let's have a good one. I will see you on the watch list. Drink that water. Stay hydrated and healthy. All the good stuff. But Chattadonia, don't forget why we're here. Why we keep going. Why that faith, hope, and love ain't never going out of style. And why the faith above all else. You got to make sure you fight everything else. You got to fight everything else and keep the faith, baby. It'll keep you alive and don't wilt away, baby. Go look for better days. Why, baby? Why? Finger to the sky, baby. To God be the glory and through the grace of God alone. Amen. Amen. So Chattadonia, that's it, man. That's it. The tutorial, go on YouTube, search Ghetto Standard Deviation, the Trading Fraternity. You'll find it. That's it. Or go to the Trading Fraternity. That's the channel. You'll find it, baby. But that's the day. Second link will take you there. Hold on. Do I have it up, man? I'll just show you real quick. You got to be an explorer. Go look at second link. It'll take you there. That's it. Go look. First link will get you free long-term alerts. You could get free long-term alerts. You want the paid alerts. I don't know. All right, ladies and gentlemen. The Trading Fraternity. It'll be right there waiting for you. Right there. Where is it? Yeah, right there. How I turned 600 into 7,000 with options. A ghetto stand. I say it's right there. It's waiting for. It's a beautiful one. It's a beautiful one. Trust me. But I love you all, man. That's the day. All right. So I'll see you, man. Enjoy it. And I don't know, either live watch list or not. We got to figure it out. But either way, God willing, I'll see you in the morning, baby. And peace out. Yeah, hey, it was a good day today, Saturday. Thanks to the stock guy. He did a raid today. And thanks to everybody who participated. Maybe you participated in the border to Chattadonia. You did good. Anyway, all right, I'm leaving. Have a wonderful day. Bye. Exactly. Now, Joshua. I still have not, does the TikTok need the Wi-Fi? Okay, we've established that. But how do I use TikTok if I have a digital clock? Does it still tick and talk? I don't understand. Are you letting children, if a child can use a clock, how come they can't use the TikTok? Why would you name it after something children use? Are you targeting the kids? Exactly, it's a little weird. Now, does the same TikTok... Does the talk still tick the same in China as it does in the United States? Or does Peter Pan get a different one? It makes no damn sense. Exactly. Have a wonderful evening. I reclaim my time. Goodbye.